wrong notion that's going on that the growth is the slowest in 5 quarters. That is a mistaken way of looking at it, because GDP is not the best indicator in this specific instance. And I'll tell you why. It is getting distorted by subsidies. What the NSO actually calculates is the GVA, the gross value add done by all segments of the economy. To the GVA, the NSO adds taxes and subtracts subsidies. Now, 2 years ago, FY23 subsidies was very high. And when that got subtracted, the FY23 GDP went down. FY24, the subsidies were reduced. So that much subsidies was not subtracted. So the number looked very big in FY24. FY25, everything is normal. So compared to FY24, the GDP number looks smaller, but it's only a base effect. So let us concentrate on GVA, because there all this subsidy distortion doesn't come. If you look at the GVA number, it is 6.8%, actually higher than the 6.7, which the GDP number is. So GVA is 6.8, good number, compared to actually 6.3 in the 4th quarter of last year, that is Jan, Feb, March. So if anything, the economy is growing at a faster clip. So nothing to worry over there. In fact, in the internals, I would say that there are a lot of positive. The main one being the recovery of private consumption. Private consumption, if you took an average of all the last 4 quarters of FY24, then it was only growing at 4%, which was a worry. You know, when GDP is growing at 7 to 8%, consumption growing at 4% was a worry. Rural consumption was a big worry. This time, the 1st quarter, it is 7.5%. So clear rural recovery seems to be reflected in the number. And the other one is capital formation, what you call gross fixed capital formation, GFCF. That was doing very well. But there was a worry that in this month, April, May, June, it may fall because the government capex was very low. If you looked at the fiscal numbers, the government capex was 35% lower than a year ago. So we were all prepared for a bad number. Actually turned out good, 7.5, which means what? Probably private capex has picked up. So both those indications are positive. There is also another entry called public administration, defense and other services. Even over there, public administration, government would have been bad. But it is the other services, education and health, which probably have done well. That number is also grown by 9.5%, which must indicate that private sector services have done well. So what's negative? The negative, according to me, is 2 things. Agriculture is a very, employment intensive, and next to it is something you call trade, hotels, transport, communication and broadcasting. That's a fairly heavy informal sector. All the restaurants and Udupi hotels are in that category. That's grown by only 5.7%. So 2 employment heavy sectors, agri growing by only 2%, is a bit of a worry, which means this K-shaped recovery seems to be, persisting. But the important takeaway would be that the growth is robust, only it is not as good as the 7% plus which the Reserve Bank is forecasting. Reserve Bank is forecasting 7.2 for the full year. It is more likely it will be 7% minus by the time the end of the year if these trends persist.
Interesting. Thanks a lot, Lata, for that breakdown of the GDP numbers that came in on Friday. Now, the broad momentum of the economy remains intact, and that's the word coming in from the Chief Economic Advisor, V. Anantha Nageswaran. He spoke at the CNBC-TV18 Banking Transformation Summit and also said that the slowdown in the 1st quarter growth was anticipated due to slower capex and the lack of government spending due to the elections. Listen in.
I think the broad momentum of the economy remains very intact, and I think we do expect that with the monsoon having been good so far, hopefully it doesn't turn out to be too much of a good thing. I think we can look forward to gradual improvement in the GDP prints in the coming quarters.
The Chief Economic Advisor also said that the Indian banking system needs to tailor approaches to the Indian context. Now, he added that the moderation in terms of growth and credit culture will stand India in good stead. Listen in.
I think the Indian banking system as a whole, that includes the industry participants, the regulators, etc., need to tailor their approaches to the Indian context. We need to be aware that some of the principles and practices we import from overseas may not necessarily suit the context of a developing country where many small and medium enterprises still do lack access to finance. I think one important behavioral aspect that the industry has to keep in mind is moderation in terms of growth and in terms of credit culture will stand India in good stead, and also ensuring that whatever we do, we tailor it to the Indian context and the fact that we are a low-income aspirational country wanting to become a middle-income status. We need to sustain our growth rates, whether it is economic growth or credit growth. So whatever that needs to be done to sustain them, and that includes delayed gratification on the part of the banking industry and the non-banking industry, those would be my ideas or priorities for the banking industry for the medium term.
The Chief Economic Advisor there. Now, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil prices continue to drop. What are you picking up this morning?
Oh, well, absolutely. The month of August has seen a decline yet again for the crude oil prices, the second straight month, by the way. The prices did decline 1.5% on Friday. So for the month of September, as with the first day today, we've seen a bit of a chip-chop movement coming in here. Well, markets will watch out for the fact that the 8 OPEC and allied companies will now start increasing supplies from the month of October, and this is by 180,000 barrels per day. So this is the statement that would come in this week itself from OPEC and allies from their meeting is what is going to be of importance. The other thing is that the China manufacturing activity has continued to decline. It has sunk to a 6-month lows in the month of August, continues to weigh onto the market. It is all also going to be about the US Fed rate cut, where there is now a higher possibility of a 25 basis point rate cut rather than a 50, and that really seems to be letting markets adjust to this new expectation. Not just crude oil prices, we've seen decline come in for gold and silver as well. For the last week, it has been on a negative note. For the month of August, of course, gold and silver both have been on the positive side. The markets are looking at not just the traditional ways of buying gold, but the technology and the solar industry demand for silver and gold also has been on the positive side. When it comes to the metal space, well, August has been on a positive note. We've seen copper prices gain up by 2%. Aluminum, zinc, steel are up anywhere between 8 to 12% for the month of August. And with that, we've turned positive for the year 2024 as well. But as the month of September starts, I think all eyes are going to be on the US Fed, the rate cut, the guidance forward. And until then, no large positions are expected to be created in many of these industrial commodities.
Manisha, thanks a lot for that update. We'll keep an eye out on all of these commodity cues as well. Time for a short break. Up next, the market regulator SEBI has revised thresholds for stocks entering and exiting the F&O segment. We get you all the details on the other side. Stay tuned.
Bulls will be hoping that history doesn't repeat itself, because in the last 12 sessions, the Nifty has ended well in the green, which is great news, right? When was the last time that we had a 12-session winning streak? It was all the way back in November 1993. You know, the markets went up by around 139 points on a base of around 800. And that's why the gains are around 17%. The last time around, we saw 12 straight sessions that we did have gains. This time around, because of the larger base, it's at around 4.5% odd. But I'll tell you what, that's a long time away. So let's figure out, when did we at least see a 11-session winning streak? Well, that was a long time away. In fact, it was in 2007 itself. And at that point of time, we had a good run. You know, the markets were up by around 700 points approximately in 11 straight sessions. 3 months later, we were even higher. So after jumping up close to 16%, we built on another 18%. But from then on, you know, things actually went southward. So post that 11-session winning streak, 6 months down the line, we had corrected by 8.5% from there. And 1 year down the line, we corrected close to around 27%. So it's been a good run, 12th session winning streak. The bulls are feeling good, but they are hoping that history doesn't repeat itself, because when we last had 11th session winning streak, well, a year down the line, things didn't look very, very good.
Welcome back. Now moving on to some important updates on the global front. Now massive protests swept over Israel after the death of 6 hostages in Gaza. Now this comes as frustration mounts over the country's leaders to secure a ceasefire deal and free Israeli captives. Officials estimate that at least a third of the remaining 101 Israeli hostages have also died. Now Israeli Prime Minister Benjamin Netanyahu has said that Israel would not rest until it catches those responsible for the killing of 6 hostages. Meanwhile, Israel continues to strike Palestinians in Gaza. The Palestinian health officials confirmed that nearly 50 people were killed in the latest attacks on Gaza. That's all we have on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, kicking off the month of September, kicking off a new week, and of course kicking off a fresh trading session after what has been a pretty good run for the Nifty and for the broader markets as well. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning, Nigel and Prashant. Prashant, don't forget, we're getting a big birthday treat this month. just putting it out there in the universe. So yes, it's a new month and a special one for Nigel D'Souza.
Absolutely. Nigel and family, actually, both my kids are September as well. So for me,
True.
September is special. But what's even more special is the way the markets have been moving up. We've never seen this before.
Yeah.
Can we make it 13 out of 13? That's due today.
I don't know if 13 is a good day to stand on, right?
12 straight days of gain. Then you hit the lucky or unlucky number 13. So let's see what
Somehow
happens.
if you could skip to 14. Right? But well, we'll see, because it's been pretty good, right? 12 days in a row, the market's been looking at gains and quite incredible. Measured small. It's not as if all of these 12 trading sessions have been in the magnitude of 100, 200 points in the Nifty. Some have been 30 points, 40 points, actually a majority of them, and sometimes they pick up pace. I mean, the index has picked up pace. But in any case, it's a good way to come into this fresh week. The graphics will come up on your screen. US equities higher on Friday. You have the S&P 500, which was up about 1%. The Nasdaq was up about 1.25% or so. So once again, I mean, the handoff from Wall Street is in the green. Dollar index that continued its bounce. It started in the middle of last week when it sort of, threatened to go into double digits. And from there, it's come up to about 101.73. I think the low was about 100.6. We're at about 101.73. The PCE, the core PCE inflation out of the US that came in line with expectations. Not very much no shockers really. This week's job data, the monthly jobs data, will essentially be the big one, the important one, in terms of how markets trade into the September FOMC. The sort of basic kind of point or the expectation is that we will get at least, there is enough on the table to get at least 25 basis point in terms of rate cut. Will we get more, though, is the only question. Some believe that they could actually kick off with not a 25, but a 50, but a 25 perhaps is on the table. Oil prices, they continue their bounce. They continue to bounce around, and they're now around $76.3 dollars a barrel. Again, very, very fast, very quickly. The bounce took us to above 80, and we are down to below 77 now. So which kind of gets us to where we are in terms of Nifty levels. Not very different. We are moving up. Nifty is holding above the 20-hourly average, and the up move seems to be extended and extending. On the way up, the daily upper Bollinger Band stands at about 25,359. It's a level we've put out in the past as well. But we've gotten up to these levels in a very, very fast way. Next target for the Nifty is 25,530. This is the 38.2% retracement of the last decline. It's a Fibonacci retracement number of 25,530. I think eventually we are headed here. I mean, at this pace, it eventually is not very far out. Now, supports come in at the 40-hourly, which is 25,056 for the Nifty. And that's about 200 points away from where we left off on Friday. The only question is that will the intermarket divergence between the Nifty, strong Nifty, and the weak Bank Nifty converge? Because the weakness in the Nifty Bank can't continue forever. And will the Bank Nifty sort of join the party as well? So that's the point. Now, Bank Nifty on Friday, it almost touched the 50% retracement of the fall, which is 51,508. Almost, but not quite. So that remains the first sort of target for the Nifty Bank. And then beyond that, you're looking at the 61.8% retracement, which is 51,943. These are very sort of near-term immediate levels that we're looking at on the Nifty Bank. Supports here come in at the hourly averages, which is 59.43 and 50,622 or so. It's nothing to really complain about, except for the fact that maybe the market sort of gone up in a straight line for, as we've been discussing, 12 days in a row. It's not as if it can't be 13, 14, 15. Markets are markets. But we're also entering a period, especially for global markets, US markets as well, where September is a high volatility month. September and October. And of course, going into the US elections, there is a fair bit which is lined up. Here, I mean, what is the track record for the Nifty? It is absolutely September for the last 10 years at least, and I looked at the data from 2014 till about 2023, the last year. I mean, I think we're down about 0.6, 0.7% or so. I mean, is that powerful, strong seasonality? Not really. I would look at the global aspect more, which kind of signifies that historically September has induced a little bit of volatility and up and down as well. So GIFT Nifty indicating an absolutely flat start. I mean, you wouldn't know looking at it that the markets are trading today. Surabhi.
Hi, Prashant. I was looking at a note that Wells Fargo put out. They look back at the last 6, I think, US presidential elections. And the analysis is the same, that there is some underperformance as you run into the event every single time. So perhaps we sort of enter that phase again. But hey, I want to start with optimistic stuff. So the fact is that India has actually underperformed in the last 1 month gone by. Whether the little bit of a residual catch-up trade will continue and help the Nifty or not, that's the question that we put up. Because in the last 1 month, the S&P 500 is up about 4%, the Dow is up about 3%, Nasdaq also about 3%. But look at some of the Asian markets. Look at what the Nikkei has done. It's back above 39,000, 7.5% of the Nikkei. The Hang Seng has done well, 6%. Nifty is up only 2%. The other index, the major market that's underperformed even us, is actually mainland China, the Shanghai Composite. So let's see, 2% contrasting with 6-7% in some of the regional markets. So will we do more? That's the question. Let's come to the macros, because there's a lot of macro news to digest straight away. Starting with the core industries data, the 8 core industries data that came out. So growth is at 6.1% versus 5.5%. And if you look at the month-on-month trends, then steel is very strong, cement is very strong, 5.5% up on cement versus 1.9%. Obviously, sequential impact playing out with the monsoons now pretty much sort of winding down. Electricity is also very strong. But GDP numbers, let's come there. So the GDP number is at 6.7%. The weakness is very much expected because we were in the election phase and the government spending was cooling off a little bit. The poll was 6.8. The number came in at 6.7. It's obviously a lot lower than last year's 8.2, also lower than last quarter, about 4-5 quarters of the weakest number that we've seen over the past 4 quarters. But within this, the strong parts are manufacturing, electricity and construction. Financial services, real estate are actually slightly weak. But the one number that perhaps, holds a lot of promise for the consumer space is private final consumption. That number is at 7.5% versus just about 5.5% year on year. So big growth, even sequentially, there's a big growth coming in. More macro numbers, GST, no problems there. The numbers are very, very steady on GST. Collections are up about 10%, 1.74 lakh crores is what we have. It's a little lower than the previous month's number, which was close to 1.8, but year on year there's a steady clip. Auto sales, the micro numbers that help us figure out what's really happening with the economy, and here trends are very mixed. Two-wheeler names continue to chug along, and TVS has done extremely well, by the way. TVS 13% year on year growth, 11% month on month growth. Hero Motor is kind of steady. Eicher is a bit muted. On the passenger vehicle side, things are quite interesting. Tata Motors is weak. For Maruti, it is actually SUVs which have saved the day. SUVs have shown 7% growth. Compact car sales have declined very, very sharply. We'll tell you more about this as we go along. CVs are still weak, and that's something to keep in mind. There's no improvement in CV sales, either for Tata Motors or for Eicher CV. Coming to now the fund flows, we've got FIIs buying about 5,300 crores in equities. Domestic institutions selling about 3,200 crores in equities. But again, it's a lot of block trades, so need to watch this. Last but not the least, of course, so we'll hear more from our colleagues, and Nigel will tell us more, because this F&O criteria of including or excluding stocks in the market, that also came out over the weekend. I don't think too much change from the earlier draft, Nigel?
Well, there are some changes actually, Surabhi. But guys, when was the last time we had a 12-session winning streak?
It was, I think, some 3 decades ago, is it? I don't know.
It was in 1993, so that's the last time we had 12, and we've never had 13 on a row. So that's the big task this morning, right? Can the Nifty get 13 times lucky? That's going to be important today. If we can end in the green today, it'll be the 13th straight session that we end in the green. And overnight, there's not going to be any shocker, because the US markets, well, they are shut because they have a public holiday. So those are the big, couple of data points with regard to the domestic and the global queue. What about positioning in the index futures? The FIs, they were net long. they've added some long positions. So, start of the series, they were long, they've added some long positions. Clients, they were short, they've added some short positions as well. So both of them, they are now positioned at opposite ends of the spectrum. Just want to note that normally the clients have been getting it right. So let's see how this goes. For the time being, they're at opposite ends. What about the FI positioning in percentage terms? Well, they are at around 72% on the long side, which is the highest you've seen in multiple weeks. So that's about the FI positioning. Let's get you a couple of FNO cues then. The Nifty Bank, it did fairly okay, in Friday's trading session. And there was about a short covering that we saw because the open interest was lower by around 1.5%. The PCR, that's moved to around 1.4. Remember, normally at around 1.5, 1.6, that's the upper end of the band. So the put writing is getting a little bit too easy. It's moving to the up end of the band. Normally at around 1.5 odd, we see some kind of a pullback. So just keep that data point in mind. Let's pull up the options data. Two strikes, very, very active. The 25,250 put, well, that's the one you should be tracking. Fair bit of open interest build up. And the 25,300 calls. So some writing is what we're seeing with the premium at around 120 rupees. Which brings us to the levels. Now, on the upside, we can go to any level, the way the Nifty has been moving. So I'm more concerned about the support levels. The first support going by the options data is at this 25,100. So that's the support particularly for today. So that's important. The next support I'm looking at is 24,850 because on the way up, we made a bit of a meal at these levels. So that's going to be important support. And finally, the 20 DMA line in the sand. Till we hold on to this, you'll have to say the uptrend is pretty much well and truly on. The Nifty Bank, well, it did well in Friday's trading session, but it's unable to hold at higher levels. It ended with a gain of close to around 200 points. But what it did was it ended very, very close to the 50 DMA. You wanted to decisively cross this mark, then it's on its way to that 52,500 odd mark. So that's the important data point. You'd like the Nifty Bank from a bullish perspective to build on to those gains. In terms of the SEBI criteria that came out with regard to inclusion and exclusion on Friday, post-market hours, well, there are two stocks that I'm going to be tracking because of this. Because going by the revised criteria, there are two stocks that can make it in. One is Zomato and the other one is Jio Financial Services. And that's important because if they make it to the FNO list, then they could probably make it to the Nifty in the early part of 2025. So two stocks I'll be looking at. Both those two should be up for you on the screen. Zomato and Jio Financial, they've corrected a little bit from the top. So added reason to keep an eye out on both these two names.
Okay, Nigel, thank you so much for that. And speaking of course stocks, there's a lot of individual corporate action we have to track. This mega merger between Gujarat Gas, Gujarat State Petroleum, GSPL. So that's something to keep an eye out. A bunch of PSU stocks have made it to the Navratna status. So let's see if there's any trading buzz. And there's also a Bajaj Housing Finance when we'll have a new IPO from the Bajaj stable. That's next week. But I think, the excitement and the chatter will be there around it as well.
No, absolutely. And, we'll sort of get you details of what they filed in terms of the prospectus, etc. But that's a big one, an interesting one as well. Lots of interest. Well, let's welcome in our sort of guest on the program, and we'll have Jeffrey Dennis joining in, independent emerging markets commentator. Jeffrey, great to have you with us here. Thank you very much for your time. Appreciate it. We're sort of getting closer and closer to U.S. elections, and I want to just kick off with that because everything else seems a bit stale because it's more of the same in that sense. Where are we at, especially in some of the swing states as we get closer to U.S. elections? Is there a definitive kind of trend, or is it, are polls indicating that both are in a dead heat? What's your sense?
First of all, as I was preparing some thoughts and some notes for the interview, it just occurred to me that not much has really changed, I think, in the markets over the last couple of weeks or so. So let's focus on the politics for a moment. Clearly, Kamala Harris and the Democrats have had a very, very big a surge in the polls since she took over the nomination from President Biden. But there seems to be some evidence she's topping out a little bit now, looking for maybe a further bounce eventually coming out of the convention. But it's we're not seeing much of that so far. But I think what's happening, and this is not something I'm doing myself in terms of independent work. She does look as if she's ahead in nearly all of these swing states. Possible exceptions would be Pennsylvania, for example, possibly Georgia, where she's not necessarily ahead. But I think the interesting thing, and what's going to make it very uncertain for a long period of time still until the actual election itself, is all of these leads that she might have, and indeed the leads that Trump may have in one or two swing states, are very narrow. They're basically close to the margin of error. So there's still everything to play for, but the Democrats' position is, of course, better than it was a month ago, and that's particularly true in these swing states.
Hi, Mr. Dennis. Great to have you on the show. And along with, of course, all the politics, we'll continue tracking how markets react to the rate cuts as and when they finally start. I mean, we're finally entering the month of September now. What is your sense? I mean, do you think we'll get just gradual 25 basis points? And if that's the case, will that keep markets in an upbeat mood? Or will markets sort of start getting into a range unless and until we see a big bazooka, something like a 50 basis points from the Fed?
Well, I think there's no need for a big bazooka now. Frankly, I thought we might get an intermeeting cut. I thought we might get 50 basis points. Now I think it's most likely to be 25. Of course, the payroll numbers are coming out later this week, and if they're on the weak side, I suppose it does increase the risk that could move by 50. But the data are still reasonably stable and steady and pointing towards, I think, the fabled soft landing. So for me, it looks like most likely a slight balance towards just a 25 basis point cut. And I think then they'll probably cut again in early November around Election Day and then again in December. So I think we'll be at 75 basis points of cuts by the end of the year, and then we'll take a look at 2025 to see how much further that may go. But so that's my sense. I don't rule out a 50 basis point cut. It would be interesting to do a big cut at the beginning, but I don't think the macroeconomic data warrants it now. I think the Fed may rather keep their powder dry and just cut by 25 and follow up by further 25 basis point cuts as we head towards the end of the year. But the most important data point to confirm that or not will be these payroll numbers on Friday.
Hi, Jeff. Morning. Good to see you, Ben. Let's talk about equity markets then. With regard to those cuts, some part of the street believes maybe 100 basis points would come. So let's see how that goes. But let's focus on global equity markets. How do you approach it from here on? Given that we're going to be getting a rate cut, will you be leaning more towards the DMs or EMs? And within the EMs, where is India placed?
Well, the EM continues to be quite disappointing, I think, overall compared to DM this year. We're still trading about a 700 to 800 basis point lag against developed markets, and that's got a lot to do with the very poor performance of China. In relative terms, China's just up 2% in dollar terms this year as of Friday. And I think China really needs to break out more to the upside for the emerging markets to really catch up the developed markets. I don't see any reason why, if we see steady rate cuts and more soft landing type of data, why the US equity market shouldn't continue to move higher, albeit I'm sure very erratically. It won't be a sharp move up to the end of the year, but I think it'll be an upside move. And I think EM will probably also go up between now and the end of the year. A lot of that, as we've discussed on this program before, will depend on whether the dollar starts to go down again. Now, within emerging markets themselves, I still think India is a great place to be for the long term. Of course, we've said it before, there are concerns about valuation levels, of course. Nice piece in the Financial Times the other day about the slowdown in FII inflows in the month of August, which is no surprise given the volatility. But I still think EM investors really, really want to believe the Indian story, want to see it moving higher and are probably positioned for that. Outside of that, I still like Taiwan. I think Brazil and Mexico are two markets that will benefit tremendously as the dollar goes down, with the scope there for lower interest rates as there's less pressure on currencies. And selective other markets, perhaps some of the ASEAN markets, Indonesia, etc., and also Central Europe. I would not be chasing China here. I think we've got to see a better economic performance from China before that market's really going to recover. So for me, a switch from India into China doesn't make a lot of sense, frankly, right now.
All right. Got that, Mr. Dennis. Yes, the weakened numbers out of China as well on the manufacturing side, not pointing to any sort of a recovery. I think those numbers are still in contraction territory. Thank you so much for joining in and giving us some perspective. I wish you a good rest of the day. Well, with that, let's move on, get to some money market views. Kunal Sudhani of Shinhan Bank says the US dollar received support from July's personal consumption expenditures index data. He says the dollar index continues to stay above 101.5, while Brent crude prices cooled off sharply. For the dollar index, he says 100.5 acts as a strong support level. For the USD INR, he adds that 83.80 acts as a support, while 84 is a resistance.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. Just running you through the list for now. Maruti, TVS, Hero MotoCorp, Gujarat Gas, GSPL and Biocon. All of them will be reacting to positive news flow. While on the flip side, you have Tata Motors, Eicher Motors, Zydus Life, Dr. Reddy's will be reacting to negative news flow. Well, we'll slip into a short break. When you come back, we'll get into further detail on all these names. Stay with us.
I'm announcing today in a major statement that under the Trump administration, your government will pay for, or your insurance company will be mandated to pay for, all costs associated with IVF treatment, fertilization for women, IVF treatment. Because we want more babies, to put it very nicely.
Personal income tax collections have outgrown corporate tax collections in the country, and the numbers for FY23 throw up some interesting facts. There are 19 individuals who file tax returns having a salary income ranging between 100 and 500 crore rupees, and 68 individuals draw a salary between 50 and 100 crore rupees. But if you expand the scope to include all forms of income, there were 23 individuals.
Welcome back. You're with us on Bazaar Morning Call, and we are here with the CNBC-TV18 list of top stocks to watch, and there are plenty of names which could be in focus today. Our team is standing by. Guys, good morning and happy Monday to all of you. So Darshan, let's start with you. You've been pouring through all those auto sales numbers that came out over the weekend. So what are the highlights?
Morning, Survi. So, as expected, passenger vehicle sales have done relatively better and have done better than commercial vehicle segments. So, we'll start with Maruti. Total sales have come in line with estimates at 1.82 lakh units, and it was down 4% year-on-year, but was up 1% month-on-month. Talking about the positives for Maruti, utility vehicle segments have seen improvement both year-on-year and on a sequential basis, that is month-on-month. Utility vehicle sales were up 7% year-on-year and up 11% month-on-month. Talk about negatives, compact segment is the segment which remains under pressure, and sales were down 20% year-on-year and down 1% month-on-month. Coming to Tata Motors, sales have missed estimates, majorly dragged by commercial vehicle segment. Total sales were down 8% year-on-year but were flat month-on-month. Talk about specifically about commercial vehicles, except passenger carrier, all the segments have seen a drop year-on-year, with heavy commercial vehicle sales falling 21% and SCV cargo and pickup sales falling 23% year-on-year. Talking about passenger vehicles, total sales see a minor drop of 3%, while EV sales were down 5% year-on-year but up 18% month-on-month.
All right, Sud, thanks for that. But two-wheeler numbers as well. You want to shine the spotlight there?
That's correct. So we'll start with TVS Motor. TVS Motor has reported a strong set of monthly sales, except three-wheeler. All segments here have reported a growth, with most of the segments reporting double-digit growth. Talking about the positives for TVS Motor, two-wheeler segment, which is motorcycle and scooter, have seen a double-digit growth year-on-year. Except export sales are back to 1 lakh units, that is highest in almost a year. Talking about the negatives, three-wheeler segment sales have dropped both year-on-year and month-on-month. Coming to Hero Moto, like TVS, again, this also reported sales almost in line or slightly higher than estimates, with motorcycle segment doing relatively better than other segments. And also Vida EV has crossed 6,000 units of sales against 5,000 that company has done last month, and total sales were up 5% year-on-year and 38% month-on-month. Even outlook by the company is positive. Company says August sales were marginally impacted by supply shortages that will be made up in September, and going ahead, growth will be led by faster recovery expected in rural segment, growth in 125cc segment, and new launch in the scooters. Coming to Eicher Motors, company has reported sales which is in line to muted expectations. Total sales were down 5% year-on-year, but up 10% month-on-month. Motorcycle segment, that is up to 350cc, which is the highest contribution, which contributes the highest to Royal Enfield. Total sales were up 1% year and down 1% month-on-month. 350cc that I was saying, it remains under pressure. Also, company has launched a new bike, that is 2024 Royal Enfield Classic 350 in India, starting at a price of ₹2 lakh.
Okay, all right. Sudarshan, thanks a lot for that. Well, let's focus on the big deal that was announced. Nimesh gave us a sneak peek into it on D Street Chatter, and that was announced. Gujarat Gas and GSPL both in focus. Nimesh, tell us more.
And so as you rightly said, it's a complex merger which has been announced over the weekend between the Gujarat-based gas companies. So essentially, the idea is to unlock value in GSPL for the shareholders and also simplify the holding structure. It's a three-step move that they've announced. First, GSPC will be merged into Gujarat Gas. The ratio is 10 shares of Gujarat Gas for 305 shares of GSPC, which is unlisted. Second step, GSPL will be merged into Gujarat Gas. The ratio there is 10 shares of Gujarat Gas for 13 shares of GSPL. And finally, GTL, which will be the trading business, will be demerged and listed separately. There, the ratio is 1 share of GTL for 3 shares of Gujarat Gas. So it's a three-step move that they have announced. Now, what are the analysts saying? For GSPL, after the big up move in the last few days, and the merger ratio, the upside limited is just 5% as per the Jefferies note. So you might say a bit of profit booking in GSPL today. But for Gujarat Gas, there are some upgrades as well. So Aquarius has today upgraded the stock to add now. They've raised the target price to 667, and they believe that the merger is well thought and will be EPS accretive. Similarly, Antique has also raised the target price on Gujarat Gas to 726 now, and they believe that the merger will be EPS accretive from day one itself. However, someone like Jefferies still has an underperformed rating, but even there they've raised the target price on Gujarat Gas post-merger to close to 513. So I guess today you might say a bit of profit booking, but largely it's been done to simplify the entire holding structure as well as unlock value in GSPL.
Got that, Nimesh. Thank you very much. And Nimesh, of course, has been telling us that this is coming over the last couple of days or so. So, Nimesh, congratulations on that one as well. Well, let's talk about pharma, right? Biocon should be in focus, Zydus, and so will Dr. Reddy's be. Ekta is here with details on all of them. Ekta, good morning.
Morning. Well, I'll start with Biocon, which is in focus because they've received US FDA approval for 2 drugs. First is basically the generic version of Entresto, which is sacubitril and valsartan tablets. So that should be a positive, along with daptomycin injection from the US FDA. That's used for skin infections. Additionally, they've received an establishment inspection report for their greenfield API facility at Visakhapatnam, so they can start manufacturing for the US from that particular plant. Expect Biocon to be in the green. Zydus are expected to be in the red because they've received a warning letter for their injectable manufacturing facility at Jarod. They've said that it does not contain any data integrity violations. Dr. Reddy's expect that stock to be in the red because the National Medical Products Administration of China, the China regulator, has basically suspended the sale of Dr. Reddy's one particular drug in China. That is because after they inspected their FTO facility, FTO3 facility, they said that it did not meet their requirements in terms of good manufacturing practices. Separately, because of that, Dr. Reddy cannot participate in any central drug procurement activities till Feb of 2026. in China. So I expect the stock to be in the red.
Okay, but if regulatory hurdle in China for Dr. Reddy's got that. Ekta, thanks very much. Let's actually quickly look at the recap of all the top stocks to watch, and I have the list right here with me. The ones that have positive news flow this morning are Maruti, TVS Motors, Hero MotoCorp, Gujarat Gas, GSPL and Biocon. Stocks with negative news flow are Tata Motors, Eicher Motors, Zydus Life Sciences and Dr. Reddy's. Okay, let's talk about some more stocks and news, and Vivek has a couple for us. Vivek, good morning.
Well, good morning. Quite a long list today. A lot of news flow over the weekend. First up, watch out for 3 PSUs in trade: RailTel, LJBN, as well as RailTel. The Department of Public Enterprises has gone ahead and granted Navratna status to all 3 of these companies. What are the implications? Basically, they get a Navratna status on the back of strong financial performance. They get increased financial independence. They can go ahead and form JEs, form MOUs, and along with that, they can go ahead and invest up to 1,000 crore independently without any central government approval. So, increased autonomy as far as these 3 companies are concerned. Keep an eye out for Indigo, some positive news flow over there. OMCs have gone ahead and reduced ATF prices by close to 2%. The ATF prices, remember, have been cut by close to 12% in 2024 at lowest level since the last 12 months. Falling crude prices also acts as a tailwind for Indigo today. MOIL, keep an eye out for that. The sharp price cuts coming in most of the grades that the company is actually providing manganese ore in. So when you're talking about ferro grade manganese ore with manganese content of Mn 44%, it's a 20% cut. And in the other grade, there's been a price cut of close to 15%. NBCC, the bonus announcement coming in, so you will get 1 share for every 2 shares that you hold in NBCC. October 7, 2024 is the record date for this particular transaction. Keep an eye out for Century Textile as well, an important announcement coming in there. Birla Estates, which is a wholly owned subsidiary of the company engaged in real estate operations, has signed an agreement to go ahead and co-develop a land parcel covering close to 131 acres in Sector 150. This is in JV with the LGCPL group. So on the back of that, keep an eye out for Century Textile. While, monetization still might be some time away, it marks a foray into this particular market for Century Textile.
Yeah, absolutely. I caught that as well. So let's see. Even in real estate is, such a huge draw. So let's see if we get some action on the Century Textile stock as well. But back to the other major regulatory move, and Nigel gave us a headline earlier, the fact that we finally have the official new criteria that decides what stocks go in and what stocks go out of the F&O market. So Nigel, you gave us a headline earlier that it could be Jio and Zomato we focus on, because if they get in F&O, they get in the Nifty.
Absolutely.
But what are the internals? I mean, what really changes?
All right. Well, SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. Now, the notable changes in the methodology was the median quarter sigma order size requirement, which has been increased from 25 lakhs to 75 lakhs. That's the first point. Secondly, the market-wide position limit has been revised from around 500 crores to around 1,500 crores. And finally, the average daily value over the last 6 months has been revised from 10 to 35 crores. So these are the top 3 changes that we have seen. Now, SEBI has also said that once a stock is excluded from the derivative segment, it shall not be considered for re-inclusion for a period of 1 year or so. Now, based on this new criteria that's laid out, Nuvama has stated that they understand that the exclusion review can happen in December, and then the exclusions from the derivative segment can only take effect from February 2025 or later. That's with regard to the exclusions. They believe that 18 stocks have a strong chance of being excluded from the derivative segment, and the list is up for you on the screen. Now let's move to the inclusions. Nuvama says that close to 80 names could qualify for the F&O inclusion, and some of the notable names are up for you on the screen. They add that it seems clear that SEBI intends to include new stocks in the derivatives market, and they believe the new inclusions could be announced in the next few weeks or even the next few months. Nuvama has said that Jio as well as Zomato, well, they are the top contenders to make it to the F&O segment, which if they come into the F&O basket, then they could make its way into the Nifty 50 in the next rejig in early 2025. The final decision, though, is in SEBI's hands. So for now, we'll be watching in for the inclusions that could be just a short while away, and the exclusions could take effect later on, in 2025 itself.
Absolutely. A very sort of regular reassessment of the criteria, always a great thing. Only one thing some have pointed out, that along with this, right, the point is markets are in a boom phase. So you've tightened the eligibility criteria, right? More order and more volume, etc. required. if markets go down and volumes dry up, will you reassess as quickly? Right? That's the only point, which we don't have clarity on as of now. So maybe that's the only thing which perhaps could have come along with this particular circular, that this is going to be sort of assessed every whatever, at a regular time interval, which takes care of, boom markets and not so boom markets as well. We'll take a quick commercial break here. We're going to come back. Prakash Diwan is going to be with us for some fundamental stock talk that's coming up in just a bit from now. Stay with us.
Income of 500 crore rupees plus, and there are 262 individuals whose income fall in the bracket of 100 to 500 crore rupees. But a large part of the section of Indians who pay taxes and file returns, a little over 2 crore people, earned between 5.5 to 9.5 lakh rupees per year. This means the average income earned by the maximum number of individuals in this category stands at around 6.99 lakh rupees per year. If we consider only salary income, then a little over 1.19 crore people fall in the bracket of 5.5 lakh to 9.5 lakh rupees per year. That's an average annual salary of 7.24 lakh rupees. When it comes to rental income falling under the header Other Income also has some interesting numbers. While there are 32 people in the country who earn between 10 and 25 crore rupees every year, just from property rentals, there are only 3 people in the country who earn between 25 to 50 crore rupees. And in all, these 35 people earned 470 crore rupees as rental income in FY23. Now, India may be in the heart of an entrepreneurial boom, but in FY23, only 16 individuals in the country declared a business income, and mind you, that does not include salaries, in the bracket of 100 to 500 crore rupees. And there are 41 others who've disclosed business income of the range between 50 and 100 crore rupees. The numbers also point to the fact that FY23 saw a strong interest in investing to build capital, despite the inherent risk of investing in assets classes like equity. Under the header long-term capital gains income, which is income earned from the transfer of any capital assets held for a period that satisfies the definition of long-term, there were 14 individuals who've disclosed that they earned more than 500 crore rupees each. However, 144 individuals said that their long-term capital gains fall under the bracket of 100 to 500 crore rupees. But there's one thing that this data from the Income Tax Department does not tell up, and that's the names of these people who fall in these brackets.
Welcome back. Well, let's focus on some fundamental analysis, and to help us out, we have Prakash Diwan. Prakash, we're just talking about this. The SEBI criteria has been changed for F&O inclusion, exclusion, and because of that, I'm looking at 2 stocks, Zomato as well as Jio Financial. Now, in the near term, you could read it positively that these stocks will come the F&O. The flip side is now you can short them as well. How do you approach both these 2 names? I particularly ask you because both of them have seen, I think Zomato's 10% down from the recent peak after running up big time, and Jio Financial as well, I think is 15% down from the recent peak.
Good morning, Nigel. You're absolutely right. This criteria was badly required. This overall does a lot of things, and I'll come specifically to Zomato and Jio to answer your question. But I just want to leave you with this thought that, the number of times a lot of these stocks keep going in and out of bands and all, that will change because the market-wide position norms are getting changed. The volume criteria is making sure that thinly traded shares do not get subjected to these vagaries. So in a way, it's nice. And remember, the exclusion list, potential exclusion list is smaller than the inclusion list, which is good news in that sense for people who like to trade. Specifically on Zomato and Jio, what it does is, I don't think Jio has gone into that orbit of being very actively traded or being subject to volatility in price movements. But Zomato has enough price volume action to justify different views. any stock that has a differing view in the market on valuations is definitely worth looking at from a shorting potential perspective. I'm not saying that it's worth shorting at this point in time, but if there is, let's say, some disappointment in fundamentals, at least you can hedge your position through this mechanism and make sure that while you are long in a positional way, in a longer term view, you in the short term, at least the volatility doesn't kind of take you down. So that's where the advantage of this thing is. And as institutional interest grows, Nigel, I think that these names will also kind of start seeing that kind of a need to be in the future segment. And remember, that's the stepping stone to be in the Nifty. So, at some point, if any stock aspires to be in the Nifty, this is the route that they will have to go through.
Prakash, hi, good morning. I wonder if you got a chance to look at this big merger of the Gujarat oil and gas entities, right? There's so much happening now. You have Gujarat State Petronet, Gujarat State Petroleum, all of them merging into Gujarat Gas, and then we'll have a demerger of the combined transmission businesses, and ultimately we'll have two individual listed entities. What do you make of it? And from a shareholder perspective, we've already seen the huge run-up in Gujarat State Petronet. Would you recommend any buys right now on Gujarat Gas as this gets underway?
Good morning, Surbhi. So it's a fairly complex structure in terms of the merger. It's a three-step process, very clearly, and you'll have to assign different likelihoods of probabilities to what outcomes you'll see in terms of prices for each of these steps. Now, let me step back a bit and tell you that the reason why this was this precipitated is that the structure is, anyways, the holding structure is fairly complex. If you actually look at GSPC and GSPL and the holding in Gujarat Gas, the cross holdings make it very complex to assign a fair value to any of the businesses, especially if you have to do some sort of an impact analysis on any kind of a development. This will make sure that you have a pure play business on gas exploration production, and you will have a transmission business which is separate. My sense is the GTL piece, which you will get eventually and which will get demerged and listed, is actually the cherry on the cake. I find transmission to be far more, resilient in terms of movements. And if you look at GAIL, for example, after GAIL, we've had no other business that's purely into this kind of a space. And that will be a very welcome change to have in the portfolio. So if you had to buy Gujarat Gas to eventually get into the GTL stock.
Okay, no, got that. I just want to highlight one more name. If you can pull up Paytm, the stock price on Friday went up like a rocket. Move started at about 130-ish or so, and I think finally ended about 12-13% higher. Now, I think Nimesh has also highlighted that there is a large block which is going to happen sometime this week, right? Now, there are two foreign bankers who are sort of working on this, and we don't know if the sort of block is going to be launched today or sometime during the course of the week, but this is going to be a big one. Well, the stock was reacting certainly to something. There has been a little bit of easing on the regulatory aspect, small sort of wins for Paytm along the way, but the big one with regards to, of course, the restrictions imposed by the RBI still are there. Prakash, I don't know if you have any thoughts here on Paytm. 621 as of close on Friday.
No, I do agree. The regulatory forbearance is kind of making sure that Paytm comes back into some sort of a potential path to profitability, given the fact that they're allowed to do a business that's never been so bad. It's all the other businesses that were dragging things down. But, there is always going to be this overhang of what happens if Paytm gets acquired by some other business, some other company. Now, if you're relying on that event to unfold in terms of value unlocking, then, it's a very uncertain kind of a bet. So I somehow feel you could make money, but there's no visibility in terms of how much will things change and what is the price that you'll finally be able to get out. You would rather rely on businesses which have something which is much more benign and sane in terms of what's happening on the profitability side. So I do understand it's done very well. The time to buy was when things started looking up, and that was about $200 or $150 lower. At this point, I think the risk reward, to my understanding, is a bit complex to really fathom. So I wouldn't want to put money out into something which I don't understand.
Absolutely. At $350, I think it was, as you said, simple, right? I mean, they had cash of about 9,000-10,000 crores. And there was, of course, the business itself, which was available at a pretty sort of low overall market cap basis. Not anymore now, though. Well, we'll sort of get back to more stocks with Prakash in a bit. But the RBI Deputy Governor, Mr. Swaminathan, defended the business restrictions imposed by the central bank on some of the erring entities. Now, he was speaking at the CNBC-TV18 Banking Transformation Summit. And Mr. Swaminathan said that some of these decisions, all of these decisions are not taken lightly at all. He also added that there is no worry or concern on financial parameters that they are tracking for the sector that they regulate. Listen in.
I would like to be categorically clear that, whatever financial parameters that we are tracking, at this point in time, certainly there is no worry or a concern. Because if you look at the slippages, if you look at the credit cards, if you look at the GNPA, NNPA, or the SMA, as we call it, whether it is 30 plus DPD or 60 plus DPD, none of these numbers are showing any trend that is likely to become a worry or concern. They all seem to be behaving fine. But if you compare them with the situation a year ago, probably there is a slight uptick. Anticipating this, we took some preemptive measures already, as you would know, in November last year. We saw certain outlier growth in certain segments where we thought there could be a possible risk build-up. On those segments, we called out and added certain risk weight, which was a very clear signaling device. And if you look at the last 2-3 quarters, those segments are moderated. So I think that the measure that was taken, which was preemptive, has had its effect. So we see a moderation at this point in time. Many fintech platforms operate on a business model that involves extending small value loans to customers, oftentimes with poor credit profiles. Unfortunately, this is often followed by aggressive recovery tactics, such as invading customers' privacy by accessing their contacts and personal data. These practices can seriously damage the reputation of the regulated lenders associated with these platforms. Another narrative I would like to address today is the perception that supervisors are overly eager to impose business restrictions, sometimes being portrayed as trigger-happy. This misconception creates an impression that regulators are constantly looking for opportunities to clamp down on financial entities. We are sometimes asked by the media, some of them who are here, who is next, implying that supervisory actions are routine in nature. In reality, the decision to impose business restrictions is never taken easily. Strong supervisory actions are brought in only after careful on-site examinations, off-site data analysis, and extensive engagement with the regulated entities concerned for remediation, oftentimes stretching into several months.
Well, that is the regulator saying that, well, decisions are not taken lightly. There is a history and there is a while that these situations are monitored before taking action. Well, also at the same summit that CNBC-TV18 hosted, we had Jairam Sridharan, MD at Piramal Capital and Housing Finance, who said two things. One, the second quarter is going to be the bottom for net interest margins for NBFCs. Listen in, we're going to play out the other one as well in just a bit.
I do feel like Q2 is going to be the bottom from a margin perspective. Things should start looking up. A lot depends on what happens in the policy environment and if some easing starts happening and how long it takes for that easing to start showing up in lending rates. But see, the liquidity was way tighter 2 months ago than it is now. And hopefully it stays that way. Hopefully, I mean, it's not an excess liquidity environment, but it's not a very deficit liquidity environment either out there. So hopefully things stay that way for a little bit longer for pricing pressures to ease. Point about leverage. I think leverage is a real issue in the market. Here are two statistics that kind of stun me, honestly. Of all the applicants for credit unsecured credit in the market, 10% have more than 10 live unsecured loans right now. Of all applicants, 10% of them have more than 10 live unsecured loans. How crazy is that? Who would have thought that anybody would be running 10 unsecured loans? 10% of the applicant population is running that today. Here's another statistic. Everybody who's applying for digital loans, right? You should ask this the FinTech panel next. Everybody who's applying for digital loans, 50% of those applicants have more than 5 unsecured loans open. 50%. This is not normal. This is not the way lending works. This has not always been the case. It is new. Something new is happening in front of us right now.
All right. Well, that is Jairam Sridharan of Piramal Capital talking about leverage in the system. Although, I mean, we'll play out more of this through the course of the day. So some stunning statistics on unsecured lending and that segment and leverage in that area. But he did go on to say that it's being monitored very closely and the system is aware. So it's not as if we're headed into a bit of a blind spot there. As I said, more later. We'll take a break here. Mitesh Thakkar and Sudarshan Sukhani will be with us with the technical setup and trades on the other side. Stay tuned.
ये भारत में त्योहारों का मौसम है। अभी जन्माष्टमी हमने मनाई है और खुशी देखिए हमारी इकोनॉमी और हमारे मार्केट में भी उत्सव का माहौल है। इस फेस्टिव मूड में ये ग्लोबल फिनटेक फेस्टिवल हो रहा है। यहाँ बड़ी संख्या में विदेशों से हमारे मेहमान भी आए हैं। एक समय था जब लोग भारत आते थे तो हमारी कल्चरल डाइवर्सिटी देखकर दंग रह जाते थे, हैरान हो जाते थे। अब लोग भारत आते हैं तो हमारी फिनटेक डाइवर्सिटी को देखकर भी हैरान होते हैं। पिछले 10 साल में फिनटेक स्पेस में $31 बिलियन से ज्यादा का निवेश हुआ है। दस साल में हमारे फिनटेक स्टार्टअप्स में 500% वृद्धि हुई है। जनधन योजना विमेन एम्पावरमेंट का बहुत बड़ा माध्यम बनी है। इन खातों में महिलाओं के लिए सेविंग्स और इन्वेस्टमेंट्स के लिए नए अवसर बनाए हैं। इन्हीं जनधन खातों की फिलॉसफी पर हमने
Okay, welcome back. You're with us here on Bazaar. There's about 7 minutes to go for the pre-open session. Mahindra & Mahindra sales numbers are at the bottom of the screen. Total sales have come in at 76,755 units. And this is against a poll of about 72,000. So this is much better for the auto business for Mahindra. And those are numbers flashing. We'll sort of get back to this and more in a bit. But Mitesh and Sudarshan are with us with what they'd want you to do as far as trading ideas are concerned. Gentlemen, good morning. Great to have both of you here. Mitesh, you go first. What would be the advice?
Prashant, the advice is to clearly be on the long side. The only worry is that we have had about 12, 13 sessions of an up move, and therefore, one of these days we might get a pullback. So we should identify some level from below which some reversal can happen. And for me, I think on the intraday charts, it's 25,200 on the spot. As long as we are above that, I think we'll keep trading with long bias, and we are only about 35, 40 points away from there. But in case we start breaking below 25,190, 25,180, then I think we'll at least reduce our long exposure, wait for a pullback to play out before going long again. The GIFT Nifty is indicating a very flat start, and therefore I think I'll keep my focus on the Bank Nifty, which is after about 3-4 days of pullback started. Looks like it's starting its up move. Looking at the Friday's movement, so I think if the Bank Nifty can get past highs of 51,460, which it made on Friday, then I think we should not be worrying, and we should be trading slightly with long bias on slightly aggressive bias on the long side, and look at the Bank Nifty heading towards 51,750, 800, and the Nifty heading towards 25,500.
Okay, all right. Thanks for that, Mitesh. Well, let's get into Sudarshan's view as well. Hi, Sudarshan. Morning. How are you approaching trade today?
Good morning. Well, this market has only one side, and that's been consistent for so many months, and that is the upside. Now, the market has rewarded traders who have bought on dips and traders sometimes who have bought on breakouts. So this is not surprising because we are in a bull market. In a bull market, you look for opportunities to buy. Now, at some point, this market will pause. Maybe it will correct. Maybe it will do so many other things. But since we are not aware of that point, we'll just go with the trend. Today also, as Mitesh said, and I agree with him, Bank Nifty could be a buying opportunity. It does suggest that perhaps it's getting its act together. It's an early time, but maybe. And the Nifty is a buy on dips. Don't time the market. Don't say this is it. Just go and buy.
Okay, all right, got it. What about individual stocks, Sudarshan?
Yeah, well, I have stocks that are, literally buy on dips opportunities. In this market, you could close your eyes and buy a blue chip and probably make money. But anyway, Deepak Nitrate is a buy with a stop under 28.80. Oberoi Realty is a buy with a stop under 17.30. My only intraday short, and you never in the markets can do that, is Marico. Is with a stop above 665, but don't rush to sell it. See if there is weakness persists. And finally, my last buy again is Page Industries with a stop under 41,600.
Okay, and Mitesh, what about you?
I also have more of buy calls. Metropolis is a buy recommendation for targets of around 2220 and a stop below 2100. Hindustan Copper is buy with a stop at 323 for targets of 348. Hero Motors is a buy with a stop below 5,400 for a target of around 5,550, and one sell call, that's Marico. Keep a stop just around or above 660. Look for targets of around 620.
All right, gentlemen, thank you very much for getting us those. We'll come back to you a little later. We take a break. We are back with the pre-open session. We'll also have Prabal Sen, energy analyst at ICICI Securities. We'll talk about the merger, the three-way merger, Gujarat State Petronet, GSPC and Gujarat Gas. Stay tuned.
माइक्रो फाइनेंस की सबसे बड़ी स्कीम मुद्रा लॉन्च की। इस स्कीम से अभी तक 27 ट्रिलियन रुपए से अधिक का क्रेडिट दिया जा चुका है। 27 ट्रिलियन। इस स्कीम की करीब 70% बेनिफिशियरी महिलाएं हैं। पूरी दुनिया के लिए पैरेलल इकोनॉमी एक बड़ी चिंता का विषय रही है। फिनटेक ने पैरेलल इकोनॉमी पर भी चोट की है और बधाई के पात्र आप लोग हैं। और मुझे मेरे देश के युवाओं की टैलेंट पे इतना भरोसा है और मैं कहता हूं, बड़े विश्वास से कहता हूं, our best is yet to come. ये आपका 5वां समारोह है ना, तो 10वें में मैं आऊंगा।
how IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, you know, when do we see, you know, the right sweet spot of, hey, you know, we're inflecting. You know, we think that we're going to get into, you know, harvest significant amounts of, you know, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, you know, it's a commercial strategic call.
Yeah.
I think that happens in, you know, probably sooner than even I anticipated.
Yeah.
And, you know, we're a fast company, so we take a call to go public, we'll go public very quickly. But yeah, I mean, I think 2026, potentially even late 2025 is a realistic timeline, and our focus would be build excellence on controls and make sure that.
Welcome back. Well, we are just about less than 15 minutes away from the market opening. Pre-open rates are trickling in, and of course we'll get you all the FNOQs now and some strategies that you can perhaps work with as well. We have Chandan Daparia joining in from Motilal Oswal for exactly that. Chandan, good morning to you. So tell us, what are your trades this Monday?
Good morning, Surbhi. Thanks for having me. So Nifty continued its winning streak for 12 consecutive trading sessions, and I've seen this first time ever in my life. Market made a new lifetime high at 25,268, and it has given a highest daily and the weekly close, and base of the market is gradually shifting higher. If I look at the data internal, FI's long short ratio has improved to 72%. Put call ratio of Nifty is now at 1.41 level. India VIX is holding well below 13.8 zone. So lower volatility, improving put call ratio, and shifting higher base indicate that bullish momentum could continue. We have seen rollover of around 77%, which is slightly better than previous month averages. As of now, we have around 14 million shares in the current series as outstanding open interest. So the entire setup indicates that till Nifty holds above 25,000 zone, the bulls are likely to continue the bullish stance, and this rally can extend towards 25,750 to 26,000 zone. Now looking at the Bank Nifty index, here we have seen some underperformance. The Nifty is hitting to the new high, but Bank Nifty is still 2,200 points lower than its lifetime high zone. But overall setup is positive. Supports are slightly shifting higher. The banking index is holding well above its 50-day exponential moving average. So till it holds above 51,000, some catch-up move could be seen towards 51,750 to 52,000 marks. Now looking at the stock wise, first there is buy on TVS Motor. Nifty Auto Index has seen a strong momentum for most part of this calendar year. And we believe that TVS Motor is one of the strongest names with consistent return. The stock has seen the rollover of around 89% with built up of long position. Clearly indicates that bullish momentum could continue. So one can buy with support of 2765, and TVS Motor can inch up towards 2950 level. Second trade, that is buy on Granules. Positive stance in entire Nifty Pharma, and Granules is one of the strongest name. Has been moving upwards from last 3 to 5 months. We have seen a breakout with surge in the price and volume. So this bullish momentum led by breakout could take the stock to 750. One can buy with support of 707. Last trading idea, that is buy on NTPC. We have seen a cluster breakout of last 6 months. It surpasses previous hurdle of 396, 400 zone. Some call unwinding and put writing is clearly visible, which indicates that bullish momentum could be seen to 444. One can buy with support of 418 NTPC.
Okay, all right, Chandan, thank you very much for all of the trades there. You have a good day as well. Let's move on and address the mega corporate news that we got over the weekend, which is a huge merger between several Gujarat state entities in the oil and gas arena. Now, this is a large exercise. Gujarat State Petroleum Corporation, Gujarat State Petronet and GSPC Energy will all merge into Gujarat Gas. Gujarat Gas's transmission business will then be carved out and it will be listed as a separate entity as GSPL Transmission. We should just look at the stock price movement as well. Let's pull up the GSPL, maybe a 6-month or a 1-year chart, and that will tell us. I mean, the market was sensing this, and Nimesh was also sort of alerting us on this as well, because the stock moved from about 320 on the 15th of August, surged all the way to 430 in just about, a couple of trading sessions here. That's the sharp increase that we've seen in GSPL. So while, the market argues that maybe a lot of this is already played out on the GSPL stock, is there more legroom ahead for Gujarat Gas, which is not rallied, nothing similar to what we've seen on GSPL. To talk about this, we have with us Prabal Sen, energy analyst at ICICI Securities. Prabal, great to have you on. And, I was just trying to go through the details of your note. And the one headline that really, struck me, that for Gujarat Gas, once this demerger is done and then the demerger is done, you're expecting the EPS to move from around 21.5 rupees per share to almost 38 rupees per share. So take us, into the whole behind the scenes. What do you make of the transaction and why you expect this kind of an upside on Gujarat Gas?
So very simply put, there are two elements to it. One is that the gas trading business, obviously, which adds about 1,000 crores of EBITDA. Now, there are two ways to look at it. 330 odd crores, as per the management estimates, comes from the sourcing that Gujarat Gas itself used to do from GSPC. But the fact is that that margin will be added to somewhere. It will not disappear, even if the entity is the same. So the aggregate EBITDA accretion that can happen to Gujarat Gas's business will still be in the range of 1,000 to 1,100 crores. And this is not even factoring in the kind of, around 9 to 10% growth in trading volumes that was guided to by the management. So that's on the EBITDA line. More importantly, since there is a 72 billion, tax loss that will be transferred to the resulting entity, that itself ensures that there will be literally no tax liability on the resultant entity for at least the next 2 to 3 years, depending on the actual PBT level. So, those two factors actually combine to deliver the huge outsized EPS benefit. It's certainly not something that is happening just because of operational synergies. The use of the tax loss is a major factor as well in terms of the EPS accretion that is coming in.
All right, Prabal. So you're positive on Gujarat Gas, and you've explained that quite well. Let's talk about GSPL. Buy the rumor, sell the news. That appears to be taking place right now. After running up 25% in a matter, I think, of 6-7 trading sessions, now the stock is down close to 4%. What's the view at around this 425 rupees?
No, I think frankly, it's very simplistic. There is a swap ratio that has been decided. It's a matter of 6 to 9 months till which the company is essentially a separate listed entity. And the swap ratio clearly indicates a fair value of 465 odd rupees a share, which is pretty much what the market had already priced in, close to it, even before the news actually officially came out. So people will make their individual profit booking decisions based on what their entry level was. But the fair value, I think, gets fixed at somewhere around 465 levels. It's as simple as that.
And you do have a buy. I think the earlier rating was a sell. You've gone to a buy on Gujarat Gas for the reasons that you mentioned, with the target price at about 750.55. So that still implies a fair amount of upside. Prabal, what about this new entity that will list, the transmission entity that will hold all the transmission assets? So how do we wrap our heads around this in terms of valuation, the potential value unlocking?
I think the details around that will probably become clearer when we have more details in terms of the carve-out arrangement, in terms of the scheme of arrangement that comes out. Right now, we just have a bare-bones swap arrangements and not much clarity in terms of what that business will look like. But the concerns around the new transmission entity will remain the same as they were for GSPL. Basically, what happens to the tariff? The management in the call yesterday did highlight that they expect a successful resolution in terms of the review that they've asked for in terms of their tariff. Plus, they also expect additional capex to be essentially approved, which automatically means that the tariff will be revised upwards. But until actually we have some clarity on what is happening to the tariff going forward from a sustainable perspective, I think that the pure play transmission business of Gujarat as it stands now will continue to remain under pressure. So I think we'll wait for clarity to emerge before commenting on the new entity.
Okay, so we've discussed both those two. Prabal, I wanted your view on GAIL. Now, since the trading business is getting demerged from Gujarat Gas for regulatory reasons, will GAIL have to do the same with regard to demerging its trading business? Do you believe that that is the possibility and that's the way ahead?
I honestly don't know if the trading business is, getting merged or demerged due to regulatory reasons. I'll have to check whether there is a regulatory requirement. As of now, my understanding is that there's no regulatory requirement as of today to basically separate out the trading business. Yes, there has been news around the independent transport operator, if that is what you're referring to basically sort of streamline the way capacity is booked on gas transmission pipelines nationwide. But I'm not too sure whether that translates into the trading business being mandatorily separated from GAIL's core business. So I think I'll refrain from commenting as of now because the regulatory picture is not very clear.
All right. Prabal, hi. Morning. Just a quick word. Oil is down to back as we're bouncing around, but back down to about 77, under 77 now. Any tactical or otherwise trades here across the universe, the oil and gas universe?
I'll refrain from any tactical recommendations. That's not really my job. But in terms of crude softness, there are two major impacts that one sees. One is that GRMs, which had actually been recovering quite smartly in the first couple of months, they seem to have now started to reflect the weakness in crude prices, because this current weakness does seem to be a little bit demand related, and that is starting to reflect again in a reversal of the GRM improvement. So that obviously hurts Indian refiners. But on the flip side, the kind of reduction one is seeing in crude and product prices means that marketing margins have once again expanded quite sharply to about 7-8 rupees per litre. So on balance, I think the OMC's earnings on an integrated basis are perhaps holding on in the levels that which the street is building in, probably still a bit higher to that extent. And as far as upstream is concerned, till crude still holds above $75, their net realizations actually don't get hurt as much. So we'll have to keep a keen eye on where Brent goes from here. I still believe that there is always an overreaction on both sides as far as crude is concerned. And therefore today, I think inventory being at 5-year, less than 5-year average across categories in the US, and the potential of China coming back to the market is being completely discounted because of fears around economic hard landing, or basically China's demand just not coming back at all. But I do think that there is a little bit more of tightness than what would that one should expect in the next half.
Sure.
And crude prices should bounce back to around $80 levels. That's my sense.
Sure, Prabal, just, as we sign out of the conversation, just a quick question. Because we were looking at GAIL and the new Gujarat Gas, and people will look at these two entities. Just wanted to know, at that 755 rupees target that you've ascribed to Gujarat Gas, what's the valuation multiple you've given to Gujarat Gas, and what's the multiple you ascribe to GAIL? And maybe just a word on this, LPG price increase as well, right? Pretty steep on commercial LPG cylinders, 39 rupees. If there's any, bearing on the stocks, on the marketing side.
Okay, so I think three questions. One, GAIL's multiple, I would still say, is not really comparable to Gujarat Gas, because even in the resulting entity, 70% of the business will be a pure play CGD business, which is completely the opposite of what GAIL's business is in terms of transmission and trading. Having said that, the target multiple we have put is about 27 times FY26 earnings of standalone Gujarat Gas, because we frankly don't have enough info to put out in detailed consolidated estimates. But if you look at our note, the pro forma earnings that we have pulled out suggest that earnings can grow to 37.8, which you mentioned earlier in the conversation. And the derived multiple, therefore, on that number is about 20x, which is comparable to the nearest peer IGL, which we believe is a fair way to look at the company at this point of time.
Well, we'll leave it there. Thank you very much for your time. Good speaking with you. Appreciate it. Sudarshan and Mitesh are back with us with the 9-10 calls. Sudarshan, you go first. What do you have?
Overall Realty can be considered for buying with a stop under 1730.
Overall Realty. And Mitesh, what about you?
I'll go with the buy on Hind Copper for targets of 340 at 350. Disclaimer, it's a recommendation to our clients, so there is some vested interest.
All right, got it. Let's focus back on auto sales numbers. I mean, they're still trickling in. You saw Mahindra's auto numbers, but Sud has got details on all of them. Sud, over to you.
So amongst all the auto companies, two-wheelers have been the best performing stocks, or two-wheelers have outperformed all the other sectors. And between commercial vehicles and passenger vehicles have done relatively better. So starting with Maruti, sales were in line with estimates at 1.82 lakh units, and sales were led by utility vehicle segment, while compact segment was under pressure. For Tata Motors, sales have missed estimates, majorly dragged by commercial vehicle segment. Except passenger carrier, all the CV segments have dropped year-on-year. For TVS Motor, it was a strong set of sales for a month of August. Except three-wheeler, all the segments have seen a growth, with two-wheeler segment, that is motorcycle and scooter, have seen a double-digit growth. For Hero Motors, sales were in line with estimates, or it was led by motorcycle segment. Even outlook is positive. Company expects a healthy growth in the festive season. For Eicher Motor, Royal Enfield sales were in line to muted expectations, with motorcycles up to 350 segment, which is the highest contributor, remains a drag. For M&M, it has reported a strong set of sales. For M&M Auto, total sales were up 9% year-on-year, up 16% month-on-month. Even tractor segment has reported a healthy set of numbers. Also for tractor segment, company says growth will be led by upcoming festive season, above normal monsoon, bumper kharif harvest, and favorable terms of trade for farmers.
So thank you very much for that. That's really sort of, long list wrapped up very quickly, as just in time too, because we've got the market open, the first rates coming up on your screens. We've got 100 on the Nifty in the pre-open. So it's going to be a good start. 75 now, 25,300 plus is where the index is at. The Sensex is up 225 points, 82,575, 540. So it's a good open this Monday morning. 1,500 stocks are opening higher and about 300 stocks are opening lower. But that, of course, tends to change. But I think the heat map tells you the story. I mean, I think you've got, what 6 Nifty names in the red, and everything else is basically opening up in the green right now. So it's a broadly up kind of a day once again here as far as today's session is concerned. The Nifty Bank is up about 75 points as well, 51,440. So, it's been, I think you're basically almost back to those retracement levels for the Nifty Bank, which it almost got to and then sold off on Friday. I think you're testing that once again. It's been the sort of underperformer out of the two. And the IT index is up about 200 points as well. That's about 0.5% gain. We'll look at more sectors in a bit from now. But as always, let's look at specific stocks, which should be in focus. Survi.
Okay, let's take a look at all the movers and shakers. Now, if we talk about the large cap screen, then Tata Motors is the one that's actually negative, down about 2% on my screen. Let's pull it up because the weakness is persisting on the CV side and even on the passenger vehicle side. Talk about some names. Hero Moto is the one that's up about 2.5% at this point in time. Cipla starting off positive. Some of the names from the financial universe, HDFC Life, Bajaj Finance, are starting on the optimistic side of the screen. Nigel.
All right. Well, let's focus on a few stocks and that are moving around. NHPC, the government has granted Navratra status. The stock is up closer around 5%. Big move is what we're seeing out there. The stock we were just talking about, Gujarat Gas, that's the one that's flying away. Prabal, told us about how he's expecting the EPS to improve multi-times. It's up 8.5%. That's the stock of the morning. Big up move is what we're seeing on that name. On the flip side, you have GSPL, Cello News, that ratio as well has been announced. So the stock is down close to around 3.5%. Both of them moving on opposite ends of the spectrum. Interglobe, let's see what that stock is doing. There could be some rebalance that takes place later today as well. We have a FTSE rebal that could possibly take place in the next few days. So keep an eye out on that one. And also we have OMCs, they have gone ahead and cut ATF prices. So that's important. Biocon, for starters, was up. They've got the US FDA nod for Valsartan tablets and the EIR for the Vizag facility as well. So that opened with a gain of close to around 2%. Biocon is the stock that we're talking about. Gujarat Property as well, the highest bidder for 2 group housing plots in Gurugram. Revenue potential of around 3,400 crores on. We had highlighted that the stock, if it takes support at around that 2,850 odd mark, it could move up a little bit. So Gujarat Properties should come up for you on the screen. And RITES, they have been declared the lowest bidder for a project worth 220 crores from the Tanzania Railway Corporation. Prashant.
Just a few other names here, right? Let's look at Paytm. I mean, we're going to see if there is any follow-through after the kind of action that we saw last Friday. Paytm is up nothing much. I mean, 0.1% flat. 622 holding on to where it left off on Friday. Let's look at Religare. That was another name which bounced and bounced strongly. Religare should be coming up, and we'll see if there is more activity there. Nothing on that one. Orient Cements is another one I want to just look at. That had sold off pretty dramatically, but on Friday it went up and sharply at that. So back at about 300 rupees on Orient Cements, so down about 1.6. And I think you look at something like a IIFL as well. IIFL also saw a bit of a bump, and we'll see if something is coming up there as well. So nothing, I mean, Eiffel Limited, the NBFC, this is securities, and we'll see if there is any action there. So not very much at all is how you describe it. So it's a, you know, on the index, it's not a flat start, it's a good start. The Nifty should be up on your screen, and we're up about 67 points, 25,305, and you know, it's looking good so far. And holding on to what it started with broadly. So 25,300 plus, you're basically back at the first level. And then, I mean, you know, if the up move stretches and continues, you're looking at the 25,330 kind of levels, which is essentially the retracement of that number that we've been putting up. But very quickly, I mean, in about 10 days flat, you've gotten to the first target that we've been putting out here. Lots of specific names at the bottom of the screen as well. There is Max Financial up 1, IGL up 1.6. There is Tata Consumer, which is up about 1.3%. You know, Adani Ports, some data which was released for August. Well, that's up about 0.25% or so, and so on and so forth. So that is the picture so far as the screen goes.
You know, just some more stocks. One smaller name. This is Indian Hume Pipes. They received a very large order, about 850 crores. One of the small cap names that's flying this morning, 12-13% higher. On SJV and NHPC, all these names where the companies have now gotten the Navratna status, where, you know, project implementation becomes a little easier, financing becomes a little easier. There's a fair amount of pop on these. Let's pull up NBCC. NBCC rallied big time going into the bonus. And finally, the bonus has come through, 1:2 bonus, if I remember correctly, 1% up on NBCC. But I think Gujarat Gas is the stock of the day. Just reminding you, the target that ICICI Securities has, Prabhu's target is 755. And by the way, this is with him only looking at FY26, not fully accounting for all the synergies that will come, the tax benefits that will come, because the losses can be carried forward for the next 8 years by Gujarat Gas. So that becomes sort of, you know, another additional point. But what a mover today.
Big move, and you know, it's an upper freeze now, temporary upper freeze as we speak. It's had a bit of a positive rub-off for some reason on the other couple of names as well. IGL is up close to 2.5%. That's one of the top volume movers, and MGL as well is up close to around 1.5%. So all those three names moving up in sympathy, I'm guessing, but they have moved up considerably. On the flip side, Dixon Technologies, will speak to the management in just a bit. That's coming for some mild profit taking, down 2.5%. But the start is good, and we're bracing for that 13th winning streak. Let's see whether or not it comes about. It's never happened. At least, you know, data points coming in from Sudarshan and team have told us that we had 12. The last time we had 12 was in 1993. And as of Friday, we are in line with that 12 sessions, but we won 13. So today could be the day.
Well, you know, we'll certainly, the way things are looking, it looks pretty good. Dheeraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dheeraj, great to have you with us here on the show. Appreciate it. Thank you for your time. Prashant this side. You know, sort of up move stretches on, keeps extending. And although we've, on an absolute basis, I mean, you know, you gave up some after the election results and you basically back above the earlier highs. So that's what you've done. But what's your sense from here, Dheeraj? You know, all calls for caution, sideways move, consolidation. I mean, you get those, but for very brief periods. What are you and your team thinking about markets, at least in the very near term?
So, you know, while the markets are going up, but I mean, as you rightly pointed out, it goes down and then comes up a little bit. And most importantly, the pace of the up move is now beginning to slow down slightly, right? So I just heard the comment that you made just before I joined that last time we saw 12 consecutive up days was in 1993. So that's a long time ago. And if you get a 13th day today, it's an all-time record. But it's a very slow up move. I mean, every day's up move, while it looks good, is either 0.25% or 30 basis points or 35 basis points. So from that point of view, it's making new highs, but it's not a runaway market. And that is also getting manifested in the fact that I think the markets are beginning to become a little bit more selective in what's going up and what's not going up. It's not like everything is getting lifted at the same time. I'm sensing a much larger dispersion in stock price performances within the sectors and across the sectors, and quality bias coming up. We are seeing that within our asset management products, which are all tilted towards quality bias. They've started to do very well in the last 3 months. So the whole quality bias is shifting back to the market, which means it might not be that easy to just pick up anything which is tipped or recommendation or which is flashes on your screen and make money anymore.
Okay. That's advice worth keeping in mind. Dheeraj, great to have you on the show today. So tell us, I mean, are there any changes in the portfolio that you've been looking at? Maybe any trimming, any profit taking? And since you're saying the bias is now moving back towards quality, what would that mean? What would you advise? I mean, does that mean back towards, let's say, some of the staples, even if growth numbers don't look as glamorous?
So, I mean, it's not just for the sectors, it's across sectors, right? So I think the whole focus in the market for the last few months or till, let's say, 2 or 3 months ago was more on narratives and less on numbers. If numbers came through, it was outstanding, it was the icing on the cake. But narratives were enough to take the stock prices up. I think people are now beginning to look through the narratives a little bit and say, hey, where are the numbers? Is this a nice sounding story or commentary actually getting followed through in numbers as well? And I think it's a healthy sign because this will start separating the weak from the strong. This will start actually bringing back the more fundamental orientation of the market. So, I mean, you mentioned FMCG. Yes, there are some green shoots, signs of green shoots within the FMCG sector. So when I meant quality, I didn't mean the classic definition of quality, that quality is equal to buy FMCG. What I meant was numbers have to come through. People are becoming a lot more fundamentals focused right now rather than momentum focused.
Hi, Dheeraj. Good morning. Good to see you. And well, we have some numbers as well that are flashing on the screen. Bajaj Auto's numbers actually look better than what we were working with. Mahindra and Mahindra as well, those numbers look good. So both those two updates that came in earlier today was good. How are you approaching the auto space, Dheeraj? I think last time around you were hinting that Maruti is something that you were still positive on. How are you positioned now?
Yeah, no, I think if I remember right, I probably mentioned the opposite, that I see in four-wheelers, the inventory is beginning to pile up. Maruti is probably one of the names where the inventory is beginning to pile up. Two-wheelers relatively are still looking better, as you can see in all the numbers which are coming through the monthly volume numbers right now. So there are, like in every other sector or most sectors, I see pockets of dispersion within auto at this point of time. CVs are slightly weak. Passenger vehicles are beginning to show signs of weakness. Two-wheelers are by and large still doing okay. And within two-wheelers, obviously, their market share shifts. So one has to be a little bit more careful at this point of time, I think, rather than take broad brush calls.
You know, on that point on caution in CVs, Dheeraj, I mean, I've been watching that number for many months, right? While we talk about the economy doing well, and if you look at, you know, any of the other high-frequency indicators, look at GST collections, or even look at GDP internals, it doesn't look so bad. But then the CV numbers, month after month, quarter after quarter, they're just failing to inspire, no matter which company you're looking at. Even Mahindra, when you look at the CV performance, weak. Ashok Leyland, weak. Eicher Motors, commercial vehicles, weak. So what do you think is at play here?
So CVs will typically follow, like most things, it follows a cycle. So it goes through 2 to 3 years of strong upcycle where excess capacity is built. And then even if the economy continues to do well, that excess capacity takes some time to get absorbed. So if the economy continues to do well, the absorption phase should not last more than 12 or 18 months. And if the economy weakens, then the historic cycle suggests that it could last even 2 to 3 years. So we always see that when the freight load-bearing capacity goes into a bit of a tight supply or deficit, then there is a sharp buildup in the capacity. So most of the large fleet operators, instead of buying 1 or 2 trucks, will probably buy 10. I'm just thinking or nuancing it. And hence, very quickly overcapacity comes into the system. So, I mean, in tractors and CVs almost follow a clockwork kind of a cycle. So after every 2.5, 3 years of upcycle, we do get at least one soft year.
And where do you think we are in that cycle? Are we anywhere close to the bottom, or is this going to last, since this is a cyclical slowdown?
I think there are a few more quarters to go, perhaps.
Okay.
All right. We'll leave it there. Thank you very much for joining us. Dheeraj, appreciate you taking the time being with us here on CNBC TV18. So there is some perspective coming through on markets as they stand right now. Just a quick look at the market itself, which is holding with about a 65-odd point gain, and it is looking good. Let me just see if there is more stuff into the mix now. SJVN is up about 3.5%. So just to highlight a few of these names, RailTel is up about 3.5%, and there is Patel Engineering, which is up about 4.5% as well. You look at Uno Minda, about 3.5% gain right now. A stock called NetWeb. I mean, we've sort of spoken about this, fund managers who own this. So it's a play on data centers and data center hardware equipment. That is at about 29.19, and NetWeb is also coming up with decent sized gains at this point. It was up about 7%. I think it's cooled off from the day's high over the last couple of minutes or so. But let's take it to our first corporate in the show. Dixon is with us.
Well, that's right. Let's focus on Dixon Technologies. Well, the stock has been one of those big outperformers in this year. It's up more than a double, I think, from the start of this year. The stock is among the 7 additions making it to the MSCI India August rejig as well. To discuss the trends, how's growth momentum, we're joined by Mr. Atul Lal, the MD at Dixon Technologies. Hi, good morning, Mr. Lal. Thanks a lot for joining in. Well, mobile segment is going to be the big driver. But the street believes the next big growth driver is going to be the IT hardware sector. Now, analysts are estimating that you start ramping up from the second half of this fiscal, backed by those 2 large customer wins. Throw some color on this. I recall you telling us that the total market or the TAM is approximately 55,000 crores. And I think over the next 6 years, you all are targeting around 48,000 crores. So give us a couple of numbers. FY25, how much of that reflects? FY26, how do you see a ramp up out there?
So undoubtedly, as of now, the biggest trigger of our growth is mobiles, in which we are sitting on some kind of a sweet spot. We have a very large share of addressable market of outsourcing of mobiles. And the next focus domain for us is going to be IT products. In IT products, we are a beneficiary of IT PLI 2 of Government of India. We are setting up a new campus in Chennai, which is expected to become operational by Q4 of the current fiscal. We have committed an investment of almost 250 crores in that campus. We are setting up a capacity in phase 1 of 1 million laptops, and we have already acquired 4 large global brands in our customer portfolio. For some of the brands, the production is expected to start by Q3 of this fiscal, and for remaining in Q4 and Q1 of the next fiscal. So we are expecting a large play in this market. We feel, and that's what we have committed to the government, that we are going to generate revenues of almost 48,000 crores over the next 6 years. This year is going to be slow because it's going to be only the ramp-up phase. But in the next year, we feel that almost 3,500 crores of revenues we should reach. And then year on year, you should keep ramping up. Apart from that, we are also pursuing some large global relationships, which include expanding the product portfolio to servers and to the AI servers. And also, we are completely committed on the backward integration piece, that is the non-semiconductor components, for also IT product, which is an extension of what we are planning to do in mobiles. So that's the strategy, that's the game plan in this particular area.
So, Mr. Lal, just to reconfirm that number from the IT products business, in FY26, it should be around 3,500 crores. And over the next 6 years, your commitment is around 48,000 crores, right?
That's what we have planned.
Right. Mr. Lal, hi, good morning. Prashant here. So the last bit that you said, because some of these numbers sort of we've discussed in the past as well, but I think on the AI side, what you mentioned, is that part of this as well, or that'll be separate? What you're working with? You said you're talking to global companies, etc.
So if you see globally on the hardware side, the AI-based servers is the next in thing, and we feel that the Indian market for these servers, because the data centers technology is going to be revamped, it's going to be more on this side. We are striving and we are planning to take a plunge in this particular product category. That's what the plan is. It's going to be a part of IT PLI 2.
So it's the revenue numbers that you said. This would be a part of that, right?
That's right. That's right.
Okay. So you're talking for tie-ups, etc. for this? Because, I mean, we've had a couple of discussions with data center companies in India. I mean, the market seems to be exploding, not just with smaller players, but big conglomerates as well, getting their feet wet in this area. So, it's expected to grow very fast. Would you want to be just in the server ecosystem, the server space in that value chain? Just a little bit more detail. And who are you talking to, sir, if you can share those details as well?
So we are working upon getting into the product portfolio of these kind of servers. That's the end we want to work upon. We feel that we need collaborations and partnerships in this. And we are already in discussions with some of the large global ODMs in this particular sector. We are fairly confident that these discussions are going to mature into a relationship. So that's what we are pursuing.
And what about timelines to this project? I mean, what we're discussing, sir, essentially here is servers for AI-ready or AI-enabled data centers. That's what you're targeting, right? So what are the timelines? Maybe is it too early to even ask you about possible revenue here? Or if you could share some plans?
So the discussions with a potential partner are on. I'm optimistic that we should be able to share with you some details on that in a couple of months. The numbers in the business plan in this particular category is also in the phase of discussion. So it's slightly premature to share those numbers, but shortly I think we'll be in a position to do that.
Okay. So let's just
if I can just present one more point, Mr. Lal. Things like laptops, etc., are pretty commoditized, right? But I'm not sure. Maybe this also is, AI-based servers, etc. Are margins higher for this? I mean, if you can share.
So we feel that the margin should be better. What you're saying is absolutely apt, that laptops and notebooks is largely commoditized. The attempt this time is that right from the beginning of this particular project, we should make an attempt to also try to get into the higher end of the market. And that's what the strive is.
Yeah, exactly. That was my question as well, sir. So even on laptop and notebooks, could you share the margin profile? Is it the same 3.5–4%, which is the typical range for, say, mobile phones? Or is there some variance? What is the margin on the IT product side?
It's going to be similar. On the laptop book side, the margin profile would be similar as mobiles.
Got it. And I mean, just from an academic standpoint, the kind of servers that you're talking about, these AI-ready data centers that you're talking about, there typically, what could the margins, get to?
It's slightly early. It depends upon the localization and backward integration play. It also depends upon the exact product profile. But we feel that definitely the margins profile is going to be better. What exactly that number is going to look like, it's slightly early to share that.
Just give us now, I'm coming back to the here and now. Let's talk FY25 and FY26. If you could give us the revenue projection, because at least the IT products, they'll start scaling up. You're saying third quarter onwards this year, that revenue will start trickling in. So what is going to be the revenue mix for you this year? And what about next year when the IT product line really, scales up?
You see, 24-25, the largest contributor to our revenue is going to be mobile. Almost 70%, 70 to 75% of the revenues are going to be coming from mobile. And also in 25-26, that's expected to be the biggest contributor. And not only the contributor to revenue, also to the revenue growth. In 25-26, as I shared with you, the number is still going to be relatively small. We're targeting around 3,500 crores. Because it takes almost a year and a half to ramp up. The relationship requires a larger share of customers' wallet, acquire more customers, stabilize production, deepen the value addition. So the bigger contributor of IT products and revenue is going to be in 26-27.
Okay. Mr. Lal, on mobiles, we have the number, I think 28 to 30 million units is what you're targeting. Let's focus on a couple of other segments. TV in the first quarter, it was under some pressure. What is the volume target for the TV segment? And also refrigerators, I think you're doing 80,000 units per month. You could correct me on that number. What do you end this year with on both TV as well as refrigeration?
So TV market undoubtedly is slightly subdued, and we are not expecting any growth in that market as far as the volumes are concerned. We are targeting to close at somewhere around 3 million units. A refrigerator has indeed ramped up very well. In the month of August, we clocked a figure of 92,000, and the facility has reached almost 95% of its capacity in its fourth month of production itself. So in that, we have a very, very positive traction.
What is the current capacity? We're looking at adding capacity out there. Given the fact that you're already at 95%, I think it makes sense. So what is the current capacity and where is it headed?
So immediately we're going to ramp it up to almost 1.6 million from 1.2 million. And subsequently, the number crunching is happening to ramp it up to 2.2 million.
All right, Mr. Lal, we'll leave it there. Thank you very much for joining us and running us through some of your plans in the IT hardware space and, of course, some of the other areas as well. I think we have the management of Mahindra and Mahindra now joining in. August auto sales numbers have come in above estimates, driven by SUVs. Commercial vehicle segment witnessed sharp rebound month on month, but tractor sales remain a bit sluggish. But we've heard that from M&M on the tractor side, being a bit slow. We have Vijay Nakra, President, Automotive Division at Mahindra & Mahindra joining in. Mr. Nakra, good morning. Good to have you with us here. Thank you for your time. Could you, first up, I mean, we looked at the numbers for the month of August, and they are better than what the street was expecting for the auto business. Could you characterize the demand environment a little bit more in detail? What sort of sub-segments within the autos are doing very well? What's the waiting period like? I mean, I think the last time we had Mr. Jejurikar with us, he was telling us that, that has dropped off quite a bit. The waiting period. Just some more details, sir. Go on.
Sure. Thank you for having me on the show, Prashant. Let me first begin by saying that, we've been talking to the media, to our analysts and investors, that we will continue to post, mid-teens double-digit growth, and that's what we've done in the month of August, 16% year-on-year growth with a sale of about 43,000 SUVs. So from an overall auto perspective, SUVs have done very well, exports have done well, our last mile mobility business has done well again. So as a result of that, overall, we've seen a growth of 9% for the overall auto business and 16% for SUVs. I think what's augured well is as we start moving up to the festive season, we are seeing inquiries go up. That's one. Two, also the numbers that we have delivered in the month of August are backed by retail. So it's not just building in stock for the festive season. If I look at the Vahan registration data for the month of August, if we add Telangana, which accounts for about 4 to 5% of all India retail, we're at 98% of our wholesale numbers. And we've actually gained about 2 percentage points share on the retail front. So I also would want to add that the demand for whether it is the Scorpio N, whether it's the XUV 700, whether it's for the recently launched 3XO, I think all of them have done well in the month, and that's helped support both the wholesale number and the retail numbers. As we start getting into festive season, with the elections behind us, with the budget behind us, with a hot summer behind us, and a good monsoon that we've seen, whether it's the 7% plus long-term period average, whether it's the 72% plus reservoir level on the LPA, the 11% higher crop at the mandi supported by great price, and 90% plus of the Kharif land sold for the Kharif crop. I think it augurs well as we get into the festive season.
Okay, all right. So just to clarify the number, you mentioned 2% market share gain, right? Is that across the SUV segment, or were you talking about any specific brand?
Yeah, no. So I just wanted to clarify. When we look at the 2% I mentioned was on the retail side, which is the Vahan registration data, and that's on the PV segment. Because when you look at Vahan data, it doesn't categorize it by cars and SUVs, you are able to get the data for entire passenger vehicles. So if you look at PV as a segment, we've gained 2 percentage point market share on retail. And of course, we are waiting for the industry data to come out for the month of August. So it'll be difficult for me to comment on what's our market share on wholesale numbers for the month of August.
Okay, all right. Hi, sir. Good morning. This is Nigel on this side. Let's focus on the Thar. The 5-door in comparison to the 3-door earlier. How do you see things ramp up out here? If you want to give us a monthly number, I think some on the street believe it could be 10,000 units of the entire Thar family. And the fear is there could be some cannibalization. How do you see this panning out? And what are the rough estimates we should be working with?
Even this was a question that was asked to us even at the launch. And we had clarified to say that, firstly, there are two different categories of buyers. The Thar 3-door is more of the enthusiast off-roader looking for a compact, smaller, less than 4-meter SUV, who's a very different buyer compared to the Thar ROXX, which is more the lifestyler, someone who's looking for more creature comforts, who's looking for a more city-oriented vehicle. So, we positioned the brands distinctly in the portfolio of Thar. As far as the overall numbers is concerned, we had said that we have a capacity of 9,500, fungible between both the 3-door and the 5-door. And given the kind of response we've had, on the Thar ROXX, we've not yet opened bookings, but just to give you a little bit of flavor, for all the kind of content we've put out there on social media and digital on the Thar ROXX, just to give you a flavor, the content has got over 1 billion views, and we've had close to 4 million website visits, a lot of walk-in at the dealerships waiting for the test drive vehicles to come in and for the bookings too.
So the test drive, I think, is on September 14th, and then bookings start in early October, right?
That's right. 16th is when we start test drives, and 3rd of October is when we open bookings.
Yeah, and out of this 9,500 units per month capacity, to break it up, how do you all see it panning out? Maybe 7,000 for the newly launched vehicle and say 2,000-3,000 for the others? Should it be in that, that could be the rough estimate?
I think it's a little early, but the kind of fungibility we have built so far is in that region of 7,000 for the Thar ROXX and 2,500 for the 3-door. I think we just need to wait to see once the people take test drive and the bookings come in, we'll get a clearer picture.
Sure.
But like I said, there are two distinct segments, two different customer profiles with two different value propositions.
I wonder if at all Nigel's buying a new one, whether he'll go for the Thar or the Thar ROXX. I wonder.
Surabhi, since you got me in this conversation, I'll tell you what, I think the vehicle is absolutely amazing. And at this stage of my life, I would be happy with the 5-door.
But earlier it would be the Thar.
Yeah, I mean, need to work on how do we achieve it. But brilliant vehicle, and congratulations on that. But I think shareholders want to listen to that.
No, absolutely, sir. So we've discussed a lot of the good, which is SUV. I mean, that portfolio is just booming along for you. But just a word on the other segments. On the tractor side, and I remember we had an earlier conversation with Mr. Jejurikar, I think just about 2 months back or so. The talk was about a sequential recovery and improvement. Now, I understand that things can be patchy. It's not a straight line. But give us a sense. I mean, at a time when monsoons have been very buoyant, there's talk about a lot of rural recovery. Tractor sales were flat year on year, just 1% growth. And they were actually showing a sequential dip of almost 20%. What on tractors?
I just wanted to clarify that Hemant, who's the president of the tractor business, is the right person to answer that question. I would refrain from answering that.
Okay, fair enough. Sir, a word on commercial vehicles then, because that's where also we're seeing flattish trends continue. We were discussing this with a guest earlier on the show as well. Where we are on the CV cycle, on the light CV side or the medium CV side as well. What's your sense?
So just to give you a very quick flavor on that, you're right. If you look at the small commercial vehicle as a category, there has been marginal degrowth year on year. But the good news for us is we've outperformed the industry over there too. We had marginal growth YTD, and we've gained market share both on the wholesale and on the Vahan registration front. We today have 51% market share in that segment. I think a couple of reasons. There's always a lag between the rural revival and rural performance and the small commercial vehicle category. It's like I said, the good news is monsoons have been good. All the data on monsoons show high confidence. The crop sowing is showing high confidence. So with a little bit of lag, we believe the small commercial vehicle category will pick up as we go forward. And as we look at the festive season, it is looking better than what it has been in the last couple of months.
Got it. Just one quick point, Mr. Nakra. I think you're still on track to launch your sort of EV models from the first quarter of calendar 25?
Yes, that's very much. We're well on track. We are well on track.
Okay. And there was this news item with regards to a tie-up with Skoda as well, which, again, I think that was on the EV side. Was it?
I think I think we had put out a statement on that saying that, we would not be commenting on speculations. Okay. I think earlier we had put out our association with VW as a group in terms of sourcing components for our EV platform, the InGlow platform. And that's where we are. That's where we are.
Okay. Got that. So first EV by first quarter CY 25, and I think the guidance is 7 new battery EVs by 2030.
That's correct.
That's what you put out earlier. All right, I think we'll leave it there. Thank you very much, Mr. Nakra, for joining us and running us through a fair bit of perspective on the auto business as far as Mahindra & Mahindra is concerned. The market is holding up about 80 points. So we are nicely above the 25,300 mark. Guys.
Okay, well, the market's holding up. We have to take a very quick break. At this point in time, we'll come back on the other side and then we'll be in discussion with the management of MedPlus Health Services. We'll talk about the company's business outlook.
It's not about profitability today.
Yeah.
It's about, do you have, because, break-even-ish is not what people are betting on. They're betting on, can you generate 300, 400, 500 million dollars of free cash flow in like a reasonable period of time. And so once we see that inflection point, we'll say, that's the right time to do that.
I know you're doing the rounds of the investor conferences, Aditya, at Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, fortunately, there is excitement. I think, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, one thing I'd say for sure is that, meeting the ecosystem 2021, when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics for every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations, and we've really been excited about the way the public markets not just like understand our business, and I think obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of the mechanics of this business financially, but more importantly, the value for customers
and a growing conviction in.
Welcome back. You're with us on Bazaar Morning Call, and this is Corporate Radar. So it is time to connect with the next company on our radar. MedPlus Health Services is on the radar to talk about the company's business outlook and the plans going ahead. Of course, the expansion that they're looking at as well. That's what we're going to be focusing on, as well as, of course, the growth in their pharma sales. They have given around 20% revenue guidance for the current financial year. So to talk about all this momentum, let's go across to Mr. Gagari Madhukar Reddy, MD and CEO at MedPlus Health Services. Mr. Reddy, let's talk about that guidance. I mean, the growth that you're envisaging, 20%, or just tell us so far into the second quarter, how are things shaping up and how your different verticals are performing?
Sure. As far as the growth is concerned, I think we'll probably be around the number which we have guided to. Things are, shaping up quite well. The only thing which, I'd really want to focus on right now is the fact that our private label continues to grow. And as you know, medicines are an area where private label has an almost unlimited kind of growth potential. We can talk more about this.
All right. Hi, Mr. Reddy. Good morning. Good to see you. When, MedPlus, brand and private label, I think together it's around mid-teens, right, of your total mix. Could you tell us where do you see this number headed and what kind of growth number are you, targeting for the current year?
Sure. So on the private label side, if you look at the volume only, 15% of all sales today comes from MedPlus brand of pharmacies, our own products out there. Now, while, it looks fairly high and people would tend to, say that in retail, you could do a private label up to 15, 20 or 25 or max, max it out at some number like that. I want to point out one thing. In pharmacies, at least across the world, in places like Walgreens and CVS and all, 90% of what they sell is generic. So 90% of what they sell is actually their own, of their own make or of what they actually brand as their own product out there. The reason why, this is so high in, things like medicines is, unlike a FMCG, where a store brand can have a private label, and some people will take it because it is priced slightly lower, but a lot of the people will basically just continue to go with the brand, or at least most of the people will continue to go with the brand because they all believe that the brand would have some secret recipe, some fragrance, some kind of, a secret ingredient which makes it slightly better. On the other hand, when you come to medicines, a 650 mg paracetamol is 650 mg paracetamol. There's actually no two ways of, interpreting it. So actually speaking, brand has no, meaning at all when you come to this. You either a patented drug. If the patent is over, then everyone is allowed to make it. Anyone has got a good factory can make it. So there's absolutely no difference from one telmisartan 40 to other telmisartan 40. So as long as, the product is made in a decent factory, people will eventually all switch. In US, it is as high as 90%. Where we are today in MedPlus is that 15% of our overall sales comes from our brand, but you have to take it as 15 on 80 because only 80% of what we sell is medicines. So you could almost say that 19% of all the medicines we sell today is our brand. And I see, us growing slowly quarter on quarter continuously.
And you told us that you provide between good morning, sir, Prashant here, 15-80% discount, right, on these compared with other labels, but still you make realizations are better. But to that point, sir, that there is no difference and you compare it to FMCG, where there is a difference. Unfortunately, there's I see it within my circle and, friends and family, even for simple products, simple medicines, many go for a brand because, it's about trust, etc. Unfortunately, that is also a big issue and it is not, I don't know if you would agree with that. Go on, yeah.
I completely agree with you, Prashant. The reason why we are having this is because, unfortunately, while we have a great regulator and everything else, not all our factories are guaranteed to produce the best quality product out there, right? Hence, you would want to pick up a product from a good company because you know that it is being made the right way. Now, earlier, before we had a chain like MedPlus, or, because we didn't have anything else, the proxy for quality would only lie with the name of the manufacturer. Now, given that we have the size, we have 4,500 stores, we are as large or if not larger than a lot of the smaller companies out there, we guarantee people and we can stand by the quality of the product. I see no reason why people will eventually not slowly shift. See, the casual purchaser, the guy who comes in out there and says, okay, I want something for my headache, cough, cold and all, is probably not really thinking too much about, taking a non-brand because the value which he is actually paying really is not very high. So he's not really looking to, differentiate between brand and non-brand and try to save any money. But the customer who's coming in out there buying his medicines month on month and he's spending anywhere between 1,500 to 3,000 rupees, for him it's a pretty large expense. He has the time, he has the time to basically look at what we, tell him and, compare it, and over a period of time, get conviction on it. And then go for a product like ours, because then he's basically going to get a discount of 50 to 80% discount. Pretty significant saving. And that's the reason why, we have gone from, let us say, we actually launched in the end of June in Telangana. And after that, we went across, and only in October did we actually launch across the country. In less than a year, we have actually managed to reach 15% share of our overall pharmacy medicines we sell.
Yeah. So just to complete this point, then you said that this will keep growing in a steady fashion. So what is the number that we can work with, say by end of this year, this number, which is right now about mid-teens or 19, like you described, what will it grow to, and then what does it do to your margins? The fact that these drugs are still being sold at a significant discount to the prevailing market prices, I mean, how does that tie in with the profitability metrics and margins as this private label business scales up?
See, one thing to keep in mind is that the normal brands which we sell also are sold at a huge discount. So this discount is in addition to that. Normally we sell at 20%. So when my 50% basically means 30% extra. But we actually, our cost of, procuring it is much lesser than that. So there is an incremental value, let's say margin to every single private label we sell. So roughly, I would say around 0.13 or 0.12 extra percent for every 1% of replacement by our own brand for a branded generic, we actually make around 0.13 or 0.14% extra. I expect that we can actually continue to grow, not super fast, because as you guys said, people are, it'll take a little while for this to actually register. The early adopters have already come in, and slowly everyone will come. I expect, us to grow no more than 1 or 1.5% every quarter. But this is then a several quarter story or a period of, 8-10 quarters. Our 15%, which we actually have right now, should basically move to around 25-30%.
Okay, fair enough. Let's talk about the
Yeah.
Okay, so just quickly before we wind up, we haven't touched on the diagnostics business, where the good news is that at the EBITDA level, you have now broken even. Just share some projections there, I mean, in terms of revenue and the scale up, and also as you look at profitability, what kind of margin would you want to see that business operate at?
While I'm happy that it is actually broken even and we're not going to be losing any money on it, it is still far from the stage where we really want it to be, honestly. The plan was that this would be a subscription model, and we needed at least 200 to 250,000 people as members. We are now at only 150. So till we get to that number, I'm not really going to do anything more, make any more investments or anything like that in this business at all. Very happy to see the growth, but I think we still need to do a little bit more on selling subscriptions to the B2B side of the market. And that is yet to come. So I don't want to, make any projections right now on that.
Okay. All right, Mr. Reddy. We'll leave it on that note. Thank you very much for joining in and giving us a sense on the business. Well, with that, let's quickly take our eye back to the market, which has had a steady morning of trade so far. In fact, the Nifty only building on gains. 25,300 has been conquered, at least in the intraday action. Mitesh is back with us. Mitesh, good morning once again. So what are the trades now? It's green all over.
It's green, and that's a good thing. And a couple of stocks are doing well. Chambal Fertilizers comes on radar. I think that's a buy with a stop at 525. Look for a target of around 560 to begin with. Maybe we will eventually look at higher levels over here. And on the selling side, after a long time, is Dixon Tech, because it's showing signs of a corrective pullback. So keep a stop about 12,900. Look for a target of around 12,000.
Got that. We'll take a quick commercial break here. Just a quick word on Uno Minda, Mitesh, if you want to just sort of look at that one for us.
Yeah. So Prashant, very good continuation pattern today. It opened with a mild gap up from Friday's high and has seen a continuation. Typically, this should lead to a good uptrend. So if today's low or just a few points below today's low could be a stop loss, which is about 1188 is today's low, and about 1185 can be a stop loss. Then I think the stock in the next about 3 to 4, 5 weeks might head towards levels of 1450 plus. So there's a good trade setup over here.
Got that, Mitesh. We'll leave it there. Thank you very much for joining us and appreciate it very much here on CNBC. We'll take a quick commercial break here. We are back. We'll tell you what's happening in the commodity space. Manisha is going to help us with that. Stay tuned.
Will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we didn't execute, and it's not just Sept, it's all the players in the space that did well. We've really just executed a very difficult business model, and we're getting rewarded for that.
Congratulations. Another round closed today. You managed to get 340 million in a follow-on round at a $5 billion valuation from General Catalyst. This on the back of the money that you raised literally 2 months ago at $3.5 billion. I mean, how do you go from 3.5 to 5 billion in 2 months?
On the round, so simple philosophy on this financing, right? We obviously raised quite a bit of capital. We're a well-capitalized company. But what I say internally is that the number one rule of life is if you've got high quality partners on the table and good capital, you should always take it. And we couldn't be more thrilled to have General Catalyst on board. They are a legendary Silicon Valley investor. This is their first large investment in India since they integrated with Venture Catalyst and brought Neeraj Arora on board.
Yeah.
So we're super excited. And Neeraj has been a personal investor in the company since our seed stage days. In terms of how we went from 3.6 to 4.95-ish over the past 2 months. I mean, look, the company is growing pretty fast, right? So we've grown in that 60-day period since our last financing. We've grown about 20%. Obviously, we're launching a lot more stores, and you might have seen some of the work they were doing. We launched Nasik, Ahmedabad, Chandigarh, and I think the inflection point is becoming clearer and clearer to the market, and the downside is largely protected for because, like I mentioned.
Welcome back. Well, the markets are cruising along quite nicely. And by the way, this at a time when there's a lot of profit taking across Asia. So let's not lose sight of that. India is outperforming today and playing a bit of a catch-up. That's the Nifty. Let's see if it can sustain that sort of an up move. But right now it's time to talk commodities. Manisha is with us in the studio. So let's find out what's making headlines here. Manisha, over to you. What do you have your eye on?
Thank you for that, Survi. I'm looking at the gold prices, and August has been a second straight month of gains coming in for the prices. We are holding above $2,500 an ounce, and it's been a 3% of gain for the month of August coming in for the gold prices. Well, also when you look at the prices, we did see an all-time highs also in the month of August until now. So $2,531 an ounce is what we've seen as an all-time high. From there, as you can see, there's a bit of a profit taking in the Asian markets right now. We're down by $6 or $7, and that's the reason it's come off those 2,500 mark at this point in time. Well, if you look at this year, it has been a very strong one. We started the year with 2,058. We did see it dipping below 2,000 at one point in time in the month of Feb. But since then, it has been a one-way rally, and 2,530 is what we've seen as an all-time high. There have been corrections as the one that we are seeing in the early morning right now, but not too much and not too sharp as well. We have seen prices gain up by 22% in case of this year, and last year was a 12.8%. So we seem to be building up on those kind of gains, especially for gold prices. Interestingly, if you look at the charts since 2017, every year for the month of September, the gold prices have given a correction. So an average correction that you've seen in month of September has been to the tune of 3.5% there. Would be interesting to watch September this time around as well, especially with the US Fed meeting slated for the mid-September with an expectation that we will be looking at that rate cut coming in. So what the markets are working with right now is a 69% probability of a 25 basis point and a much lower probability of a 50 basis points. And this is exactly the reason that you have seen the gold prices go down on some profit taking there. Well, there are reasons that you are looking at support as well. There's geopolitical tension. The global central bank buying has been quite strong. The dollar at multi-month lows has been supportive. And finally, after 2 years of global ETFs looking at outflows, there are net inflows that we've seen come in for the last couple of months. And then the technological advances also have led to good gold buying. Is the reason most of the banks and brokerages are talking about much higher gold prices from these current levels as well. Citi is talking about $2,500 to $3,000 of a range for the next 12 months there. Citi also feels that the global central bank buying would be stronger, not a record that we've seen in the last couple of years, but even for this year, they're anticipating 940 tons to be bought by central banks. And then you have Wisdom Tree talking about $2,585. JP Morgan talks about $2,500 an ounce an average. And you have Bank of America, Goldman Sachs all talking about $2,700 to $3,000 as well. So we're not done when it comes to all-time highs. The markets do believe that this year and the next as well, gold will continue to be in favor.
All right, Manisha, thank you very much for that. So gold is in focus. Well, let's focus on some other stocks which are on the move. NHPC, SJVN, and RailTel. Vivek is here with details on these. Vivek, morning.
Well, good morning. We had highlighted this pre-market as well as to how exactly, some of the PSU stocks, the central public sector undertakings are actually doing quite well. And this has gone ahead. This has made, the department as far as the public enterprises to go ahead and upgrade some of these companies and have given them a Navratna status. Now, what exactly does getting a Navratna status indicate, and what are the implications for that? Number one, CPSEs are granted Navratna status on the back of strong financial performance that we've seen in these companies. Along with that, what they actually get is they get increased financial independence. They can go ahead and form JVs, they can form MOUs, and they do not need approval for projects up to a certain specific nature. Now, along with that, they can also go ahead and invest up to 1,000 crore independently without any central government approval. So, increased autonomy is something that is keeping all of these stocks active in the session today.
All right. Okay. Got it. Thank you very much for that, Vivek. Watching out for all the PSUs which are excited. By the way, that's a pretty neat card that Maruti is offering on some of its compact cars, the Alto and I think even the Espresso, on different models and variants. And you can understand why, because sales have been under a lot of pressure. In fact, even in the month gone by, the sale of compact cars has fallen 20%, while the sale of Maruti's SUVs is chugging along. So clearly that's where the pressure is, and maybe that's where the incentives are also coming in. That's Maruti. Let's quickly move on and talk about Max Financial. Yash is tracking this stock. Yash, morning. What's the news here?
Well, Surabhi, there's a very interesting report which Investec has released on Max Financial Services. They have a buy rating on the stock, and the target price which they've given as a part of their report is about 1,400 rupees a share, which is a potential upside of about 35% to the current market price. And that explains why the stock is in focus. What Investec is saying is that the current valuations of Max Financials are implying a 10-year VNB CAGR of just about 5%. The low expectations is on account of three important factors. The first one is near-term margin headwinds. The second one is the holdco structure, Max Financial Services and Max Life Insurance, which they have. And the third one is open architecture with Axis Bank, which is under pressure as far as the first quarter was concerned. The next point which Investec says is that the guidance on surrender value impact as per their conversations with the management is pretty conservative at this point of time. On VNB margins, Investec expects it to improve in the coming quarters. In the first quarter, of course, the margins were very low. That was on account of high sales of ULIP and the change in the product mix. On the VNB side, that is value of new business, they expect a 6% growth in FY25. Also, VNB growth is expected to improve to about 13% in FY26 as per Investec.
All right. Thank you very much for that. So that's Max Financial in focus as well. I think the market's holding up with about a 60-odd point pop, 25,000, just about 25,300 is where we are at. We'll take a quick commercial break here. On the other side, our special segment, Indianomics. Lata will get chatting with a host of experts to focus on the first quarter GDP numbers, which came in at 6.7%. Stay tuned.
70% of our stores fully EBITDA and free cash flow positive, turning profitable faster and faster.
What does this mean now in terms of expansion? What does it mean in terms of aspiration to move beyond the cities that you currently operate in and expand the dark store network as well as more categories to get into?
Absolutely. So, we are expanding. Like I mentioned last time, we're launching a few hundred stores, across the next couple of months in, not just existing cities in the metro cities, but even in Tier 2, Tier 3 cities. And just to give you an anecdote, right, we launched Nashik last month, right? Nashik is not known to be like anywhere close to a metro in terms of a market.
Yeah.
The stores that we launched there have hit 1,000 orders per day in 6 weeks. It's the fastest that we've ever been able to achieve that. Mumbai, Bangalore, Delhi, took like 3-4 months to hit 1,000 orders per day. Nasky is coming in 6-7 weeks. And the insight really for tier 2 and tier 3 markets is that customers are underserved. There are no real quality online or offline options for them in terms of price, selection and quality, and obviously you're giving them convenience. But when we go into these tier 2, tier 3 markets, customers come and tell us that, hey, I actually couldn't find this selection anywhere else, right? Or I couldn't find this, quality control anywhere else. And so we think we have an even stronger value prop in those markets. And the cost.
So is that going to now be a priority and a focus in terms of expansion? Because as you said, these are underserved markets, and perhaps with the kind of growth that you've seen in Nasik, for instance, is it changing your mix in terms of prioritization?
Absolutely. So we plan to launch, the idea is to launch at least a dozen cities over the next 2 quarters, and then we'll expand from there. But right now we've got visibility launching a dozen cities, and that includes, Ahmedabads, Chandigarhs, Kanpurs of the world, the Vizags of the world, the Indores of the world. So, all of that we're launching over the next 2 quarters, and we'll expand from there. But absolutely. So one, we are expanding geographically. 2, in terms of new categories, I'm glad you brought that up, because, today, one of the big things that, even for this financing that really got investors excited is that, we launched a bunch of new categories last quarter. We're talking about consumer electronics, general merchandise.
Welcome to Indianomics on the all-important first quarter GDP numbers. The first quarter GDP at 6.7 has been mistakenly described as the lowest in 5 quarters. If one looked at the gross value added, or GVA, number at 6.8, it is actually stronger than the previous quarter's 6.3%, that is Jan-Feb-March quarter. And yet, whether it is GVA or GDP, it is not touching the aspirational 7% mark, or the Reserve Bank's forecast of 7.1%. To understand the Q1 growth numbers and the likely trend for the full year, I have with me an elite panel of economists. Joining me are Samiran Chakraborty of Citi, Sonal Verma, the Managing Director, Chief Economist at Nomura Financial Advisory, Abhishek Upadhyay, Senior Economist at ICICI Securities Primary Dealership, and Madhavi Arora, Lead Economist at Emkay Global. Ladies and gentlemen, thank you very much indeed for your time. Samiran, let me start with you. Should we call this a good number? Whether it's 6.7 or 6.8, it's falling short of the aspirational 7%.
Good morning, Lata. I think the way we have looked at this number is that it's the internals of the numbers are slightly better than what we had probably anticipated. There were 2 distortionary effects in this quarter, one from the elections, the other from the heat waves. The election impact primarily would have been felt on the government consumption expenditure, and the heat wave impact on agriculture. Now, if you look at these 2 components only, the government consumption expenditure grew at minus 0.2%, so contributed basically 0 basis points to GDP growth. And agriculture contributed about 30 basis points to GDP growth. Now, for both of them, the historical average contribution is about 30 basis points and 60 basis points respectively. So if you think of some sort of a normalization of these 2 factors over the next couple of quarters, then that gap between the 7% aspirational number that you were talking of and the reported number, that gap could easily be bridged.
Okay.
So our sense is that we should be going back to the 7% print very soon once these 2 effects normalize.
Okay, I'll come to you on when you see that normalizing. But Sonal Verma, we have your report, and you are actually forecasting a lower GDP. You brought down your forecast.
That's right, Lata. We've cut FY25 from 6.9 to 6.7. I'd agree with what Samiran has said in terms of internals being better than the headline, and that some of the effects, particularly government spending, is going to normalize in the coming quarters. But I think that needs to be seen in the context of what's happening more broadly. And there are 2-3 things to keep in mind here. One is, in our view, the urban consumer side is actually slowing. In fact, I'd point out most of the high-frequency data we've got for July and now for August have been weak. Passenger vehicle sales negative. We are seeing inventory build up. Medium and heavy commercial vehicle sales contraction again in the month of August, cement demand weak. So we are seeing signs of softness in high frequency data. We think one, credit growth is going to moderate, and some of the excess consumer demand on the urban side is going to moderate. Second, the big boost to GDP from corporate profitability because of lower input costs, that's clearly behind us. And therefore, GDP growth is likely to be lower and probably closer to GVA growth going forward. And third, I think global demand actually is soft, whether it's China, Europe, or even US on the labor market side. Things are slowing at the margin, and that we think is also going to be a headwind. So while the government consumption, government spending, and agriculture-related activity will rebound, it's going to happen in this backdrop. And therefore, we think it's quite likely that GDP growth and GVA growth remain in the 6.5% to 7% range in the next 3 quarters. So we see it extremely unlikely that GDP is going to be at 7 or higher in FY25.
Okay. Abhishek, on that note, let me come to you. I was pretty elated by the private final consumption number coming in at 7.5% almost. It was just 4% if you take the average of the last 4 quarters. Shouldn't one be therefore banking on better rural recovery leading to a better multiplier effect?
Rata, we think, the 4% private consumption growth in second half last year as well as for full year was understated. Typically, there are measurement issues when you come to estimating the GDP internals. And if you look at the contribution of discrepancies, which was as high as 52% to overall GDP growth last year, that makes it very difficult to really interpret these private consumption growth numbers with any sense of confidence. So we think true consumption growth would have been higher, and you would get that sense if you look at two-wheeler sales, which are up 14% last year, passenger vehicle sales up 22% last year. So with indicators of discretionary consumption doing reasonably well, 4% growth looked somewhat basically an anomaly.
Okay.
So while growth has picked up there, we think this acceleration is also exaggerated.
Okay.
That said, we do see signs that consumption recovery is broadening out. If you look at the social services growth component on the GVA side, you don't get that breakup separately, but if you overlap the government consumption expenditure on the GDP side and view the public administration, defense, other services on the GVA side, you see signs clearly that overall consumption recovery is broadening out. Yes, high frequency data this quarter, last quarter was mixed. Urban consumption seems to have slowed down a bit, but overall theme-wise, with inflation slowing down, with rainfall also recovering from July onwards, we see reasons for cautious optimism on the consumption front.
Okay, that's what I would think, because the PMI data actually has been reasonably strong. I mean, you can squabble about it month on month being here and there. And what about the August two-wheeler? It's really strong, the TVS and other numbers that we have got. It is only CV and which is not showing growth. So can you weigh in on that, Madhavi? Would you agree that consumption actually has recovered and maybe a stimulus for the coming quarters?
Hi, Lata. Perhaps the most encouraging news from the GDP data was how private consumption actually has jumped up. In fact, it converged with the GFCF. And last year, it almost averaged close to around 4%. And the sprint was pretty encouraging when you saw 7.4% in the first quarter. While this is very encouraging, one needs to see this trend sort of sustained, because one thing is there that the quarterly expenditure data is extremely volatile. And as I know other panelists were also mentioning, even as the rural consumption is firming, when you're looking at these two-wheeler sales and FMCG sales, which are now moved by the rural sector, there are clear signs that the urban consumption is slowing. So I think that would be the next lever to watch out for, because while there's a convergence that we're seeing between consumption and even capital formation, we'll have to see whether that continues. For that matter, we'll have to actually reckon the fact that much of the GFCF has been essentially moved by the government capex and real estate. For the corporate capex to fire, especially in the world which is flooded by excess capacity of the Chinese economy, and low demand visibility, it has to be really seen whether we see continuation in GFCF, which goes beyond the government sector. And for that, I think private consumption and exports will have to fare comfortably well for the coming quarters for the GFCF in the private sector to actually fire off.
Okay, got that. GFCF, by the way, economists say that they mean capital formation. Actually, Samiran, can you weigh in on that? You pointed out that government the government expenditure contracted by 0.2% in the quarter under review. But, public administration, that number was high, 9.5% it grew. And as Madhvi points out, capital formation is 7.5%. Even though government spend, we know from the fiscal data, it was 35% lower for April, May, June. So are you encouraged that private capex has picked up?
Absolutely. I mean, the 0.2 number, by the way, is government consumption expenditure, so that does not take care of the capex part. But the capex was down even more, as you pointed out, in the monthly fiscal data that we get. So despite that, if we are seeing this much of investment growth, then either it could be the private corporate side or it could be the real estate side, the household capex. Now, our hunch is looking at the construction sector data that there is a significant increase in the real estate side as well, because otherwise you wouldn't have seen a construction growth of 10.5%, despite some of the internals of the construction sector, some of the proxy indicators not being that good, like cement demand has been weak for the quarter. Despite that, we have seen a very high construction growth. And I will connect that with the household capex. But still, I would say that private capex was holding up. Otherwise, we wouldn't have got a 7.5 kind of overall investment growth.
Okay. Got that. That seemed encouraging to me as well. Sonal, would you be at least convinced that consumption is at least on a recovery mode, as is private capex?
Lata, I think, yes, consumption should, on aggregate do better. And lower inflation itself is actually a big positive on the rural side. So I think what we're basically seeing is a rebalancing under the surface. And particularly this rural recovery theme does have more legs, for various reasons, including lower inflation and better production, for farmers. Urban side, though, I think is likely to soften. It is more discretionary, more sensitive to credit availability, and that aspect we think will soften. But on aggregate, I think inflation coming down itself is a positive for consumption. Private capex side, Lata, I think we need to split it into government, private corporate, and the real estate side. So the government side is where we should see a pickup and a catch-up post-elections. And we did see that in the July capex data from the central government, which was up over 100% on a year-over-year basis. So that component should pick up. The housing side as well, there are still a lot of tailwinds, and we do think housing-related investment will pick up. The private corporate side, though, is where, we would describe it as still quite mixed. I think, yes, capacity utilization is picking up. But if you break that down by different sectors, it's fairly concentrated in a few sectors. And the global backdrop to us does not look conducive for a broad basing of private corporate capex recovery. So a lot of changes beneath the surface, Lata, both in terms of consumption as well as on the investment side.
Okay. Got that. I have to take a mandatory break, but, to what extent is the global slowdown going to weigh down on us? The private consumption having picked up, can it run faster? And how good are the chances of private capex going by the core sector? I mean, steel and cement did very well in the July numbers that we got. All those questions to my panel after the break. The more crucial question on how RBI will fare and how whether GDP will get to 7%. Bazaar viewers, you will get to watch the whole show. After market hours, for you, it's time for Chartbusters.
and even beauty and cosmetics, right? And so we launched all those 4 categories. Effectively in the first quarter since launch, it's already doing today, the run rate is well over 1,200 crores of scale, right? Annualized, obviously. But in the first 4 or 5 months of launching a category, you get to 1,200 crores of scale and growing 15-18% month on month. It's an unbelievable like a vote of confidence in the product market fit. So we're very excited about that as well.
Beyond our schools, I'm happy to share that through Reliance Foundation, we aim to provide world-class early childhood care and education for over 10 million children from disadvantaged communities across India. This program aims to build capacity development models and provide learning resources for students and teachers all over India. Our efforts go beyond academic learning to promote complete development, including social emotional skills, critical thinking, and physical well-being. As part of our work with the Integrated Child Development Services, Reliance Foundation developed and refurbished 100 Anganwadis in Varanasi last year.
Reliance Retail recorded gross revenue of 3,06,848 crores, a growth of 17.8% over the last year. We continued our trajectory of strong profit growth, registering an EBITDA of 23,082 crores, up 28.4% year-on-year, and net profit of 11,101 crores, up 21% year-on-year. At 8.5%, the EBITDA margin continued to show improvements and grew 70 bips year-on-year.
Gujarat Gas zooms nearly 8% following a major restructuring scheme which proposes a merger of GSPC, Gujarat State Petronet and GSPC Energy into itself. Gujarat Gas's gas transmission business will also be carved out and be listed as GSPC Transmission.
SJVN, NHPC and RailTel all climb more than 2.5% after the companies received Navratna status on the back of a strong financial performance.
Indian Hume Piper surged over 8% after the company get a letter of intent of a project worth over 859 crore from the Tapi Irrigation Development Corporation.
Dixon Technologies is down close to 4% after the management tells CNBC-TV18 that FY25 growth will be slow as the company is in phase of ramping up its operations.
And Moil has slipped in today's session after the company has cut prices of ferrogrades of manganese ore and fines by up to 20%. The stock is down 3% this morning.
Hello and welcome to Chartbusters. I'm Nigel and with me is Hormuz. Well, Hormuz, it's a good start to the week. We're trading in the green, though. The Nifty Bank and the Midcap Index are doing a relative underperformance, but all eyes will we be 13-time lucky? The Nifty Bulls are eyeing that record.
Well, 13 is not considered a very auspicious number, but the Nifty is definitely eyeing a 13th day of gains, and it'll be difficult to dig out when was the last time that happened now. But it's been good going for the markets. Then 25,300 on the index. We made a high of close to 25,320, and we are consolidating around those levels now. And as Nigel mentioned, right, 13th time lucky, but the Nifty Bank continues to remain flat. It closed above a very important level of around 51,350 on Friday. It remains around the flat line as we speak, and it needs to cross that 51,500 mark for further upside. And sector specific, of course, the broader markets are not doing too well today. The mid-cap index is down around 0.5%. The small-cap index too trading on the flat line near with a negative bias though. But what's doing well in today's session are FMCG stocks and IT. The FMCG index is holding on, the top gainer today in terms of the sector, so about 1%, and the IT index holding up as well. Well,
that's been the trend, Hormuz, for the last few days, that the large cap has actually been outperforming the mid caps, and that's similar as the scenario that's playing out today as well. But let's get in Shivangi Sarda of Motilal Oswal Financial Services, who joins us on the show. Hi Shivangi, good morning, good to see you. Ben, hope you're having a good start to the week. Tell us what's the trade on the Nifty. Where do you see us head on the Nifty? And if you had a long position, where does your stop loss come in at?
Very good morning, Nigel and Hormuz. Thank you for having me. So, of course, we've seen September has started on a spectacular note. your favorite month as well. But of course, bulls have been making a record high, and we are seeing gradual up move in the index from the last few sessions. The good part is that follow-up buying is still visible, and the entire sectors across board are witnessing buying distribution evenly. So overall, markets are looking quite positive even here onwards, and we can look at 25,500 as the next level that we are looking out for Nifty, and then 25,750 marks. The support comes around to 25,000 levels, which will be an important level to watch out for. But overall, buy on decline starts to continue.
Oopsie.
I guess you have lost the line there with Shivangi. We'll get back, touch base with her soon. But as Shivangi was mentioning, right, the uptrend continues on the index, and there are specific stocks that are doing well in the broader markets. And the three PSUs that I wanted to speak about, we highlighted them in the highlights as well: SJVN, NHPC, and Railtel, all three of them trading with gains of anywhere between 2 to 2.5% in today's session. SJVN, and all three of them, Nigel, are down almost 18 to 20% from their record highs.
Right.
So, and yet it's the kind of run that these guys have seen all through 2023 and through this year as well. That has been a key talking point, and all three of them is seeing a positive reaction to the Navratna status that these guys have received.
And the stocks, actually, the two of the biggest gainers today on the Nifty are the Bajaj twins. Bajaj Finance and Bajaj Finserv. Just take a look at both those two stocks. 2.5 to 3.5% gains is what we're seeing out there. Big up move, and actually those stocks, they started more or less flattish, and they're building onto those gains in the first 90 minutes of trade. So keep an eye out on them. Also, the other couple of stocks that I'm looking at is Whirlpool. Last few sessions have been good for this counter. Today it started off in the red, but Whirlpool has done a turnaround, and that stock currently at the high point of the day. I'll tell you what, by the time we get Shivangi back with us, let's shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that he's tracking closely. Nitin?
Hello, the company that I have chosen for today is Endurance Tech, which is an auto ancillary company. There are a couple of factors that make us upbeat about the company. First, let me touch upon its Q1 number briefly. On a YY basis, it registered net revenue growth of around 15.9%, driven by the India business and the growth of the tooling and the machine component business in Europe. Its EBITDA margin remained largely stable. Now, there are a couple of factors that make us upbeat about the company. First, the outlook for the two-wheeler segment, which is the primary segment this company caters to, is very positive, encouraging all its customers are witnessing significant growth momentum. This is evident by its order book. In Q1, the company secured an order book of around 184.3 crores from OEMs other than the Bajaj Auto, of which 106 crore is from the EV. Coming to the European market, the company continues to outperform the industry growth and growth of 4.6% in the Q1 basis, driven by the sales of its tooling business and the new orders in the machine component business. The management continues to see improvement in the demand in the European business. Endurance secured an order worth around 3.1 million euros in Q1 FY25. In terms of valuation, the company currently trades around 33.8 times FY26 projected earnings, which we believe is largely reasonable. We advise investors to accumulate this stock on any correction or any weakness.
Some ideas for profit for Money Control Pro, Endurance Tech, the stock in focus. Time for a short break. Up next, we have the management of Lakshmi Organic. Rajan Venkatesh, the MD and CEO, and Harshvardhan Goenka, the ED of Strategy and Business Development, will join us to give us the outlook about their FY25 business. Stay tuned, back on the other side.
Witnessed over 1 billion footfalls, and we have had more than 1.25 billion transactions across our channels. Registered customer base crossed a milestone of 300 million customers, nearly the population of the US. With the strong foundation we have built, I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Jio TV Plus brings all your entertainment, live TV, on-demand shows and apps together in one easy-to-use platform. With Jio TV Plus, you get access to over 860 live TV channels with all leading channels in stunning high definition, plus the best content from apps like Amazon Prime Video, Disney Plus Hotstar, all in one place. And we're optimized JioTV Plus for super fast channel switching experience. Switching between your favorite channels is now faster than ever, so you won't miss a single moment of action.
What makes JioTV Plus really unique is how it combines content from over a dozen OTT apps, hundreds of live TV channels, and a vast library of on-demand movies and shows, all with a single login. You no longer need to juggle multiple apps or remember different passwords. JioTV Plus handles it all. Also, a powerful recommendation engine offers personalized suggestions based on your viewing habits, making it easier than ever to find something you will love. And if you miss a show, Catch Up TV lets you go back up to 7 days and catch up on what you missed. With our upcoming Play Pause feature, you will soon be able to pause live TV and pick up right where you left off whenever you are ready.
Back with us here on Chartbusters. Now, Protein eGov is looking to bid for the IT department's project for the development and maintenance of PAN 2.0. Now, CNBC-TV18's Yash Jain caught up with the management to get a fix on the company's prospects and began by asking him about the new business verticals that the company could scale up in. Listen into a slice of that conversation.
Our large assets, which are today mature businesses in a manner of speaking, are in the space of taxation, in the space of pension, and very clearly in the space of provisioning digital identity. So as you said, we are meeting customers, or we have, fintechs around us. Today as an organization, on purely the provisioning of digital identity, we power the entire BFSI sector, right? So that is a very clear, big line of business for us, because we are one of the companies which is uniquely positioned. All 4 facets of digital identity are provided by us, which no other company in the country does, because we provide services as a service agency to UIDAI, which is on the back of Aadhaar, whether it's e-sign, e-KYC or e-authentication. And by virtue of the fact that we issue the PAN card on behalf of the IT department, we also hold the PAN database. So online PAN validation is another service we offer. So when you're completing any digital onboarding journey, you're completing any identity authentication journey, capital markets transaction, transaction in the property space, you're somewhere or the other touching a Protean, asset behind it. So directionally, we are also seeing that while we continue to go strong in contributing to the digital public infrastructure, as you know, we've moved beyond tax, pension and ID and gone into digital commerce with ONDC. We are looking at education and skilling, health, agriculture. We also want to play as a vertical, integration and now contribute at the app level. So the app layer. And that is where we are looking at contributing in the buyer-seller space with ONDC. We built a complete open commerce stack over there. We are looking at, again, doing a lot of stuff on the data stack, where we use our account aggregator license also. And we are looking at credit scoring and similarly areas like providing digital onboarding and lending journeys completely as an end-to-end application.
A lot has happened. A lot of investments have been made in terms of the infrastructure that you wanted to build. Traditional businesses are firing well, and now you're looking to add new businesses, which I am assuming will give you a better margin profile. Keeping all of that in mind and then looking at FY25, what kind of revenue growth should one expect in terms of all these 3 things coming together? And margin profile, as I said, new businesses also getting added. The blended margins, could they go back to those 15-16% levels? Could we get to see that?
So let me break it up on 2 aspects. See, largely our investment has been in people and tech. We continue to remain an asset-light company. Especially what we are doing in the new age DPIs is largely done on open source technology. So consequently, as a result, there is no heavy infrastructure capex expenditure coming in. So you're right, the existing businesses continue to be strong. They have headroom, but they are a source of stable growth.
Correct.
As we look at new businesses, since we are in a way doing a vertical integration, we do see that there's a better margin profile in these businesses because of the value-added services you are giving, which is not at the foundational layer, but at the app layer. And that is where we see the margin profile to be better out of them. But since these are new businesses, I will break it into two parts. We feel that largely our investments in people and in tech have been done. The new products are there, they are out in the market. But to see the monetization coming through, we definitely see it a journey which will take, in the next couple of years to really start showing impact into the margin profile of the company.
Okay. Still waiting for those two numbers from you. For FY25, the revenue growth could be around what levels, if you could guide the street on that?
I can't make a forward-looking statement, as you're aware.
But could it be in the range of about 20 to 25% going forward? Because FY24 was a strong year over a strong base. Could it be similar to those levels, and could margin profile improve from where you were at FY24?
So as I'm saying, we will definitely see new businesses firing. We've launched quite a large number of new products this year. You would have seen us talking about we've launched a full stack of API marketplace on Protean Rise.
Correct.
We've done CKYC, which is again a great need of the fintech sector, the BFSI sector, rather, the bank's compliance and putting up the KYC data. eSign Pro is something we've launched, a complete documentation suite. So all these are basically our interventions which are coming on top of the infra layer. These products will definitely kick in because most of the launches have been done in the last quarter. So we still have 2 quarters to start seeing returns on these. So definitely we see there'll be improvement in margins with these contributing in. And as I said, on the bottom line in terms of the investments, the people and the tech is there. The new products coming in will definitely improve the profile.
Okay, interesting chat there Yash had with the management of Protean. But for the time being, we slip into a short break that promised chat with the management of Lakshmi Organics on the other side. Don't go anywhere.
Making TV work for you.
But that's not all. We're elevating digital entertainment with advanced interactive features. Imagine watching a live cricket match or the Olympics and being able to pull up stats, buy tickets, or switch camera angles, all without leaving the action. That's the power of JioTV+.
JioTV Plus is also designed to be a truly social experience. With integrated social features, you can share what you're watching with friends, join live watch parties, or discuss your favorite shows in real time. This is the future of TV, and we are excited to bring it to your living rooms.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards investing.
Welcome back. Well, as promised, let's get chatting with the management of Lakshmi Organic. But just to alert you, the stock price in the last 1 month or so is up by close to around 15%. However, in the last 1 year or so, it's virtually unmoved. Now, the company has presented an expansion plan worth around 1,100 crore rupees, which will be completed by 2028. They've also guided that they'll double their revenues, triple their EBITDA. So that's going to be quite interesting. Let's understand more. We have Mr. Rajan Venkatesh, the MD and CEO, and Mr. Harshvardhan Goenka, the ED of Strategy and Business Development at the company. Good morning, gentlemen. Good to see you all in. Well, we've looked at your ambitious plans, but the start to the year actually has been quite subdued. So in the near term, that's for FY25, what kind of a growth number should we work with? And what are the margins? Last few years, I can see the revenue number has been more or less flattish, and margins have been in that vicinity of close to 9 to around 11%. So give us a near-term guidance. We understand the 2028 vision, which we'll get into.
Right. So namaskaram. It's a pleasure that I've been able to join this first time for me. And thanks for having Lakshmi in this platform. So let's just take a step back, right? When you spoke about our previous year performance, the one thing we have done exceedingly well is while the building blocks, that is acetic acid and others, which skyrocketed during the COVID period, actually have moderated down. And that's where you see our revenues being flattish, but this is actually backed up by volume growth. In the last financial year, we delivered 20% year-on-year volume growth from our business verticals, primarily essentials. And this was done on the back of continued operational excellence. And that is what we will also charter the journey into this full year, because the efforts we started last year will pay out on this full year basis. In Q1 specifically, we had also had the scheduled turnaround in our essentials business, and that's a large volume business. That's why you saw quarter-on-quarter, our volumes were down by 7% on essentials. And that is also something we have called out. But our specialty business with the product portfolio differentiation continues to drive profitable growth for us. So as we are also chugging towards this financial year, our ambition remains that we will deliver profitable growth and profitable volume growth, both on the volume level and also at the EBITDA level. That remains our focus. But I think you can respect that giving numbers specifically is something we are steering clear of at this point in time.
Okay, we take that note. Essential segment, there was a shutdown, so that's why volumes impacted. So since you're focusing more on volumes than on revenues, tell us what is the volume growth for the year that we should work with in both the segments. Give us at least a band.
So again, just to keep it in perspective, it's not only volume, it's always in the essentials part, it's a lean and reliable business. So you trigger by two elements. One is volumes. That's why you look at asset bases and sweating those asset bases. And then you look at specific margins. So we steer by both levers, neither either one or the other. Right? And that's why last year we delivered 20% year-on-year volume growth for essentials. And the ambition remains again to deliver not the 20%, but a strong volume growth also year-on-year in FY25. That remains the focus.
So would 20 become 25 this year?
No, I think if you have done the entire operational excellence journey, you can only squeeze out so much. I wish we can, but no, certainly that's not the thing, because you can only have efficient plants one time around. But incremental capex and incremental is what we will certainly continue to deliver.
Interesting. Now, I wanted to ask you about your export markets as well, and I'd like Harshvardhan to come in on this one. How is the demand panning out over there on ground within the export markets for the first quarter? It was almost 2/3 of your revenue. Now, how does this mix shape up going into the rest of the FY25 as well? Does it remain as it is, or will there be a change, or you see more of domestic demand coming in for the rest of the 3 quarters?
Sure. Well, thanks for having us, Nigel and Hormuz. So on the export markets and Indian markets, I think Lakshmi has been both 70-30 sort of mix, with the majority share being domestic. But given the entire headwinds in the entire European landscape, we've had to move volumes to other markets, and a lot of that has come in actually in India. So we've managed to move volumes in India, and I'm primarily referring to our essential segment right now, which we will see continue over here. Europe will continue to face headwinds as far as our own outlook is concerned. On the specialties, it's more of a balanced view. We are evenly split between our international and domestic markets, and we see that mix to broadly continue for the rest of the year.
All right, let's focus on a couple of other aspects. Fluorochemicals, that's a very small segment. FY26, what is the revenue number we expect from this segment?
So first and foremost, the focus in FY24 was to get mechanical completion of all our assets. This was a project that was delayed from our lens. So that was the primary focus. So we will see revenues from that asset already coming into play in this financial year, second half of this financial year. And I think we have already laid it out there in a 3-year period is when we focus on the peak revenues from that asset base.
Okay. Well, could you give us a number?
No, I would like to be a bit shy of giving numbers, but we will certainly make this very transparent We have given the peak revenues. We have said peak revenues from that asset base is 200 crores. That will be achieved by the FY27 period, and we will start ramping up in this financial year second half. Hope that helps.
Okay. Got it. All right. So you're talking about doubling your revenue. So my guess is that by 2028, your revenues will be in that vicinity of around 5,600 crores, right?
Yes. Yes.
And what would the margins look like, give and take everything at that point of time? What is the targeted margins? In the past, you've done 12-13% as well. So I ask you.
Yeah. Right. So maybe Harsh, you want to take that? Yeah.
Yeah. No, I think our ambition as we laid out was about 1,100 crores of capex, split evenly between the essentials and specialties. We'd also become very clear with what do both of these businesses and how do we drive them financially. For every dollar invested in the essentials, we will expect an asset turn 3 to 5 and an EBITDA margin between 8 and 12. The specialty part, given it's more capital intensive, will give us an asset turn between 1 and 2, but EBITDA margins would be higher, and given the specialty focus, will be between 20 to 25. So that is how we will split both businesses, which will then eventually lead to the 2.7 to 3 times of EBITDA overall. And the balance, however, given the capexes are evenly split, will broadly remain the same in terms of revenue.
So margins go up to around 13 to 14% since it's going to be more on the value accretive side?
Correct. Correct. Yes. That's the range in which we will be.
13-14% is what we work with, right?
Yes. Yes.
Right. And since you spoke of capex, I want to ask you, what does that do to the debt picture on your books currently? What is the current debt that you guys have? And once you execute your capex plans, what does that do to your debt? And is there a timeline by which you will reach peak debt and then start tapering down from there?
So debt on our books is very, very limited. You've seen our financial statements. We have raised a QIP in the course of last financial year of 259 crores. Cash flow from operations remained very robust. We had a very strong cash flow from operations in the last financial year. So I think these are the levers which will keep us in good stead. Our board is very adamant that we should not over leverage. And so we can go up to 0.4, but I think we will do this only very prudently.
So you'll remain debt free by the end of this capex?
That remains a core focus.
And final question, ROCE, it is only at around 10%. You all see it moving up by 2028?
Yeah, our ambition is that in the past, as our capexes play out, we've actually delivered a 20% ROCE. And given our product mix and improved profitability, we expect to come back to that level.
All right, gentlemen, thanks a lot for joining in. I'll tell you what, the street has been waiting for some kind of delivery. Last few years have had its share of challenges. For 2028, you all are giving very ambitious numbers, and we're going to hold you all to these numbers. Doubling of revenues, margin moving to 13 to 14%, and ROCE at 20%. Let's see how you'll go about it. Thanks a lot for joining in here on Chartbusters. Well, on that note, though, we'll wrap up on this show. Trading Hour comes up next.
Taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage.
Let's go.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBCTV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me today is Vivek Iyer, and it's a good start to the trading week. The Nifty is holding above 25,300. The Sensex has surged past 82,500, and this is the fifth consecutive day of record highs for our markets now. Very, very strong. In terms of absolute points, it's about 78 points. And on the Nifty, it's a 0.3% gain. The big winners are the Bajaj twins, the Bajaj Housing, Bajaj Finserv and Bajaj Finance. ITC is contributing in the way up. HCL Tech is also higher in trade. Hi.
Good morning, Reema. Fifth consecutive day of record highs and 13th consecutive day of gains. It's the first time in over 3 decades that we're seeing. It'll be important to see whether this can sustain and whether markets can continue their march forward. Remember, one particular trigger for the markets moving higher in the last couple of weeks was the very big inflow, high liquidity inflow that we were seeing as part of the MSCI flows. Now that particular event is past. Now we'll have to wait and watch by for fresh triggers. But quite a lot lined up on the show. Let's start off with the top headlines.
Okay, no headlines at 11 o'clock, but let's talk about the auto sales numbers because they're out for the month of August, and it appears that two-wheelers and passenger vehicles have done pretty well. Sudarshan joins in with the details. Sudarshan.
That's correct. So two-wheelers have been the biggest outperformers, and in the four-wheelers, passenger vehicles have outperformed and have done better than commercial vehicle segment. In two-wheelers, all three companies, TVS Motor, Hero MotoCorp and Bajaj Auto have reported sales much better than estimates, and total sales were up in the range of 5 to 16% year-on-year. And with motorcycle segment continues to lead the growth for all the three companies. So starting with TVS Motor, total sales were up 13% year-on-year and 11% month-on-month. And two-wheeler segment, both motorcycle and scooter segment have reported double-digit growth. Hero Moto, total sales were up 5% year-on-year and 38% month-on-month. And here, motorcycle segment has seen a growth of 6% year-on-year and 41% month-on-month. Even outlook given by the company is positive. Company says it expects strong growth in the upcoming festive season. For Bajaj Auto, it was a strong set of sales. All the segments have reported a growth and were up in the range of 5 to 24%. With two-wheeler segment continues to lead, it was up 18% year-on-year and 13% month-on-month. Even three-wheeler segment for Bajaj Auto has seen a growth. It has seen a growth in the double digit. In four-wheelers, starting with Tata Motors, sales have missed estimates, majorly dragged by commercial vehicle segment. For commercial vehicles, except passenger carrier, all the segments have seen a drop year-on-year. CV sales were down in the range of 21 to 23%. For Maruti Suzuki, sales were in line with estimates. Talking about positives for Maruti Suzuki, utility vehicles, majorly SUV, have seen improvement both year-on-year and month-on-month. Even sales to other OEMs remain more than 10,000 units on a monthly basis. On negatives, compact segment, this segment remains under pressure. That is basically starting segment remains under pressure for Maruti Suzuki. For M&M, it was a very strong set of numbers, both on tractor side and as well as the auto segment. SUV continues to lead the growth here. Tractor was slightly below, but it was in line or slightly higher than estimates. Total sales were up 9% year-on-year and 16% month-on-month. SUV sales, which was very strong, gave a growth of 16% on a yearly basis.
Thank you so much for that, Sudarshan. Well, M&M's August auto sales, which have come in above estimates, were driven by SUVs. The CV segment witnessed a sharp rebound month on month, but tractor sales are below estimates. Earlier today, we spoke to Vijay Nakra, the President, Automotive Division at M&M. Listen in.
I think what's augured well is as we start moving up to the festive season, we are seeing inquiries go up. That's one. Two, also the numbers that we have delivered in the month of August are backed by retail. So it's not just building in stock for the festive season. If I look at the Vahan registration data for the month of August, if we add Telangana, which accounts for about 4 to 5% of all India retail, we're at 98% of our wholesale numbers. And we've actually gained about 2 percentage points share on the retail front. As far as the overall numbers is concerned, we had said that we have a capacity of 9,500, fungible between both the 3-door and the 5-door. That's right. 16th is when we start test drives, and 3rd of October is when we open bookings.
Okay, we'll slip into a very short break. We'll come back and focus on the big story of the day, Gujarat gas. That's surging following a major restructuring announced by the Gujarat government, which proposes a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. We'll get to the nitty-gritties of this. We'll also invite Maulik Patel of Equirus Securities on the other side. Stay tuned.
Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back. Oil marketing companies are also surging in trade today. We've seen a decline in crude prices. They were at $80 plus just towards the end of last week, and now Brent is down to $76 per barrel. HPCL leads with a 3.8% gain. IOC is higher in trade, and HPCL too is having a pretty good run. Zee Entertainment has seen a bit of an up move in the last few minutes. Last week, the big news was all the litigation, the overhang of the Sony-related merger was now settled, and Zee Entertainment has been moving. Today, it's up close to about 1.5%. But as promised, let's get to the big story of the day, and that's Gujarat gas surging following a major restructuring scheme which proposes a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. Nimesh is the one who first highlighted it. He's been talking about this in D Street Chatter, and now it's been announced. Nimesh.
Well, Rima, so all the actually Gujarat-based companies are in focus today, and big move in Gujarat Gas as well as in GSPL. As over the weekend, there was a big restructuring which was announced between all the three gas-based companies. So what the restructuring is all about. Basically they've done this to simplify the holding company structure as well as value unlock for the investors in GSPL. Now, if you look at the structure, what have they announced is GSPC and GSPL both will be merged into Gujarat Gas. So that's the first. It's basically in 3 steps. The first step is Gujarat Gas. GSPC will be merged into Gujarat Gas. The ratio has been flashing here. 10 shares of Gujarat Gas for 305 shares of GSPC. The second step will be the merger of GSPL, which is a listed entity, into Gujarat Gas. So again, there the ratio is you'll get 10 shares of Gujarat Gas if you're holding 13 shares of GSPL. And the third step will be after these two mergers, GTL, which is a trading company, that will get demerged out of Gujarat Gas, and the ratio there is you'll get 1 share of GTL if you're owning 3 shares of Gujarat Gas. So these are the 3 steps wherein all the entire restructuring will be done within the Gujarat-based gas companies. Now, what this means, first I'm talking about the existing structure. When I'm saying this will ease the holdings, the entire structure within these companies. The existing holding was like this. Government was holding close to 55% in GSPC, which is unlisted, and then in turn GSPC was owning 37% in GSPL, and GSPL in turn was owning close to 54% in Gujarat Gas. This was the existing structure. Now what the structure changes, there will be two separate entities. One will be Gujarat Gas. In Gujarat Gas, there will be city gas distribution, gas trading, E&P and renewables business, as well as the related investments. This will be one entity, which is Gujarat Gas post the merger. The other entity which I explained is GTL. Now this is a trading business of GSPL, which will be carved out separately and listed separately. This will have the gas transmission and the related investment business in GTL. So that's the structure, what's been proposed now. What are the analysts saying? From a brokerage point of view, Antique actually, a couple of brokerages have raised the target price on Gujarat Gas, and that's the reason why I've seen a big reaction in Gujarat Gas. Antique believes that this is value accretive from day one, and they've raised the target price in Gujarat Gas to 726. Even Equirus believes that it's a well thought merger, and hence they've upgraded the stock to add now, and even they've raised the target price there. So there are some who still have skeptics, something like Jefferies. While they've raised the target price on the merged entity to 530 odd rupees now, but they believe that there'll be some concerns on the margins profile for Gujarat Gas, at least in the near term. So that's some bit of negative view as well as far as Jefferies is concerned. But broadly, if you ask me what has been achieved by this, one, simplification of the holding structure between these Gujarat-based companies, and 2, a potential value unlocking for GSPL, because GSPL holding company structure will collapse, and also going forward GTL will be separately listed, and where you'll get the shares as well.
Thank you so much for the information and breaking down this very complex deal for us. To discuss this and more, Maulik Patel, Head of Research at Equirus Securities, joins us now. Maulik, you've been quite bullish on this particular deal. In fact, you've gone ahead and upgraded Gujarat Gas today. What is your rationale for the same, and why do you say that this is EPS accretive from day one?
Good morning, Rima. Good morning, Vivek. Thanks for having me. See, it's a very well thought merger from one more perspective. Government of Gujarat was looking to do the IPO of GSPC in 2010. Now, with this merger, that GSPC, which was an unlisted company, has become a part of the listed entity. So that is also resolved. Second point is that there were some 7,200 crore of carried losses on the books of the GSPC, which are supposed to expire in this financial year. Now, with merger, that period will be extended, and both the entities, GSPC and Gujarat Gas, their profit will be there to absorb this carried losses. So that is the one reason why it has been EPS accretive from day one. So our FY26 EPS comes to around 37-38 rupees on a pro forma basis, on an extended equity base. But FY27, when the tax credit, this carried losses will go away mostly, the EPS will come down. Another point I want to add that Gujarat Gas, after this merger, will become a second largest integrated gas company in the country after GAIL. So that will attract, and they have a lot of synergies in terms of trading and this one. So far, if you look at, the trading was happening in GSPC, CGD was part of the Gujarat Gas, and the transmission was part of the GSPL. There were a lot of related party transactions between the GSPC and Gujarat Gas. So after this merger, those related party transactions are also not there. The Gujarat Gas shareholders will definitely benefit from a larger entity. the free cash flow of Gujarat Gas, if one exclude the transmission part of the business, will be close to 2,500 crore rupees. Both the companies are currently having a cash on the books of close to around 3,500 crore plus, and that will grow further. So they are adequately funded from an expansion or further any capex that they require to do in the gas infrastructure or in a renewable part.
Sure. Maulik, thanks for joining in. You nicely explained what it means for Gujarat Gas, but if I want to ask you quickly what it means for GSPL as well, and what is the value that you're ascribing to GTL, which will be eventually demerged and listed separately?
So if you look at the history of GSPL, it has always been a very deep value buy stock for us. And one of the reasons was that holdco discount was almost 50 to 70%. So today, GSPL owns 54% stake in Gujarat Gas, and market was not ascribing that value. The stock obviously has run up something in the last 1 week, close to around 25% or so. So after that, the holdco discount has narrowed down to 50-20%. Now, investors could have asked for a little more, that holdco discount should have been zero. But I think this is the best proposition that they are getting it. The demerged entity, GTL, will have two assets. One is the transmission network, gas transmission network in Gujarat. And there are two cross-country pipelines or JV of the GSPL, which is called GTIL and GITL, which is Mehsana-Batinda pipeline and Malwara-Bilwa pipeline. So GTL will have two assets. Plus, they will have close to 1,500 crore of cash in the books, which they are currently holding. That cash will go for their capex. Company has some close to around 3,000 crore of capex to be spent over next 3 to 4 years. So GTL value, in our view, should be close to around 9,000 crore. If you look at from a Gujarat Gas share perspective, which they will get it, probably close to around 100 rupees per share should be the value of the GTL for the Gujarat Gas shareholder. Also, one of the things important is for GSPL shareholders to look at is that the tariff of the GSPL, which was reduced in April 2024, there is some kind of possibility for the tariff revision because they have appealed it to the APTEL and Delhi High Court. So if they get any favorable verdict from that, there's a possibility of further upside in GSPL.
Okay. Maulik, one quick question. Eventually, shareholders in India will have a choice between GAIL and Gujarat Gas. You said Gujarat Gas is going to be the second largest integrated gas player after GAIL in India. How do the valuations between the two stack up, GAIL versus Gujarat Gas? And which one would you recommend and why?
So obviously, GAIL is a much larger entity. In terms of, if you look at the transmission volume, which GAIL does is 130 mmSCMD. GSPL transmission value was around 35 mmSCMD. GAIL do trading of close to 100 mmSCMD. GSPC was doing the trading of around 11-12 mmSCMD. They were peaked at around 18 mmSCMD a few years back. So GAIL is a much larger. Now, but in the GAIL, we have a petchem asset also, which is not creating or not generating enough profit in the last couple of years because of the high spot LNG prices and that. Plus, they have some capex plan or more capex plan in the petchem. So investors have some apprehensions about the petchem profitability, which has been very depressed for most of the players, including Reliance and others, that GAIL is investing more and more in petchem. And so I think probably if you ask me from the thesis is that the spot LNG price will come down in 2026, 27 will go significantly lower because of the global LNG supplies coming up. Both will benefit it. We have also buy rating ad rating on GAIL. But if you ask me today from a longer time, 3 to 4 year perspective, Gujarat Gas has a relatively cleaner structure as they do not have any petchem business into this currently.
Sure. Maulik, lastly, just to take Rima's point forward on GAIL, I was reading with this merger and the demerger of the gas trading business within Gujarat Gas, is that a regulatory requirement that they had to do this demerger? And if so, do you expect similar, kind of demerger happening in GAIL as well? The trading business will be separated and will be demerged. And will that create will that actually lead to a bit of a value unlocking for GAIL shareholders as well?
So there is a concept from the PNGRB regulator. The concept is called unbundling, where your transmission asset and trading asset should be in a different company. The concept currently, if you look at for the GAIL, both transmission business and trading business are part of a similar company. They are both divisions within the GAIL. There were some thoughts at a ministry level and has been in the public domain that that GAIL should demerge their trading business into separate company because it's in a conflict of interest between the trading and the transmission. But today, there is no such regulatory requirement for GAIL to do that. The concept is available in a PNGRB's public domain. It's a regulator's job to do that. But as of now, there is no regulatory requirement for GAIL to demerge it. What we can say that today, because they both are a combined entity, both are part of the same company. GAIL is in a better position. They can leverage that. When they will become a separate, probably consumer will benefit more than what GAIL can benefit.
Okay. Got it. Thank you so much, Maulik, and thank you so much, Nimesh, for joining us and giving us all of those details. Let's now slip into a short break. When we return, we will discuss market technicals with Soni Patnaik and also discuss their top trading bets.
Years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in it.
Welcome back. The big development over the weekend was that SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. So they've updated the eligibility criteria. This means a lot of stocks will be in and some stocks will come out too. Nigel joins in with the details on this. Nigel.
Well, SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. The notable changes in the methodology was on the median quarter sigma order size requirement, which has been increased from 25 lakh to 75 lakh. So that's the first point. Second point is the market-wide position limit has been revised from around 500 crores to around 1500 crores. And finally, the average daily value over the last 6 months has been revised from 10 to 35 crores. So those are the top 3 points. Now, SEBI has also said that once a stock is excluded from the derivatives market, it shall not be considered for re-inclusion for a period of 1 year. Now, based on these new criteria that have been laid out, Nuvama has stated that they understand that the exclusion review can occur in December, and the exclusions from the derivative segment will take effect only in February 2025 or after that as well. They believe that 18 stocks have a strong chance of being excluded from the derivative segment, and the list comes up for you on the screen. Now, moving to the inclusions. Commenting on the inclusions, Nuvama says that close to 80 names could qualify for F&O inclusion. And some of the notable names, they're up for you on the screen. They also add that it seems clear that SEBI intends to include new stocks in the derivatives market, and they believe the new inclusions could be announced in the next few weeks or the next few months. Nuvama also says that Jio, Financial, as well as Zomato, they are the strong contenders to make it to the F&O segment. That could propel them into the Nifty in the next rejig, that's in 2025, though the final decision rests with SEBI. So that's what the changes were and what it implies.
Thank you so much for that, Nigel, for breaking down, what could actually happen once this particular SEBI F&O guideline comes into effect. But right now, we have Soni Patnaik from JM Financial Services, who joins us for a quick technical check on the market. Good morning, Soni. Thank you so much for joining us. What's your take on the market? 13 straight sessions of gains as far as the market is concerned. Do you see further upside?
Hi, good morning, everyone, and thank you for having me on the show. I think today we can see a lot of aggressive open interest additions taking place at 25,300 straddle, and we can see that there's a barely 20 points movement from this level. So on intraday basis, if 25,280 it breaks, then there can be a profit booking in Nifty towards 25,200, 25,150 range. So I think that's the level to watch out for. Nifty has already approached overbought zones. So there's a possibility that from current levels, it can only move another 50 odd points because it's already an overheated zone. It is wise to just wait for a small profit booking or a small decline to initiate any sort of buy on decline or buy on dip sort of a strategy. As of now, it is wise to watch for the 25,280 levels. There's no, we can see no support from Bank Nifty as such for the day. It's only the NBFCs and the OMC space which continues to outperform the broader markets, and apart from that, the rest of the sectors are lacking that momentum to give the indices that support for any new all-time highs for the day.
So buy only at lower levels, maybe 20, the level you said is 25,280, right? And what would your individual stock calls be then?
Certainly. So, Reema, the first would be a sell in Bharat Forge futures, which has seen breaking the 10 and 20 EMA support today. So, one can sell Bharat Forge futures in September series around 1570, keeping a stop loss of 1585 and a target of 1550, 1540 can be seen for near term. The second would be a buy pick in finance space. Like I just mentioned, NBFCs are seen to be outperforming the broader market. So, M&M Finance is a stock which looks like a strong buy from current levels. It is approaching a multi-year breakout at current levels. So one can buy at M&M Finance futures at current levels in the range between 322 to 320, keeping a stop loss of 315 and a target of 332 to 335 can be seen.
Thank you so much for joining us and giving us the stock call, Soni. Let's now take a short break. Up next, we'll discuss the market fundamentals with Somnath Mukherjee from ASK Wealth Advisors.
India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
How IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, you know, when do we see, you know, the right sweet spot of, hey, you know, we're inflecting, you know, we think that we're going to get into, you know, harvest significant amounts of, you know, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, you know, it's a commercial strategic call.
Yeah.
I think that happens in, you know, probably sooner than even I anticipated.
Yeah.
And, you know, we're a fast company, so we take a call to go public, we go public very quickly. But yeah, I mean, I think 2026, potentially even late 2025 is a realistic timeline. And our focus would be build excellence on controls and make sure that you have a high, it's not about profitability today.
Yeah.
It's about, you know, do you have...
Welcome back to Trading Hour. As promised, Somnath Mukherjee from ASK Wealth Advisors joins us now to discuss market fundamentals and its top sectoral picks. Good morning, Somnath, and thank you so much for joining us. At the current level of the markets, you know, how do you see fundamentals playing out? Where do you see valuations, and do you see further upside for your top picks or for your top sectors from these levels?
Sure. Good morning, and thank you for having me. Well, actually, from a market valuations perspective, there is very little in the market that could be termed as value, as traditionally value is known. Most stocks, most sectors are trading at either extremely expensive or insanely expensive levels. So it's very difficult to find spots of value. But where we do find interesting opportunities at a relative value perspective are banks and lenders. Some of the larger banks and lenders have not participated as much in the last 2-3 years in the kind of rally that we have seen in equities. And that's one space where we think that there is a significant amount of relative value possible, especially as some of the COVID-related bumps completely wear off in some areas. Some of the government-sponsored CapEx-related bumps hit roadblocks on valuations in certain other areas. And investors start scrutinizing some of the smaller companies a lot more, given where they are trading today, compared to what they were when the rally started, say, 3 or 4 years ago. So at a relative value standpoint, banking and financial services, especially the lending side of it, looks probably the most value part of the market right now.
But do you like NBFCs also? Could you break that out in terms of lending? Would it be just the housing finance category? In that, would it be the affordable housing? Banks and financials is a very large, specter. Right. So drill it down a little bit more for us.
Right. So banks and the lending part of the financial services. Financial services today has 3 or 4 different verticals, as you mentioned. There's a lending vertical which comprises banks and NBFCs, and then there is insurance, which is the other big vertical, and then there is a third vertical, which is essentially either market infrastructure or market intermediaries in that third vertical. What I am referring to is the first, which is the lending side. NBFCs and banks are both fairly well positioned for slightly different reasons. NBFCs, because a lot of them are funded wholesale, and we are most likely, in fact, we are almost certainly at the peak, or we have crossed the peak of the rate cycle. And any institution that funds itself wholesale would tend to benefit disproportionately as interest rates fall, as market borrowing rates fall. So that is a fairly large tailwind for NBFCs, especially those that are wholesale funded. Banks, because of 2 somewhat different reasons. One, from a valuation multiples perspective, they're positioned a lot better than the rest of the market is. They simply haven't gone up in the same proportion as a lot of the other patches in the market. And second, credit growth remains a secular compounding story. It's not predicated on massive amounts of growth. So the earnings underlying those multiples are not predicated at the sort of 25, 30, 40% year-on-year growth that some of the other patches are predicated on. And that level of credit growth is very visible in the environment. So put both of that together, we think that lenders are a good patch to be in today.
Understood that, Mr. Patnaik. And any preferences within the lenders? Do you like the PSU names? Do you like the private names? Some of the private names haven't really performed. And apart from the BFSI space, which other sectors do you like currently?
I wouldn't be able to talk on specific stocks, but I would say across the board. On the NBFC side, preference is for wholesale funded NBFCs. On the banking side, preference is for the larger banks because larger banks have a greater runway or greater ability to expand balance sheet at the expense of some of the others. As it is, there is an RBI-induced slowdown in deposit growth, and hence have the ability to create that secular compounding a lot better than some of the smaller banks. So I would privilege the larger banks and wholesale funded NBFCs on the lending side. Besides lending, the other space where there could be some opportunities going forward are on the consumer side. Early days yet, if we see a certain amount of pickup as some offshoots of or green shoots of data seem to suggest a turnaround in consumption, especially with some level of pivot towards greater welfare spends coming in from both the union budget as well as the different state budgets across the country, then there could be an incipient opportunity on the small ticket consumption side as well. But that's something that we need to wait and watch and see how they pan out. It's not something that is as obvious and evident from a relative value perspective as lenders are today.
Defense, power and railways, Somnath, these were the big wealth creators. Where do you stand on them right now?
Three very different sectors. Almost all the investable companies in these sectors have the overhang of a terrific amount of earnings growth underpinning the kind of multiples they are trading at. Will they continue to deliver the sort of returns that they have over the last 3-4 years? Who knows? I mean, that's a bit of an open question, but from a pure margin of safety, relative value perspective, they're certainly not where they were 4 years ago, and they're certainly looking a lot less relative value compared to some of the larger companies, some of the, certainly the banking, financial services pack today. Many of the defense companies are discounting, for example, earnings growth that are way disproportionate to, say, what India's growth in defense expenditure is. Just as a broad macro backdrop, defense expenditure in India grows at a roughly the same pace as nominal GDP, about 10-11%. Defense capex, which is really the revenue stream for all the defense companies, also grows at the same pace, if not a little lower, depending on the year, depending on whether there are pension liabilities to be adjusted and so on and so forth. So you're talking about a space where the industry revenue grows at a baseline of 10-11%. Now, obviously, there is a lot of import substitution plays that are on, but many of them would pan out over long periods of time, and it's not as if things in defense are so easy to replace instantaneously, an offshore platform with a local platform. So some of the earnings growth predications underpinning the kind of multiples that defense companies are trading at may not be, justified anymore. Exceptions apart at a sectoral level. So yes, they don't certainly look like having relative value as of this point in time.
Okay, thank you so much for joining us and giving us a detailed view as far as markets as well as your preferred sectors. Time now for a short break. On the other side, we'll be joined by Tarun Sawhney, the Vice Chairman and MD at Triveni Engineering, to discuss the recent move by the government to remove the cap on sugar diversion for ethanol production. Stay tuned.
How IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, when do we see, the right sweet spot of, hey, we're inflecting. We think that we're going to get into, harvest significant amounts of, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, it's a commercial strategic call.
Yeah.
I think that happens in, probably sooner than even I anticipated.
Yeah.
And we're a fast company, so we take a call to go public, we go public very quickly. But yeah, I mean, I think 2026, potentially even late 2025 is a realistic timeline, and our focus would be build excellence on controls and make sure that you have a high. It's not about profitability today.
Yeah.
It's about, do you have, because break-even-ish is not what people are betting on. They're betting on, can you generate 300, 400, 500 million dollars of free cash flow in like a reasonable period of time. And so once we see that inflection point, we'll say, that's the right time.
Well, I know you're doing the rounds of the investor conferences, Aditya, Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, fortunately there is excitement. I think, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, one thing I'd say for sure is that, meeting the ecosystem 2021, when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics of every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations, and we've really been, excited about the way the public markets not just like understand our business, and I think obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of, the mechanics of this business financially, but more importantly, the value for customers.
And a growing conviction in the fact that this business will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we.
Welcome back. Now, sugar stocks have been in focus after the government removed the cap on sugar diversion for ethanol production for the ethanol supply year 2024-2025, which begins on 1st of November. In addition to cane juice and syrup, mills can also use B-heavy and C-heavy molasses to produce ethanol. All this is a part of the central government's strategy to boost renewable energy and reduce the reliance on fossil fuels. Separately, the government also permitted the sale of up to 2.3 million tons of rice from Food Corporation of India. To discuss more on this, we have with us Tarun Sawhney, the Vice Chairman and MD at Triveni Engineering and Industries. Tarun, thank you very much for joining in. How do you read these two notifications? Because you have both sugar and grain-based distilleries. So what is the impact of the first notification on sugar and the second one from grain-based?
Good morning. I think, I speak on behalf of the entire industry in saying that this is a welcome move. It really reaffirms the central government's initiative to boost renewable energy and to focus on energy security, frankly speaking, as far as the transportation sector is concerned. Now, as far as the first item of allowing B-heavy molasses and juice in abundance, I think that will allow the entire sugar sector to divert all the excess quantums of sugar in the upcoming season towards the ethanol program. And so we're going to see a huge quantum, potentially 60% of the total requirement coming from the sugar sector. And I think that is a return to normal. That's the long-term expectation as well, in my mind, from the sugar sector for the ethanol blending program. The second, of course, recognizes the fact that we do have significant quantums of food grain, especially rice, that are available and with the FCI. And a move to actually allow 2.3 million tons to be diverted for the production of biofuel, again, a very welcome move. And I think it signals the fact that longer term availability of rice could potentially happen in the future. And that's a very welcome move.
So Tarun, you've spoken about the industry, right? What about for your company in particular, Praj Industries? Have you assessed the impact?
For Triveni, I have assessed the impact. It is extremely positive with respect to both these moves. So I think that for next year, we can certainly see a larger quantum of ethanol that is manufactured from B-heavy molasses and from the sugar sector per se. Grain, of course, will play a significant role. It will be focused primarily on maize, but I think that this quantum of rice, I would say about 50% of our grain requirement will come from rice as it's allocated from us. Again, it means that higher realizations, or rather higher contribution levels from both these input streams, from the juice side as well as from the grain side.
Sorry, I apologize. I didn't mean Triveni. It was just a slip of my tongue when I wanted to get your thoughts on the impact.
Mr. Sawhney, just Vivek here as well. Just wanted your sense. A couple of analysts have actually pointed out, for grain ethanol manufacturers like you, initially there may not be so much of a boost coming in, especially from the rice piece of the news. What is your sense? And the second question is, how are you now projecting revenues, for FY25 after this particular move? What were you working with initially, and will you be revising any, top line guidance for us?
So I think you've asked a very important question. I think the move towards impacting the bottom line will be slow and gradual, but it's certainly a positive move. Now, as I had mentioned, maize forms the largest segment of the amount of grain that we procure. And maize prices, while they have, or rather the ethanol price from maize, while it has increased, that entire increase has been captured by the trade. So it's really not the industry that is able to expand its contribution levels. With the introduction of rice, I see that contribution level will increase because it is at a fixed price. Even though the price of ethanol manufactured from FCI rice is lower, the margin levels are certainly higher. I also see that this is signaling to me a new change. And I think when we see the new pricing levels for ethanol from all the various constituents that will be announced before the start of the next supply year, the government will look at the margin for producers. So I see margin expansion very much on the cards as we move into the next ethanol supply year. A big and definitive change from the previous year, or the year that will end, the supply year that will end at the end of October.
Tarun, have you heard anything about a possible hike in ethanol prices?
Well, the hope, of course, is that there will be an increase in ethanol prices. The industry, all the various bodies that liaise with the central government have requested a steep revision in prices so that it boosts investment. I mean, as you know, the target for ethanol blending for this year was 15%. And we're looking at the Honorable Prime Minister's target of 20% in just a year from now. For 25-26, the target is 20%. And for us to bridge that gap, there needs to be further investment in capacity building across the nation. And for that, the most important indicator will be an increase in the 24-25 supply year's ethanol price. And I do think that is a possibility. The quantum, of course, is still being hotly debated. But I expect that over the next 6 to 8 weeks, we will have some very positive news from the central government.
Mr. Sawhney, just moving on, we understand that the IMFL business, of yours commenced operations in July 2024 under the premium category. Most alcohol companies have said that this is the particular segment that's actually witnessing growth. So what's the growth outlook here? What is it that you're targeting, and what are your plans to scale it up?
Right. So this is it's a new segment for us. We've launched two fantastic brands, Crafter's Stamp and Matsya, in the premium segment for sale in Uttar Pradesh only. Uttar Pradesh, of course, being a huge state for consumption of premium branded whiskey. In terms of numbers, it's too early to really report, but the growth in the premium segment within Uttar Pradesh has been absolutely outstanding as customers migrate to better quality products, and the infrastructure within the state actually has really remarkably realigned itself for sales in the premium segment. And I think that Uttar Pradesh will be a real trendsetter, actually, when we look towards the better quality products as far as IMFL is concerned. And we're very happy to be part and parcel of this important segment.
We'll leave the discussion here. Thank you very much for joining in. Some statements coming in from the Congress spokesperson about the SEBI chief. They're saying that, she's been a member of, the SEBI since 2017. She got officially appointed as the SEBI chairperson only in March of 2022. But they are, talking about how she has been getting income from the ICICI group over that period from 2017 to 2024. So some allegations coming in from the Congress spokesperson on the SEBI chairperson. We'll try and get more details on that as we progress. We'll slip into a very short break on that note. We'll come back and discuss commodities. We'll invite Manisha Gupta on the other side.
And it's not just Zepto, it's all the players in the space that did well. We've really just executed a very difficult business model, and we're getting rewarded for that.
Congratulations, another round closed today. You've managed to get 340 million in a follow-on round at a $5 billion valuation from General Catalyst. This on the back of the money that you raised literally 2 months ago at $3.5 billion. I mean, how do you go from 3.5 to 5 billion in 2 months?
On the round, so simple philosophy on this financing, right? We obviously raised quite a bit of capital. We're a well-capitalized company. But what I say internally is that the number one rule of life is if you've got high quality partners on the table and good capital, you should always take it. And we couldn't be more thrilled to have General Catalyst on board. They are a legendary Silicon Valley investor. This is their first large investment in India since they integrated with Venture Catalyst and brought Neeraj Arora on board.
Yeah.
So we're super excited. And Neeraj has been a personal investor in the company since our seed stage days. In terms of how we went from 3.6 to 4.95-ish over the past 2 months. I mean, look, the company is growing pretty fast, right? So we've grown in that 60-day period since our last financing. We've grown about 20%. Obviously, we're launching a lot more stores, and you might have seen some of the work they were doing. We launched Nasik, Ahmedabad, Chandigarh, and I think the inflection point is becoming clearer and clearer to the market, and the downside is largely protected for because, like I mentioned last time, we've got 70% of our stores fully EBITDA and free cash flow positive, turning profitable faster and faster.
What does this mean now in terms of expansion? What does it mean in terms of aspiration to move beyond the cities that you currently operate in and expand the dark store network as well?
Welcome back to Trading Hour. Let's now shift focus to the commodity space. Manisha joins us, and today Manisha is focusing on crude oil. Manisha, over to you.
Well, the crude oil prices have put in a second monthly decline for the month of August. We saw 1.5% of decline on Friday, and for the month of August, it's down between 3 to 4% for both crude varieties. September hasn't started on a very positive note either. One, it is about OPEC and allies. At least 8 countries within that community are going to be increasing production, phasing out those voluntary output cuts from the month of October itself. While, of course, there is an OPEC and allies meeting for the month of September, further guidance would come in from that. But at this point in time, the industry believes that 180,000 barrels per day of an increase in production is what you could be looking at from the month of October, and there would be gradual increases phased out in the next 1 year. The second important point is about the China manufacturing activity that has shrunk to the lowest in 6 months for the month of August. So the Chinese demand continues to be a concern. Third is about the consumer spending. The data that we saw come in from US, that number is on the positive side. That tells you that perhaps the rate cut that we are anticipating in mid-September will not be 50 basis points, but there is a 70% probability of it being 25 basis points. So because of this uncertainty, and now because we're looking at a lower rate cut, is something that yet again has led to some profit taking coming into the markets. So from 82 to nearly 78, 79 is how we've seen the crude oil prices to decline as well. Of course, the Libya production cuts is one thing that the street is waiting for, and the other thing is the US crude inventories, which also are at a 2-year lows right now. But the street does believe that 80 to 82 on the higher side right now is a stiff resistance, and the markets perhaps could be trading within that 77 to 82 for the month of September as well.
Thank you very much for that. And the much anticipated Bajaj Housing Finance IPO is expected to open on the 9th of September. Tomorrow, the company will announce the pricing details for Bajaj Housing Finance. But over the weekend, the company filed its RHP. Abhishek is joining in with more details from that. Abhishek, tell us about this one.
Well, Rima, Bajaj Housing Finance is one of the rare AAA rated NBFC that's left in the street. So the IPO, as you mentioned, opens on 9th of September, closes on 11th of September. Total issue size is at 6,560 crores, which comprises of fresh issue of 3,560 crores and an OFS, that is offer for sale of about 3,000 crores. Here, the promoter, that is Bajaj Finance, will be offering shares, to offload and raise money about 3,000 crores. Credit rating, if you take a look, Bajaj Housing Finance, LIC Housing Finance and Canfin Homes, they are one of the few left with AAA rating on the NBFC side or HFC side. So PNB Housing Finance, Aadhar Housing as well as Aptus, they all have AA rated entity. And if you take a look, Bajaj Housing Finance, the asset quality is pristine, one of the best in class. So the gross NPA ratio is at 0.28% for Q1 FY25, which compares to the second best of Canfin Homes at 0.91%. Even their net NPA ratio at 0.11% is the best. The next best being Canfin Homes, which is at about 0.49% as of Q1 FY25. The AUM is at 97,071 crores. So this is the second largest HFC after LIC Housing Finance, whose AUM is at a distance rupees 2.9 lakh crore. So if you take a look at the breakup of their AUM as of Q1 FY25, home loans form 57.5%, LAP close to about 10%, lease rental discounting of 19.5%, developer finance of 11.2% and others at 1.8%. Back to you.
Okay, thank you so much for that, Abhishek. Pharma companies like Biocon, Zydus and Dr. Reddy's are in focus today on the back of fresh news flow. Ekta joins us with all the key details.
Well, yes, I'll start with Biocon, which is in focus as they've received 2 US FDA approvals today. They've received approval for Entresto generic, which is basically a heart failure drug. And they've also received US FDA approval for daptomycin injection as well, which is used for skin infections. Now, additionally, they've received an establishment inspection report for a greenfield API facility at Visakhapatnam, and now the company can basically commence supplies to the US from this particular plant. So that stock is in focus on account of that. Zydus has received a warning letter from the US FDA, and this is for their injectables manufacturing facility. The warning letter was issued to the facility at Jarod near Vadodara, and it does not contain any data integrity violations according to the company. It had received an OAI status, official action indicated status, in July of 2024. So there was an inkling that maybe there could possibly be some kind of escalation. Lastly, Dr. Reddy's is in focus on account of the Chinese regulator suspending the import and sale and use of a drug which is manufactured by Dr. Reddy's. This is after the inspected FTO3 facility of Dr. Reddy's and thought that it did not comply with their good manufacturing practices. So they have basically also cancelled the one status for this particular product for Dr. Reddy's in China, which means that Dr. Reddy's can also not participate in any kind of central drug procurement activities till Feb 28, 2026.
Thank you very much for that. We will wrap up on the show, Trading Hour. On that note, from the entire team that put the show together, thank you for watching.
Categories to get into.
Absolutely. So, we are expanding. Like I mentioned last time, we're launching a few hundred stores, across the next couple of months in, not just existing cities in the metro cities, but even in tier 2, tier 3 cities. And just to give you an anecdote, right? We launched Nasik last month, right? Nasik is not known to be like anywhere close to a metro in terms of a market.
Yeah.
The stores that we launched there have hit 1,000 orders per day in 6 weeks. It's the fastest that we've ever been able to achieve that. Mumbai, Bangalore, Delhi took like 3-4 months to hit 1,000 orders per day. Nasik is coming in 6-7 weeks. And the insight really for tier 2 and tier 3 markets is that customers are underserved. There are no real quality online or offline options for them in terms of price, selection and quality. And obviously you're giving them convenience. But when we go into these tier 2, tier 3 markets, customers come and tell us that, hey, I actually couldn't find this selection anywhere else, right? Or I couldn't find this, quality control anywhere else. And so we think we have an even stronger value prop in those markets. And the cost.
So is that going to now be a priority and a focus in terms of expansion? Because as you said, these are underserved markets, and perhaps with the kind of growth that you've seen in Nasik, for instance, is it changing your mix in terms of prioritization?
Absolutely. So we plan to launch, the idea is to launch at least a dozen cities over the next 2 quarters, and then we'll expand from there. But right now we've got visibility launching a dozen cities, and that includes, Ahmedabads, Chandigarhs, Kanpurs of the world, the Vizags of the world, the Indores of the world. So, all of that we're launching over the next 2 quarters, and we'll expand from there. But absolutely. So one, we are expanding geographically. 2, in terms of new categories, I'm glad you brought that up, because, today, one of the big things that, even for this financing, that really got investors excited is that, we launched a bunch of new categories last quarter. We're talking about consumer electronics, general merchandise, high utility apparel, and even, beauty and cosmetics, right? And so, we launched all those 4 categories. Effectively in the first quarter since launch, it's already doing today, the run rate is well over 1,200 crores of scale, right? Annualized, obviously. But, in the first 4 or 5 months of launching a category, you get to 1,200 crores of scale and growing, 15-18% month on month. It's an unbelievable, like a vote of confidence in the product market fit. So we're very excited about that as well.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D.
Frontline stocks continue to climb slowly higher even as mid-caps take a beating. Energy and FMCG are the key gainers, while consumer durables and metals slip.
Gujarat State Corporation and Gujarat State Petronet will merge into subsidiary Gujarat Gas, while the transmission vertical will be spun off into a separate entity. Analysts see significant gains from synergies, cost and tax savings following the scheme of arrangement.
Bajaj Housing Finance will float an IPO of 6,560 crore rupees to raise 3,650 crore rupees via a fresh issue of shares and 3,000 crores via an offer for sale. The offer will be open from September 9th to 11th. The Bajaj Finance twins, they jump on the news.
Two-wheeler players clock strong sales in August, as do SUV makers in the passenger vehicle segment, but commercial vehicle sales hit a rough patch.
Crude slides after OPEC Plus decides to roll back output cuts over 12 months from October this year. A tempering of expectations on the magnitude of Fed's likely rate cuts also hurt sentiment. Hello and welcome to Halftime Report. I'm Nigel D'Souza. With me is Ekta Batra. Well, Ekta, it's that sort of a day. We're bracing for a record, something that we've never seen. That's 13 straight sessions in the green. And for the time being, we're holding in the green. The screen is not very convincing because you have the mid-caps that are underperforming, but we'll take it.
Well, at least it's not Friday the 13th, Nigel. So let's see whether that takes place or not. But nonetheless, it's just about higher by around 52 odd points for the Nifty, the mid-cap index, which is underperforming at this point in time, so down around 0.3%. We have the Bank Nifty, which is absolutely flat. But we do have a lot of companies and a lot of ground to cover in the next 1 hour. So let's start and kick off the show with the first management on the show today. We have Aarti Drugs. They have, in fact, approved a buyback recently worth around 60 odd crores, and also, they are in focus on account of an antique note which says that API prices have fallen sharply over the past 12 months, and there could be some amount of consolidation in the industry. To discuss this and more, we have Adish Patel, who's the CFO of Aarti Drugs, joining in. Mr. Patel, thank you very much for taking the time out. Well, you know, this antique note was quite comprehensive in terms of indicating that there is a continued reduction in the prices of key APIs. Give us a sense in terms of what you are seeing on the ground, because the quarter gone by was quite weak for you all in terms of revenue. So how much of lower API prices played into the quarter for you all?
Yeah, correct. Based on our feeling, the actual fall stopped in the March quarter. In the June quarter, as far as the domestic prices were concerned, there was hardly any 2% drop vis-a-vis March quarter, June versus March quarter. However, it was the exports where the fall was sharper in terms of selling prices. But that was mainly on the account of the fact that means most of the companies like us, API companies, have an order book of around 2.5 to 3 months. So in March quarter, we were realizing December quarter's prices. So it was in June quarter that we realized March quarter's prices. And that is why there was a downfall in prices in the export market.
Okay, so what is the current trajectory in terms of prices right now for APIs, and has it settled, and what does this mean for business for you all?
Yeah. So the antidiarrheal segment, antifungal segment, and antibiotic segment as well, the prices are stable since April. Means it is not moving. Yeah, definitely there might be some input price variation for a certain product, and based on that, the selling prices of that particular product might change. But on a portfolio level, we are not seeing any price variations in domestic market for the API since April.
Hi Adish, good day and good to see you in. This is Nigel on this side. This buyback news, the street liked it, but don't you think it's a very small one? You could have done a little larger one.
Yeah, actually, we used to do steady shareholder payout every year, and our company policy is that around 25% plus minus 2% shareholder payout we always do. So we thought that right now there was an opportunity to do it before 30th September. So we thought that we will upfront it. So basically what we are seeing is that for the last 8 years, whatever the profits are there, it will be around 26% of the total PAT. So very much in the company's policy book, according to the company's policy book.
So in lieu of the dividend and ahead of that regulation coming into play, you thought it's a good time. Got the rationale with regard to the buyback. I was just wondering whether you could have done a larger one, but I'll take that reply. Let's focus on business then. You know, you started off the year on the back foot with the degrowth in the first quarter. But for the year, you were looking, I think, at a 10% growth in revenues. Do you stick to that for FY25? And also, if you could give us, what is the margin trajectory from here?
Yeah, that's a very interesting question, actually, because definitely when we started the year, we thought that around 14-15% volume growth and around 7-8% negative price variation. And according to that, based single high-digit revenue growth we will achieve for FY25. But based on the first 5 months, definitely there was quite a slowdown in terms of purchase by the formulation. The government tenders across the globe was very low. In fact, we got some sense from our export managers that right now the inquiries are picking up for the export market. So from here onwards, the volume growth would be good. But then because we had bad first 5 months, the overall FY25, we would like to revise down the revenue growth as far as value is concerned in low single digits.
Okay, so when you say low single digits, it's up from, say, 1 to 5%.
Yeah, correct.
Okay, what would that mean for margins? Because you did around 11 to 11.7% in the previous quarter. Based on what you are anticipating when it comes to, say, growth as well as inquiries picking up, what are you anticipating on margins?
Yeah, so the margins definitely, one more impact on margins was because of the new greenfield project which just went online for the dermatology project. Obviously, we are having a little bit of teething trouble in terms of scale-up batches. Nothing to do with the process. It is just the physical properties of the material which is causing a bit of problems, but it will get sorted in a month or two. So once we scale up that, and also the demand from export will come back. We are expecting it to come back. Already we are seeing it. So we are hoping that the outgoing quarters, like December quarter and March quarter, we should be able to cross 13% EBITDA margin.
13% EBITDA margin. All right, let's focus on a smaller part of your business, the specialty chemical segment. Oh, there you're going to run rate, I think, of around 25 crores per quarter. But I believe that you're expecting a sharp jump over year in revenues. So for FY25, FY26 on an annual basis, what should we be looking at from this segment?
Yeah, so FY25 would be a very short time to look at because our second greenfield project will be just going online in next coming quarter. It's almost there. But for the next FY26, we hope that, almost anywhere between 50 to 100% increase in the sales of specialty chemicals.
This year, you're going at a run rate of around 100 crores approximately per annum, if I take 25 and annualize it. So you should end in the vicinity of around 100, 110 crores. So for the following year, since you're saying a 50% jump, we should look in the vicinity of around 160 to 200 crores, doable?
Correct, yeah.
Okay, so you're not anticipating that 50% growth to come in based on what you indicated in your conference call, which would be predicated on a recovery in second half?
Yeah, so probably the jump might be there, but we are just being a little conservative on the estimates, looking at the current market scenario.
Okay, all right. You also have this 4,000 crore revenue guidance by FY27, and you all have said that you all are on track to achieve it as long as you're assuming current prices. Right. Are you on track to achieve it?
It will be slightly difficult. FY27 would be like, means after this year, two years more. But definitely we will cross, we will end up somewhere between 4 and 4,500 crores by FY27.
So you are sticking to that guidance then?
Yeah, between 4 to 4,500 crores, yeah.
Okay, all right. And your debt as of the last fiscal year was around 560 crores, but you've got some capex plans that you're putting on. So how does this number shape up? Will you reduce debt from here, or because of the capex, do you see it increasing?
So the new project capex we are doing with term loans as well. But overall, there are strong internal accruals also. So last quarter, the debt to equity ratio was in fact quite low, around 0.4 by the end of June quarter. And we don't expect that the peak debt to equity will go beyond 0.7 or 0.75, considering the buyback, capex and everything. But that will all just be for a short while, and again it will start going down.
Okay, your export APIs, that was what was sluggish in the previous quarter. Where does that stand in terms of a demand pickup now, and how does the domestic demand look like compared to that?
Yeah, so domestic demand has been good, except for one antibiotic product, which is not having a demand, and that is quite a significant product for us. But other than that, rest of the portfolio is doing quite well. In fact, the good news was that a lot of export countries, they have started opening up the government tenders, and in turn, there will be a lot of API demand for the exports. So it will look quite good in the second half of this financial year.
Okay. All right, Adesh, thanks a lot for joining in and filling us in with all of those details. So the market is still a little bit sluggish. That's why you revised your near-term guidance downwards. But you're saying for 2027, that 4,500 crores of revenue guidance is well and truly on. For the time being, the stock has moved a little bit lower, but the management sounding optimistic about the next few years. Near term, there are some headwinds. Well, let's slip into a short break. On the other side, we'll put the spotlight on Gujarat Gas Restructuring Scheme, which proposed a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. Stay with us.
Are spent on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence. I am thrilled to announce the Jio AI Cloud welcome offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line?
Welcome back. Well, it's been a good amount of traction for the Bajaj twins. We have Bajaj Finance as well as Bajaj Finserv, which is gaining. And remember that on a month-to-date basis, both these stocks have done quite well. So it's not only today that we're talking about. You're talking about just about the start of September. So let's, it's been a good rally that they've seen. So Bajaj Finserv is up around 4% today and Bajaj Finance up around 2.7%. On a year-to-date basis, if we look at that, it's up around 10% for Bajaj Finserv and Finance, which is just about flat on a year-to-date basis, but seeing good amount of traction today. But let's move on. The big story that we're tracking today is Gujarat Gas, which has zoomed nearly 8% following a major restructuring scheme, which proposes a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. Nimesh has been tracking the story, and he had an inkling all the way a couple of weeks back on this. But Nimesh, over to you.
Well, thanks, Ekta. So, a very interesting restructuring which was announced over the weekend within Gujarat Gas, Gujarat GSPL, as well as GSPC. Now, essentially, this scheme of arrangement has been largely been proposed for simplifying the structure as well as value unlocking for the shareholders as well. So, when I mean simplifying the structure, let's look at the structure first. What is Gujarat Gas currently? I mean, what not done approved is merger of GSPC into Gujarat Gas, GSPL into Gujarat Gas, as well as demerger of GTL. Now, if you look at the existing structure of the holding, Gujarat government holds a majority stake in GSPC, which is unlisted, and then okay. Now, first talk about the share swap ratio for Gujarat. So basically, a merger between GSPC and Gujarat Gas. The ratio is 10 shares of Gujarat Gas for 305 shares of GSPC. For GSPL, which is a listed entity, you'll get 10 shares of Gujarat Gas if you're owning 13 shares of GSPL. And after the merger, there will be a demerger of the trading business, which will be called GTL, and you'll get 1 share of GTL for 3 shares of Gujarat Gas. So that's the structure. It's a 3-step structure which has been announced. Now, as I said, it's largely been done to dismantle the holding structure. What is the structure currently? Gujarat government owns 55.6% in GSPC, which is unlisted. Now, GSPC in turn owns 37.5% in GSPL, which is a listed entity, and GSPL in turn owns close to 54% in Gujarat Gas. That's the holding structure currently. After the restructuring, there will be two separate companies which will get listed. One will be Gujarat Gas. Now, that will hold the city gas distribution businesses, the gas trading, E&P, and the renewable business, and the related investments. So this will be one entity where all the companies will get merged into. The second entity will be GTL. Now, that's the trading business of GSPL, which will be carved out as a separate business and list separately. Now, GTL will have the gas transmission business and the related investments, including the cash as well. So that's what the restructuring will look like. Two businesses, Gujarat Gas as well as GTL. Now, what our brokerage is saying as far as Gujarat Gas is concerned, couple of interesting reports. Equirus today has actually upgraded the stock to an add and take as a target price of 726. They believe that the merger is value accretive. Even Equirus had put out a note on Gujarat Gas. They actually upgraded the stock to an add with a target price of 667. And they believe it's a well-thought merger. And post the merger, Gujarat Gas will become the second most, second big company in the gas trading space. So that's broadly what the analysts are saying. In fact, Jefferies was slightly negative on the stock, but post the merger, they believe that the fair value could be close to 513. But they still believe that earnings could be volatile and there could be some impact on the gas margins post this merger. So mixed view from analyst point of view, but the stocks are reacting pretty hard. I guess the two big takeaways: one, it just simplifies the holding structure between the Gujarat Gas and GSPC and GSPL, and two, a bit of value unlocking for the GSPL shareholders.
Okay, all right, Nimesh, thanks a lot for that. Well, auto sales numbers for August as well are in, which shows the two-wheelers and passenger vehicles have done well. Sudarshan joins us to break those numbers down for us. Sudarshan?
That's correct. So amongst all these segments, two-wheelers have outperformed. In the four-wheeler segment, passenger vehicle segment has done better than commercial vehicle segment. In two-wheelers, all the three companies, TVS Motor, Hero MotoCorp and Bajaj Auto, have reported sales. Those were much better than estimates, with total sales coming in the range of 5 to 16% year-on-year. And in the segment-wise, motorcycle segment is the one segment which continues to lead the growth for all the three companies. Starting with TVS Motor, total sales were up 13% year-on-year and 11% month-on-month. Two-wheeler segment, that is motorcycle and scooter, have seen growth in double digits on year-on-year. Hero MotoCorp, total sales were up 5% year-on-year and 38% month-on-month. Here, motorcycle segment was up 6% year-on-year and 41% month-on-month. For Hero MotoCorp, even outlook is positive. Company says it expects strong growth in upcoming festive season. For Bajaj Auto, it was a strong set of sales. All the segments have reported growth, and growth was coming in the range of 5 to 24% year-on-year. Two-wheeler segment continues to lead the growth for entire segment. That was up 18% year-on-year and 13% month-on-month. Even for Bajaj Auto, even three-wheeler segment has seen growth both year-on-year and month-on-month. In four-wheeler segment, Tata Motors sales were much below estimate, and that was dragged by commercial vehicle segment. In commercial vehicles, except passenger carrier, all the segments have seen a drop, with CV sales seeing a fall in the range of 21 to 23%. For Maruti Suzuki, sales were almost in line with estimates. Talking about positives for the sector, utility vehicle, that is the SUV, have seen growth both year-on-year and month-on-month, and sales to other OEM remain more than 10,000 units. Negative compact segment, that is the starting segment of the company, remains under pressure. For M&M, sales were much better than estimate. SUV continues to lead the growth. Tractor sales were slightly below estimates or almost in line. Total sales were up 9% year-on-year and 16% month-on-month. SUV sales remain healthy with a growth coming at 16% year-on-year.
Okay, all right, Sudarshan, thanks very much for that. In fact, M&M's August auto sales, which have come in above estimates, was driven by SUVs. The CV segment witnessed a sharp rebound month-on-month, but tractor sales are below estimates. Earlier this morning, we did speak to Vijay Nakra, who's the President Automotive Division at the company. Listen.
I think what's augured well is as we start moving up to the festive season, we are seeing inquiries go up. That's one. Two, also the numbers that we have delivered in the month of August are backed by retail. So it's not just building in stock for the festive season. If I look at the Vahan registration data for the month of August, if we add Telangana, which accounts for about 4 to 5% of all India retail, we're at 98% of our wholesale numbers. And we've actually gained about 2 percentage points share on the retail front. As far as the overall numbers is concerned, we had said that we have a capacity of 9,500, fungible between both the 3-door and the 5-door. That's right. 16th is when we start test drives, and 3rd of October is when we open bookings.
All right, time to slip into a short break. On the other side, we'll get chatting with Aditya Agarwal, Head of Research and Investments, who will be joining in with some trading strategies. And we'll also get you an update on the derivatives market. Don't go anywhere. Welcome back. Well, let's take a quick check on the options data then. We are up by close to around 50 points. Would you pull up some of these strikes? The 25,300 call, which should come up for you on the screen. Directionally, you've got the call right, but there is writing being seen at those levels. So in spite of seeing a 55-point uptick on the Nifty, you're not making money out there. That's telling you that the bears believe that they can defend higher levels from here on. Remember, the PCR has moved to the upper end of the range as well at around 1.4. So that's one data point. Even the 25,500 call out there as well. Directionally, you've got the call right, but there as well, the premium is down. So you're seeing call writing that's coming back into play. The positive, though, is that you want the nearest possible strike to see a fair bit of addition, and that's precisely what's happened. So the 25,300 put, well, that's seeing some bit of addition as we speak. So, that's another data point that should come up for you on the screen. So in the near term, it appears the bears believe that maybe we're at the upper end of this range. Pull up the India VIX as well. The Nifty is higher in today's trading session, but I think we should get the India VIX as well. That has seen a sharp correction down to around the 13.5 odd mark. So normally when you see the Nifty moving up and you have the India VIX as well moving the same direction, maybe there is some cautiousness that's creeping in there. It's an inverse relation normally between those two. So keep that in mind. Aditya joins us to help us out with his trades on the Nifty. Hi Aditya, good day. Good to speak to you after a while. How are you approaching trade first on the headline index, the Nifty and the Nifty Bank, and then we'll get to your stock calls.
Good afternoon, Nigel. Yes, been some time we spoke. Markets have entered into consolidation, I would say. After a good up move that we've seen from 24,200 odd levels, it's been a one-way rally for the Nifty. Bank Nifty, unfortunately, hasn't been that great. It has underperformed the benchmark index. Nifty, to me, right now does look like little overbought, and then you can see signs of fatigue in the Nifty, especially. And as you mentioned, 25,300 is where you're seeing some bit of call writing as well. So I believe this zone of 25,300, 25,400 will see some kind of a resistance going ahead in trade today and maybe for this week, entire week. And markets can cool off a bit closer to about 25,200, about 25,100. I don't rule that out, about 150, 200 point correction on the Nifty. The Bank Nifty too is locked in a very tight range, Nigel, 51,200, about 51,000 on the downside. Immediate support levels, and on the upside 51,500 to about 51,600 is acting as a hurdle on the upside. So overall, I would not trade the index on the long side, both the Nifty and the Bank Nifty for sure. I would wait it out for maybe a minor dip in the market and then go long. If at all you're looking to go short on the Nifty, maybe look for a short trade with a stop loss just above 25,400 and look for a target of 25,000 to about 25,100. The risk to reward could be just 1:1. I don't see too much of a downside as well in the Nifty as of now.
Okay, stocks?
So I've got a couple of recommendations. Both will be on the buy side because there are sectors and stocks which are outperforming. Look at IT, for example. They've been constantly outperforming, and I think there is still some room left for these IT stocks to continue to go up. So LTTS is something which is looking very interesting to me on the chart setup. It's on the verge of a breakout from a major resistance on the monthly time frame. So I think from here on, LTTS can enter into a new orbit altogether. If you buy at current levels, the immediate targets will be 6,100 to about 6,200 on the upside, with the stop loss at 5,700 on the downside. So that's a buy recommendation on LTTS. The second is Titan. Again, after a good up move, stock went into a consolidation phase. Today it's showing signs of strength in a non-market like this. So I would go ahead and buy Titan for a target of 3,750 on the upside with the stop loss at 3,500 on the downside.
Okay. Okay, all right. Thanks very much, Aditya. We're going to leave it on that note. Thanks, and thanks for joining in and giving us all of those picks. We'll take a short break. But up next, we'll connect with Amira Shah, the promoter and MD of Metropolis, to discuss their business. Stay tuned.
investing.
Welcome back. Well, quiet for the markets overall. We have an advanced decline ratio which is favoring the declines at this point in time. So let's see whether that reverses and whether, Nigel, we manage that 13-day run in terms of gains for the markets. But nonetheless, let's talk about one particular company now. Metropolis Healthcare is the next management on our show. The stock is up over 50% in the last 1 year. It's rallied around 60% from its 52-week low. It reported what was an in-line Q1 FY25 performance, with the company guiding for around 13 to 15% growth this fiscal. We have with us Ameera Shah, the Executive Chairperson and whole-time Director of the company, to talk more about the outlook. Ameera, hi, welcome to the show. Well, let's start with the Q1 numbers. What stood out to me was your Mumbai market growth, which was up around 18% in the previous quarter. This is one of the most competitive markets when it comes to diagnostics. What's taking place there? What's resulting in this double-digit growth that you're seeing in the Mumbai market? And is it sustainable? What are you going to see in FY25?
So Ekta, actually, if you've seen the last, I would say, maybe 4 or 5 quarters, we've been showing the same growth in the Mumbai market. So I do believe that it is sustainable for this year. Look, I think, healthcare is really driven by science, how good you are, what your expertise is. And market competition really doesn't play as big a role, because this is not a pure play consumer business which is driven by price and convenience, but it's really a business which is driven by how good your quality of report is, and of course combining that with great services and appropriate pricing, etc. So I think with the kind of distribution we're building, the kind of approach we have to the market, as well as the fact that we have a very solid product and service, I think is really what is just leading to this growth. It's just unwrapping and unveiling of the untapped potential that has always been there for the brand.
So for Mumbai, what is your market share currently? How much do you expect it to increase? And if you could just touch upon the competition dynamics in the city as well.
See, I think there's no really third-party information about market share available in our industry. So any number I give you will be just instinctual or our internal calculations. So according to us, we probably have about sort of a 15 to 20% kind of a market share in Bombay as an internal estimate. We do believe that we can take this to a 25 to 30% number over the next few years. And that is our attempt through the B2C as well as the B2B route. In the last few quarters, what's interesting is while we saw a rapid growth for Bombay as a city, on the B2C side, we weren't seeing as good of a growth on the B2B side, because you have to choose between the two for any market. But in the last quarter, what was interesting is we've now also seen the B2B side grow up, sort of growing much better than even last year. So, we are certainly very hopeful about this continuing. I think the competitive landscape is there are, a few good brands in the city, which do have chains, but majority of the market, which is 85% of the market, is approximately, unorganized, or maybe 75% of the market is unorganized. So I think the opportunity to grow, the runway for growth is still large. We are nowhere close to being tapped out or sort of capped in any way. Like I said, the business really grows on the back of how much doctors trust you, how much consumers trust you, and thankfully having a strong brand has been a strong thing for us.
Hi, Ameera. Good day, and always good to see you on the show. Let's talk a little bit about pricing then. I think you'll try to push through a price increase a few months ago. So volumes are back to normal now, and are you trying to push through another price increase?
I think trying to do multiple price increases is unfair to the customer. So no, I think we did one as of January 24. I think that's ample for this year. We did see a marginal dip in volume, the quarter post that, which we think is normal. We have seen, volumes sort of come back to where we expected them to be. And Q2 usually is a better quarter than Q1 anyway. So we're not really, I wouldn't say that volume is a big concern at this point of time.
Okay, so what about True Health and Specialty? Because, those are your key drivers in terms of growth. True Health, which is wellness, was up 28% on a year-on-year basis in Q1. Specialty was up 14%. Give us a sense in terms of what's driving this growth and whether this kind of double-digit growth is going to continue. What are the estimates that we're seeing in FY25?
See, wellness is basically more driven towards consumers, where people who are either well or people who are unwell are basically opting for more bundled packages, saying that, look, if I'm getting bled one time, might as well, instead of doing 3-4 tests, let me do 10, 15 tests at one time. And that wellness, what we are calling, is including the bundled packages as well. So that we are finding as a consumer trend is certainly on the increase. So we do expect to continue to see it growing at a fairly rapid pace, much faster than the regular company sort of growth. So that's one. I think the specialty is a very interesting part for Metropolis, because as probably the leader in specialty testing in India, we have almost 40% of our revenue coming through the specialty route, which really means that doctors, for the most critical illnesses, when you have a stroke, when you have cancer, when you have brain damage, when you have something very significant, you're really reaching out to Metropolis to say, look, I trust their reports in the most critical times, because accuracy plays that important role. And I think we are continuing to see that area continue to grow really well for us, because again, that trust is growing across all markets of India. And for that, your precision, your test menu, your variety of test menu, and we offer about 4,000 varieties of tests. And the precision of the test is very, very critical, because you're really talking about life and death potentially for a patient. So we are seeing both these areas grow very well. And the specialty is not only B2B coming through hospitals, but also coming through specialist doctors who are asking their patients to come to us for testing.
All right, Ameera, with regard to the year, let's talk a couple of numbers then, because a lot of our viewers, shareholders would like to know that. I think earlier you were guiding for 13 to 15% revenue growth. So do you stick to that? Point number one. Point number two is on margins. You're in the mid-20s. That this is the sustainable number, 25% odd margins?
So, we guided for this year approximately, like we said, 13 to 15. We stick with that number at this point of time. And margins, I think we've maintained that this year will be sort of in the similar range. We feel quite comfortable at those numbers. So I think this year, as we know that we've always mentioned that we have about a percentage dilution because of the rapid pace of lab expansion that we've been doing the last few years. And this year is the last year of the rapid pace. We've been doing this from 2021 till now, 25. And from next year onwards, the goal, while we'll continue adding few labs like we used to in 2019-20, maybe 5, 6, 7 labs a year, but the pace of adding 30 labs a year will definitely come down. And the focus will move again back to adding collection centers to really be the feeders that then feed all of these labs. And the collection center network will move into a rapid pace, which is far more asset light and not capex heavy, and does not dilute sort of the margin profile either. So I think we see obviously a very positive outlook for the organization going forward.
So 25% margins is what we can expect as a base?
At this point of time, the number of 25 odd percent is what we would expect for this year. And like we said, there is some margin dilution already happening, which is already baked into this, which will certainly get released over the next period of time. But we'll obviously continue to invest in other areas. So we would like to continue to sort of stick to this number of 25 to 25.5 odd percent kind of a number for the margin.
Okay, all right, Ameera, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Metropolis. That stock is just about lower by around 0.8% at this point in time, sticking to that 13 to 15% revenue growth guidance for FY25, looking to increase market share in the city of Mumbai to probably 20 to 25% in the longer term. We'll take a short break, but we'll get you more on the markets. A lot of stocks in focus. Stay tuned.
investing.
Welcome back. The bears seem to be fighting back. The Nifty Midcap index is at the low point of the day, and the Nifty as well has come off from nearly a 100-point gain. We're up only around 35 points as we speak. So the bears are trying to put in a bit of a fight in today's trading session. But let's move on. In the backdrop of CNBC-TV18's Banking Transformation Summit 2024, my colleague Ritu caught up with Shyam Srinivasan of Federal Bank and Mr. Ashok Vaswani of Kotak Mahindra, and started by asking about KVS Manian's departure from Kotak Mahindra and his subsequent move to Federal Bank. Let's listen in to a slice of that conversation.
It's always great to have colleagues take over other companies, right? Yeah. Because then we are friends, and I'm really glad Mr. Manian got the Federal Bank job. Yeah. Sad to see my old friend go, but it's wonderful to have a friend at the helm of the company, and I wish him very best of luck.
Okay, and Mr. Srinivasan, your gain, what is the word of advice that you'd have for your successor from Mr. Vaswani?
No, I'll tell you, for Manian, the best thing I would like to give as a gift is a superb platform, right? I've always said that we're playing a test match. Yeah. The first 2 tough days we've seen through, he has a great chance to accelerate and build a fantastic bank. We are determined to be the most admired bank. With due respects to my dear friend, we will be the most admired bank. And I think Manian has the opportunity and will make it absolutely the best in the country.
What is the unfinished business you'd like your successor to take on?
This is a long journey, right? We are searching excellence. There's no finish line. So Manian will build it to another level, and his successor will build it to another level. But we're pursuing most admired. And most admired is earned, pushed very hard. And I'm sure he will take the torch further there.
Well, Mr. Vaswani, you've taken over at a time when the bank is facing challenges with respect to the RBI embargo as well. It's been a few months now since April. Of course, in your letter to shareholders, you said it is evident perhaps more needed to be done. How far ahead are you in that journey, to sort of, get out of that embargo, satisfy the regulator? What progress has been made?
So I think we've made very good progress. The teams have been working very hard at it. But ultimately, it's for the RBI to give us the green light, and we're working very closely with them, and fingers crossed, hopefully they'll be pleased with the efforts that we've done.
But so far, what is the impact you've seen? Because, you cannot have new credit cards, onboarding through digital channels. What is the sort of impact we should expect?
So as we kind of talked about, and we've also done at the earnings conference, we've had a certain amount of impact. We quantified that. It's unfortunate. We'll work hard to put it behind us and move ahead.
Well, speaking of credit cards, that's emerged as an area of stress. Last year, we were talking about unsecured credit. Many were brushing it off as something that is the problem of fintechs. And now we're seeing that show up in the credit card portfolio, perhaps even spreading to MFI. How long before we see a sort of turnaround in this segment?
I think it's a little exaggerated. I don't believe it's a systemic issue. It could be specific portfolio for specific companies. I haven't seen any substantial deterioration for the reasons we've always said, right? The way credit is underwritten is materially different than it was a few years ago. So unless you've given all the controls a go and missed everything, you can't see a dramatic deterioration. Yeah, there will be pockets of stress, but within a range, and I don't believe it will be anything of the magnitude that is visualized. And the regulatory interventions that have come in the last 6 months have cooled it off. So I don't believe it will be a material problem.
Well, we're now some time away from just talking about the challenge of NPAs, and now we move from the fight against bad loans to the fight for deposits. Let me just quickly touch upon that because, household savings not going into plain vanilla bank accounts, also looking at chasing other higher yielding assets. Do you expect that to sort of curtail the credit growth because deposit growth of the system also continues to lag?
See, look, first of all, I think all the questions in the conference we are previewing right now. But I think the whole idea is, look, there will be customer demand, and where customer demand comes, things will flow to it. Deposits in its totality is not the issue. It's really the quality or the pricing of the deposit. So we will have to adjust for that kind of thing. But these are cycles which we go through, and I'm sure we'll come out in a good place.
बहुत ध्यान रख के, बहुत केयर के साथ कई सारे सेफ्टी फीचर्स, पैसेंजर एमिनिटीज़, स्टाफ के लिए सुविधा, इन सब को ध्यान में रखते हुए वंदे चेयर कार, वंदे स्लीपर, वंदे मेट्रो और अमृत भारत, इस तरह की 4 ट्रेन्स का जो कन्फिग्रेशन है, इसमें मॉडर्न टेक्नोलॉजी, सेफ्टी, लोको पायलट्स।
Welcome back to Halftime Report. Joining us now is John Reid from World Gold Council. He's the market strategist at Europe and Asia. John, I thank you so much for joining us. And first of all, we have seen all-time high gold prices for the month of August. And would you say that the 25 basis point rate cut has been factored in right now, and the markets are perhaps looking at further development or event?
It's very clear to me that we've seen a lot of expectation of Federal Reserve interest rate cuts come into the market, particularly in the last few months. So the whole world expects the Fed to start cutting rates in September, and for that to be the start of a process that will continue for quarters and maybe the year to come. Now, normally, interest rates, an interest rate cutting environment is very good for gold. And that could be the case, particularly if the US dollar weakens. The only concern that I have is that we've had a lot of anticipation of that in the market already. And high prices have started to have an impact on certain segments of the gold market, particularly on jewelry demand, which we saw weaker in the second quarter already because of high price increases. So I think the market's finely balanced here. First of all, the Fed has to deliver rate cuts, otherwise I suspect we'll see a correction. But even if we do see rate cuts, there may be limited potential for gold prices to trade higher.
John, as you said, that the jewelry demand is a bit of a dampener here, but the world's central bank buying has been quite strong. Record highs actually in the last couple of years. Also, would you now see investment demand increasing? Because you're looking at 22% of gains in gold for this year, and the ETF buying seems to be returning too.
Well, I think you've hit upon the really important topic there, and that is of the purchases by exchange-traded fund investors. Over the last 3 years, we've seen slow, steady outflows of gold held by exchange-traded funds, particularly in North America and Europe. The only area we've actually seen inflows in ETFs recently has been in the Indian and Chinese ETFs, but that's showing signs of beginning to turn around now. If I look at the potential for ETF investors to return to the market, that could be the missing ingredient to see gold trade higher over the next few quarters and maybe the next year or two, simply because they've been absent from the market. Now, other aspects of the market have been really strong, such as central banks, as you've mentioned, and there is some signs of slowdown in terms of central bank purchases this year, particularly after China stopped disclosing increases to its holdings in May. So we will probably see strong central bank buying this year, but not quite as strong as we saw in 2022 and 2023. So something else needs to come to the party. Emerging market investors, emerging market consumers of gold have bought a tremendous amount of gold in the last few years, and most of that strength will continue. But really, we need to now see Western investors return to the market. And I guess the key ingredient for this is going to be interest rate cuts and slowing economies. Of course, if we get a recession, then all bets are off, and I would expect to see gold attract much more in the way of Western investment. But even in a bit of a slowdown, which seems to be priced in at the moment, I think we can see more Western investment buying.
And those numbers clearly seem to be coming in already. What's also your sense, John, on India gold imports, which are at near record high prices right now? Do you see an impact on that number?
I mean, there was no doubt that higher gold prices were having an impact on jewelry demand in the second quarter. But then, of course, the cut in import duties that we saw last month have reignited interest in gold. And from what I understand from speaking to my colleagues in the World Gold Council office in India, plus we're talking to people on the ground here, jewelry demand and purchases from the gold industry is really strong at the moment. And I think that has the potential to not rescue, but certainly reflate the imports such that we end up with a decent year this year again.
All right, so a good number this year again. But when you look at the global markets, John, and there are geopolitical events which have impacted gold prices, what also is your take on de-dollarization debate, and that in turn also has been supporting gold buying, by the way?
there's been no doubt that the geopolitical events have caused short-term boosts for gold, particularly when they have come out of the blue in, against expectations. Typically, though, that benefit that we see in the gold price from an unexpected geopolitical event is fairly short-lived. Look, I'm sure in the background of people's minds when they're buying gold, they are aware that we're in a more risky geopolitical environment, but I don't think it's the main reason why people are buying gold. I think there's other reasons for that as well. And of course, potentially the biggest geopolitical event that you're talking about, that you haven't spoken about, is the US election, which takes place in November. And that's very finely balanced at the moment with the potential for some quite different outcomes depending who wins. One thing that is for sure, though, is that very large fiscal deficits in the United States and a growing stock of more expensive to fund debt is becoming a big issue. And I think this is one of the biggest drivers behind investment demand, particularly from high net worth individuals and family offices around the world who are really getting concerned about the levels of debt and deficit in the United States. I don't see either candidate, when they're successful, changing that trajectory.
Fair point there. John Reed, thank you so much for joining us on making sense of various events around the global markets and how gold really seems to be taking support from all of that and more chances really of gold prices going higher from where we are at this point in time. Thank you as always. And with that, that's all the time that we have on the current show, but Business Lunch will take all the action forward.
फैसिलिटीज़ जो सर्व करने वाले स्टाफ हैं, जो लिनन देते हैं या फिर जो फूड सर्व करते हैं, उन सब के लिए स्पेशल फैसिलिटीज़, ये सब ध्यान में रखते हुए नई डिज़ाइन के साथ चारों की चारों ट्रेन कॉन्फ़िगरेशंस बने हैं। और साथ ही साथ ये मिडिल क्लास की सवारी है, इसलिए अफोर्डेबल फेयर रखा जाएगा, राजधानी के साथ इसको बेंचमार्क करके रखा जाएगा। और ये ओवरनाइट जर्नी के लिए रहेगी, यानी करीब 800 से लेके 1200 किलोमीटर की जो जर्नी है, यानी रात को 10 बजे 9 बजे के आसपास आप इसमें चढ़ें और अगले दिन सुबह कंफर्टेबली उतर जाएं। इस तरह की ये चीज़ें इसमें ध्यान रखा गया है। कई सारे सेफ्टी फीचर्स हैं, डिज़ाइन में कई चीज़ों के इनोवेशन किए गए हैं। जैसे आपने देखा होगा पुराने टाइम में चेन होती थी, उस चेन की जगह अब ये इस तरह का एक मच मोर सिक्योर मैकेनिज़्म लाया गया है, जिससे कि बर्थ की सिक्योरिंग फास्टिंग वगैरह बेटर हो। टॉयलेट्स में भी स्पेशल ध्यान रखा गया डिज़ाइन में। और लोको कैब आपने देखी होगी, ड्राइवर्स की फैसिलिटी। मेंटेनेंस स्टाफ के लिए अलग से कैबिन बनाया गया है, जिससे कि वो लोग आराम से रेस्ट कर सकें।
How IPO ready do you feel today? And you know, what are going to be the next sort of pieces that you focus on before you actually get ready to file the DRHP?
I honestly think it's just like a matter of, when do we see, the right sweet spot of, hey, we're inflecting, we think that we're going to get into, harvest significant amounts of, free cash flow in like a relatively short period of time. That's, I think, the right spot to go public. And look, it's a commercial strategic call.
Yeah.
I think that happens in, probably sooner than even I anticipated.
Yeah.
And we're a fast company, so we take a call to go public, we go public very quickly. But yeah, I think 2026, potentially even late 2025 is a realistic timeline, and our focus would be build excellence and controls and make sure that you have a high. It's not about profitability today.
Yeah.
It's about do you have, because break-even-ish is not what people are betting on. They're betting on, can you generate 300, 400, 500 million dollars of free cash flow in.
Frontline stocks continue to climb slowly higher even as mid-caps take a beating. Energy and FMCG are the key gainers while consumer durables and metal stocks slip. Gujarat State Corporation and Gujarat State Petronet will merge into subsidiary Gujarat Gas, while the transmission vertical will be spun off into a separate entity. Analysts see significant gains from synergies, cost and tax savings following the scheme of arrangement. Two-wheeler players clock strong sales in August, as do SUV makers in the passenger vehicle segment, but commercial vehicle sales hit a rough patch. The Congress spokesperson alleges SEBI chair Madhavi Puri Booch received regular income from ICICI Bank Group while she was on the board of the regulator from 2017 to 2024. The party speaker calls for the SEBI chair to make a voluntary disclosure on her material corporate relationships. During the course of her address at a CII meet, SEBI chair, while highlighting the complexity of markets in the future and the need to co-create, remarked that she won't speak on REITs as she has been accused of conflict of interest. The comments are seen as a pushback on the recent allegations against her. Hello and welcome to Business Lunch here on CNBC-TV18 in the Mumbai News Centre. I'm Hormis Fatakia. Let's first take a look at how the markets are doing at this point of time. It's a sluggish start to the week, but then that should not come as a surprise because there has been some selling pressure that has emerged in the last few minutes of the trading session. And it should not come as a surprise because we are coming on the back of a 12-day rally on the Nifty, and this is the 13th day that the index has been holding on to the gain so far. The Sensex itself is up for the 10th day, but there has been some selling pressure that has emerged over the last few minutes. The Nifty Bank, though, has continued to remain at the flat line all through the trading session. There has been some bits of choppiness, but the index has continued to hold on to those levels where it had closed on Friday. But the broader markets are seeing some bit of selling pressure in today's session. The mid-cap index is down 0.5%. The small-cap index is also down 0.4%, and plenty of specific stocks that are moving towards the downside in today's session. Vodafone Idea being one of them. The stock was supposed to receive inflows during the MSCI readjustments on Friday, and it is seeing some bit of selling pressure. Vodafone Idea, Indus Towers, both down 4% in today's session. But the one stock that is possibly the stock of the day today is Gujarat Gas, and we'll begin the show by focusing on that. That stock has zoomed following a major restructuring scheme which proposes a merger of GSPC, Gujarat State Petronet and GSPC Energy into Gujarat Gas. Now, the company's gas transmission business will also be carved out and be listed as GSPL Transmission. Now, Nimesh is standing by with more details.
A very interesting restructuring which was announced over the weekend within Gujarat Gas, Gujarat GSPL as well as GSPC. Now, essentially, this scheme of arrangement has been largely been proposed for simplifying the structure as well as value unlocking for the shareholders as well. So, when I mean simplifying the structure, let's look at the structure first. What is Gujarat Gas currently? I mean, what not done approved is merger of GSPC into Gujarat Gas, GSPL into Gujarat Gas as well as demerger of GTL. Now, if you look at the existing structure of the holding, Gujarat government holds a majority stake in GSPC, which is unlisted, and you know, then okay. Now, first talk about the share ratio for Gujarat. So basically, a merger between GSPC and Gujarat Gas, the ratio is 10 shares of Gujarat Gas for 305 shares of GSPC. For GSPL, which is a listed entity, you'll get 10 shares of Gujarat Gas if you're owning 13 shares of GSPL. And after the merger, there will be a demerger of the trading business, which will be called GTL, and you'll get 1 share of GTL for 3 shares of Gujarat Gas. So that's the structure. It's a 3-step structure which has been announced. Now, as I said, it's largely been done to dismantle the holding structure. What is the structure currently? Gujarat government owns 55.6% in GSPC, which is unlisted. Now, GSPC in turn owns 37.5% in GSPL, which is a listed entity, and GSPL in turn owns close to 54% in Gujarat Gas. That's the holding structure currently. After the restructuring, there will be two separate companies which will get listed. One will be Gujarat Gas. Now, that will hold the city gas distribution businesses, the gas trading, E&P, and the renewable business, and the related investments. So this will be one entity where all the companies will get merged into. The second entity will be GTL. Now, that's the trading business of GSPL, which will be carved out as a separate business and list separately. Now, GTL will have the gas transmission business and the related investments, including the cash as well. So that's what the restructuring will look like. Two businesses, Gujarat Gas as well as GTL. Now, what our brokerage is saying as far as Gujarat Gas is concerned, couple of interesting reports. Equirus today has actually upgrade the stock to an add and take as a target price of 726. They believe that the merger is value accretive. Even Equirus had put out a note on Gujarat Gas. They actually upgraded the stock to an add with a target price of 667. And they believe it's a well-thought merger. And post the merger, Gujarat Gas will become the second most, second big company in the gas trading space. So that's broadly what the analysts are saying. In fact, Jefferies was slightly negative on the stock, but post the merger, they believe that the fair value could be close to 513, but they still believe that earnings could be volatile and there could be some impact on the gas margins post this merger. So mixed view from analyst point of view, but the stocks are reacting pretty hard. I guess the two big takeaways: one, it just simplifies the holding structure between the Gujarat Gas and GSPC and GSPL, and two, a bit of value unlocking for the GSPL shareholders.
Nimesh, thanks a lot for breaking down that complex merger agreement, and of course the stock reacting as well. Gujarat Gas almost up 10% in today's trading session, 11% now as we speak at 673, and GSPL also at the highest point of the day, up 5%. In fact, earlier today we discussed the merger mechanics with Probal Sen of ICICI Securities and Maulik Patel, the head of research at Equirus, to understand this merger. Listen into what they had to say.
The gas trading business, obviously, which adds about 1,000 crores of EBITDA. Now, there are two ways to look at it. 330 odd crores, as per the management estimates, comes from the sourcing that Gujarat Gas itself used to do from GSPC. But the fact is that that margin will be added to somewhere. It will not disappear, even if the entity is the same. More importantly, since there is a 72 billion, tax loss that will be transferred to the resulting entity, that itself ensures that there will be literally no tax liability on the resultant entity for at least the next 2 to 3 years, depending on the actual PBT level. So, those two factors actually combine to deliver the huge outsized EPS benefit.
Gujarat Gas, after this merger, will become a second largest integrated gas company in the country after GAIL. So that will attract, and they have a lot of synergies in terms of trading and this one. So far, if you look at, the trading was happening in GSPC, CGD was part of the Gujarat Gas, and the transmission was part of the GSPL. There were a lot of related party transactions between the GSPC and Gujarat Gas. So after this merger, those related party transactions are also not there. So GTL value, in our view, should be close to around 9,000 crore. If you look at from a Gujarat Gas share perspective, which they will get it, probably close to around 100 rupees per share should be the value of the GTL for the Gujarat Gas shareholder.
The big merger of the day between Gujarat Gas and other companies. Moving on then, SEBI has announced a formal revision of thresholds for stocks entering or exiting the F&O segment. Nigel is joining in with more details.
Well, SEBI has announced a formal revision of the thresholds for stocks entering and exiting the F&O segment. The notable changes in the methodology was on the median quarter sigma order size requirement, which has been increased from 25 lakh to 75 lakh. So that's the first point. Second point is the market-wide position limit has been revised from around 500 crores to around 1500 crores. And finally, the average daily value over the last 6 months has been revised from 10 to 35 crores. So those are the top 3 points. Now, SEBI has also said that once a stock is excluded from the derivatives market, it shall not be considered for re-inclusion for a period of 1 year. Now, based on these new criteria that have been laid out, Nuvama has stated that they understand that the exclusion review can occur in December, and the exclusions from the derivative segment will take effect only in February 2025 or after that as well. They believe that 18 stocks have a strong chance of being excluded from the derivative segment, and the list comes up for you on the screen. Now, moving to the inclusions. Commenting on the inclusions, Nuvama says that close to 80 names could qualify for F&O inclusion. And some of the notable names, they're up for you on the screen. They also add that it seems clear that SEBI intends to include new stocks in the derivatives market, and they believe the new inclusions could be announced in the next few weeks or the next few months. Nuvama also says that Jio, Financial, as well as Zomato, they are the strong contenders to make it to the F&O segment. That could propel them into the Nifty in the next rejig, that's in 2025, though the final decision rests with SEBI. So that's what the changes were and what it implies.
Nigel, thanks a lot for taking us through those updates. Time for a short break. Then up next, we get you some exclusive updates on the government's push on e-mobility. Stay tuned, back on the other side.
finance. Once we see that inflection point, we'll say that's the right time.
Well, I know you're doing the rounds of the investor conferences, Aditya, Goldman Sachs, Motilal Oswal. What are the questions that they're asking you? Are they excited about the anticipated IPO?
Look, I think, fortunately there is excitement. I think, obviously the public guys have less detail on our bottoms-up numbers versus the private guys do. I think, one thing I'd say for sure is that, meeting the ecosystem 2021, when we were just getting started versus 2024, I feel like there's just a much deeper understanding of what quality internet companies look like and what bad internet companies look like. And the questions that are being asked are much deeper, right? So today you'll have discussions on, okay, if the atomic unit of your business is the store, what's the return on equity mechanics of the store? What's the return on equity mechanics of every customer that you're acquiring? What's the CLTV to CAC on that? So you're having really thoughtful, deep conversations, and we've really been, excited about the way the public markets not just like understand our business, and I think obviously they're richly valuing this space, but it's not coming from just like some random thought process, right? It's actually coming from like an understanding of the mechanics of this business financially, but more importantly, the value for customers.
And a growing conviction in the fact that this business will actually work and take off, because that wasn't the case 2 years ago.
For sure. Look, I think I would say it's half the business model, but also half the execution, right? I think folks are, there would have been a very real world 2 years ago when people had skepticism on this business model, and it would have failed. Like if we didn't execute, and it's not just Zepto, it's all the players in the space that did well. We've really just executed a very difficult business model, and we're getting rewarded for that.
Congratulations. Another round closed today. You managed to get 340 million in a follow-on round at a $5 billion valuation from General Catalyst. This on the back of the money that you raised literally 2 months ago at $3.5 billion. I mean, how do you go from 3.5 to 5 billion in 2 months?
On the round, so simple philosophy on this financing, right? We obviously raised quite a bit of capital. We're a well-capitalized company. But what I say internally is that the number one rule of life is if you've got high quality partners on the table and good capital, you should always take it. And we couldn't be more thrilled to have General Catalyst on board. They are a legendary Silicon Valley investor. This is their first.
Back with us here on Business Lunch. The markets continue to remain where they are. The Nifty continues to remain on the flat line around that mark of 25,250, and the Sensex too trading at the flat line itself. But the broader markets, as I mentioned earlier in the show as well, are seeing some bit of selling pressure. Vodafone Idea is the stock that I had highlighted earlier in the day as well. Indus Towers is the other one. Both of them seeing selling pressure in today's session. Vodafone Idea down almost 4%, now down to levels of 15, and Indus Towers too down almost 5% now at the lowest point of the day at levels of 435. But pull up Dixon Technologies as well. That is another stock that is seeing some selling pressure. That stock was also supposed to receive MSCI inflows on Friday and then saw some sharp profit booking towards the close of trade, ended 2% lower on Friday and now is trading around 5% lower in today's session as well. The management speaking to us earlier in the day had mentioned that the growth in FY25 is likely to be slow, considering the fact that the company is currently in the ramp-up phase. So not a good day in the office for Dixon Technology. Some profit booking there. What is also seeing some bit of profit booking though is Suzlon, and that stock is also trading with losses of around 4% as we speak. And the other one that I wanted to highlight was Aarti Drugs. Of course, the management also cutting guidance in an interview with CNBC-TV18 earlier in the day. Some pressure coming in for Aarti Drugs as well. Now, sources are telling CNBC-TV18 that the discussions over the new FAME scheme to promote electric mobility are underway and that the scheme could be introduced in the next couple of weeks. Parikshit is here to tell us more.
Discussions on the much-awaited FAME-3 scheme for the electric vehicle mobility ecosystem is in its final stages. We believe that the Prime Minister's office is reviewing the final proposals around FAME-3 and its contours when it comes to incentives. Now, the government is considering a proposal for FAME-3 with an outlay of 11,500 crores for just a 2-year period. What they're also looking at is reducing or staggering the incentives across vehicle categories over 2 years. Now, new vehicle categories, including electric trucks, electric tractors, electric mining equipment, and heavy machinery, could be included in this policy. FAME-3 scheme is likely to have incentives just the way FAME-2 did for electric buses, two-wheelers and three-wheelers as well. But the incentives for 2- and 3-wheelers could be lower compared to FAME-2. the government is also considering continuing incentives for electric cars only in the shared mobility segment. This is also like it was in the FAME 2 scheme. Incentives are being considered for charging infrastructure with a plan to have a significant charging infrastructure across the country. The reason why it is very important to do this in the next few weeks, and we hear that the scheme is likely to be finalized in 2 weeks or so, this is because the government had to extend the temporary EMPS scheme till the 30th of September 2024 with an outlay of 778 crores. Now, if they don't have a scheme ready by the end of 30th September, they will have to extend the EMPS scheme again. So we believe that the government is coming around to taking a call on the FAME 3 scheme, and we could see the final contours of this new policy in the next 2 to 3 weeks.
Parikshit, thanks a lot for that update. Time for another short break here on Business Lunch. Up next, massive protests have erupted in Israel after 6 hostages were found killed. More on this after this short break. Stay tuned. Back on the other side.
In India, since they, integrated with venture capitalists and brought Neeraj Arora on board. So we're super excited. And Neeraj has been a personal investor in the company since our seed stage days. In terms of, how we went from like 3.6 to 4.95-ish over the past 2 months. I mean, look, the company's growing pretty fast, right? So we've grown in that 60-day period since our last financing. We've grown about 20%. Obviously we're launching a lot more stores, and you might have seen some of the work they were doing. We launched Nasik, Ahmedabad, Chandigarh. And I think, the inflection point is becoming clearer and clearer to the market. And the downside is largely protected for, because like I mentioned last time, we've got 70% of our stores fully EBITDA and free cash flow positive, turning profitable faster and faster.
What does this mean now in terms of expansion? What does it mean in terms of aspiration to move beyond the cities that you currently operate in and expand the dark store network as well as more categories to get into?
Absolutely. So, we are expanding. Like I mentioned last time, we're launching a few hundred stores, across the next couple of months in, not just existing cities in the metro cities, but even in tier 2, tier 3 cities. And just to give you an anecdote, right? We launched Nasik last month, right? Nasik is not known to be like anywhere close to a metro in terms of a market. The stores that we launched there have hit 1,000 orders per day in 6 weeks. It's the fastest that we've ever been able to achieve that. Mumbai, Bangalore, Delhi took like 3-4 months to hit 1,000 orders per day. Nasik is coming in 6-7 weeks. And the insight really for tier 2 and tier 3 markets is that customers are underserved. There are no real quality online or offline options for them in terms of price, selection and quality. And obviously you're giving them convenience. But when we go into these tier 2, tier 3 markets, customers come and tell us that, hey, I actually couldn't find this selection anywhere else, right? Or I couldn't find this, quality control anywhere else. And so we think we have an even stronger value prop in those markets. And the cost.
So is that going to now be a priority and a focus in terms of expansion? Because as you said, these are underserved markets, and perhaps with the kind of growth that you've seen in Nasik, for instance, is it changing your mix in terms of prioritization?
Absolutely. So we plan to launch, the idea is to launch at least a dozen cities over the next 2 quarters.
Welcome back to Business Lunch. Now, the Congress party has leveled fresh allegations against Madhavi Puri Booch. Now, party spokesperson Pawan Khera has alleged that the SEBI chairperson continued to draw salary from ICICI Bank between 2017 and 2024. Now, that is during her tenure as the capital markets regulator. Now, this raises fresh scrutiny about potential conflict of interest. The opposition party added that Booch also used to receive TDS on the ESOPs given to her by the bank. Now, Khera also alleged that Booch received income from the asset management unit ICICI Prudential as well. Now, the Congress has urged the SEBI chairperson to come clean and make voluntary disclosure on the benefits she has received from the bank so far.
सेबी की चेयरपर्सन जब वो मेंबर थी, होल टाइम मेंबर थी, 2017 से 2024 के बीच में रेगुलर इनकम आईसीआईसीआई बैंक से ले रही थी 16 करोड़ 80 लाख। ये सीधे सीधे सेक्शन 54, सेक्शन 54 ऑफ सेबी, जो एम्प्लॉइज सर्विस रेगुलेशन 2001, मैं इसका एनेक्शर आपको दिखाऊंगा, उसका वायलेशन है। सीधे सीधे ऑफिस ऑफ प्रॉफिट का मामला है, सीधा। इसमें अगर किसी में थोड़ी सी भी अगर लिहाज, शर्म, लज्जा कुछ हो वो इस्तीफा देगा, 1 मिनट नहीं रुकेगा इस एक्सपोजर के बाद। सेबी की चेयरपर्सन से हम ये जानना चाहते हैं कि आप खुद बता दीजिए और ऐसी कौन कौन सी कंपनियां हैं जिनके आप केसेस सेबी के सामने लंबित हैं, आप उन केसेस पे जजमेंट दे रही हैं, और आप या आपके नजदीकी परिवार के सदस्य उन कंपनियों से अगर कोई लाभ उठा रहे हैं तो आप स्वयं बता दीजिए। ये देश को जानने का हक है, क्योंकि हमारे आपके करोड़ों लोगों के शेयर मार्केट, स्टॉक मार्केट में इंटरेस्ट होता है, हम पैसा लगाते हैं, ये जानने का हक हम सबको है।
Now, in an apparent pushback to the recent allegations against her, SEBI Chief Madhavi Puri-Booch, while highlighting the complexities of markets at the CII summit, declined to comment further on real estate investment trusts as she has been accused of conflict of interest. Listen into what she had to say.
This is all simple stuff that technology will enable. Of course, there was a mention of REITs, but Ajkal, if I utter the word REITs, I am accused of conflict of interest. So perhaps it would be better for me to abstain. But indeed, you know, these are the emerging asset classes in our country. Globally, they are large, strong. They monetize a lot of the build out of the infrastructure of the country. They have a huge multiplier effect in terms of the growth of the country. So all of this is very much on our agenda, and it will be done in a manner of co-creation, because that's the only sensible way to do it.
Well, news now coming in from Andhra Pradesh and Telangana, where both states are continuing to be battered by heavy rains for the second consecutive day, leading to massive flooding that has killed at least 27 people so far. Now, rail traffic has also been disrupted due to waterlogging in several parts of both of these states. Over 100 trains have been cancelled, while several others have been diverted across the South Central Railway zone. Now, earlier today, Andhra Pradesh Chief Minister Chandrababu Naidu visited flood-affected areas in Vijayawada and supervised the rescue and relief efforts. Meanwhile, Prime Minister Narendra Modi spoke to chief ministers of both the states and assured full support to the rescue and relief efforts. Well, massive protests have also swept across Israel on Sunday after the bodies of 6 hostages were recovered from Gaza, with local media estimates suggesting that up to 500,000 people participated. Now, Israeli Prime Minister Benjamin Netanyahu is now facing increasing pressure to broker a hostage deal. Israel's largest labor union, which represents tech players and manufacturers, is also set to strike today in support of a deal. CNBC's Dan Murphy has more on this.
Israel's economy is essentially grinding to a halt today as this unprecedented labour strike gets underway in response to the killing of these 6 young hostages. Now, we've been hitting the phones trying to understand the impact on the ground, and details of this strike are still coming in, but it is reported that many schools, most schools in fact, many businesses and even Israel's Ben Gurion airport are all set to close in part at some point today as union bosses and business leaders basically come together to try and pressure Prime Minister Benjamin Netanyahu to get a hostage deal done. Now, if you haven't seen it already, there are extraordinary pictures coming in of this huge demonstration that we saw on Sunday. And of course, this comes after we saw Israel's finance minister also saying that this strike taking place today, which is of course being led by Histadrut, which is one of Israel's biggest labor unions, is going to have significant economic consequences. And of course, the demonstration would have done the same as well. This was the imagery on the streets of Tel Aviv on Sunday night. Really an extraordinary display of both heartbreak and anger. Everyday Israelis making their voices heard after the bodies of these hostages were recovered from Gaza after being murdered by Hamas. Here's how Prime Minister Benjamin Netanyahu is responding to that protest today.
Our efforts to free our hostages are ongoing. Since December, Hamas refuses to conduct real negotiations. 3 months ago, on May the 27th, Israel agreed to a hostage release deal with the full backing of the United States. Hamas refused.
Prime Minister Netanyahu there. Now, of course, among the dead is the Israeli-American Hersh Goldberg Poland, which certainly raises the stakes for President Joe Biden and Vice President Kamala Harris, who are also reportedly set to meet today with national security officials in the United States to determine how to move forward with this deal. It's reported that President Biden is considering presenting a final proposal for a hostage release and ceasefire this week, but that remains to be seen. That original reporting came from Barak Ravid at Axios, who says that this could be perhaps the last document that the White House is willing to put forward in order for Israel and Hamas to sign.
And with that, it's a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
But right now we've got visibility launching in a dozen cities, and that includes, Ahmedabad's, Chandigarh's, Kanpur's of the world, the Vizags of the world, the Indores of the world. So, all of that we're launching over the next 2 quarters, and we'll expand from there. But absolutely. So one, we are expanding geographically. 2, in terms of new categories, I'm glad you brought that up, because, today, one of the big things that, even for this financing that really got investors excited is that, we launched a bunch of new categories last quarter. We're talking about consumer electronics, general merchandise, high utility apparel, and even, beauty and cosmetics, right? And so, we launched all those 4 categories. Effectively in the first quarter since launch, it's already doing today, the run rate is well over 1,200 crores of scale, right? Annualized, obviously. But, in the first 4 or 5 months of launching a category, you get to 1,200 crores of scale and growing, 15-18% month on month. It's an unbelievable, like a vote of confidence in the product market fit. So we're very excited about that as well.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage.
Well, good afternoon and welcome to Midcap Radar. I'm Vivek and with me today is Reema Tendulkar. Hi Reema, good afternoon. Well, markets have given up a bit of the gains, especially when you're talking about the mid-cap index as well as the small-cap index. Both of them have cooled off quite significantly from the day's highest point. As you can see on the top of the screen, the benchmark indices are in the green, but it's the broad end of the markets that are taking a bit of a beating.
Indeed, the mid-cap index takes a beating while the market gives up early gains. Trades at the day's low. IT, FMCG are the key gainers. Pharma and metal slip.
Two-wheeler players clocked strong sales in August, as do SUV makers in the passenger vehicle segment. But commercial vehicle sales hit a rough patch.
Gujarat State Corporation and Gujarat State Petronet will merge into subsidiary Gujarat Gas, while the transmission vertical will be spun off into a separate entity. Analysts see significant gains from synergies cost and tax savings following the scheme of arrangement.
IOCL, BPCL and HPCL surge in trade after the OMC slashed ATF prices by nearly 5% and also increased the rate for 19 kilogram commercial liquid natural gas cylinders by 39 rupees.
Rossell India surges after aerospace defense business demerger takes effect. The scheme of arrangement between the company and Rossell Texas was approved by the NCLT in April.
Well, it's the middle of the trading session. We are looking at the mid-cap index, and the mid-cap index and the small-cap index after the record rally are seeing a bit of profit booking emerge from the day's highest point. In fact, if you pull up the mid-cap index, it's down over 500 points, from the day's highest point. And it's a similar story as far as the small-cap index is concerned. Which are the sectors that today are seeing a bit of selling pressure? First up is the pharma pack. Most of the pharma stocks today are under pressure. The Nifty Pharma Index, again, trading near the day's lowest point. And the other pack that's seeing quite a bit of selling pressure is actually the metal index. So metal stocks today, especially names like SAIL, NALCO, Hindalco, these are some of the stocks today that are seeing some selling pressure. Rima, what are you looking at?
Well, I'm looking at the fall that we're seeing in Indus Towers and Vodafone Idea. So some profit booking visible there. Indus Towers is down 5.5%, Paytm under pressure, and Ola Electric, where news reports suggest that they may have ceded their top space to some of the competitors. Ola Electric too is weak, and Zomato is giving it company with a similar 2.8% cut. But let's now go across to Hormuz. He's standing by with the mid-cap movers of the day. Hormuz.
Well, it's not very often that you highlight the broader markets with plenty of losers. So I'll buck the trend a little and I'll start off with stocks that are gaining within the broader markets. There are some of them that are doing well in today's session. First Source Solutions is one of them, and shouldn't come as a surprise because that is what it has been doing over the last month or so. And 5.5% higher at the highest point of the day, as is Sona BLW, another 5.5% there as well. Radico Khaitan building on to Friday's gains, and HPCL having a good day at the office, slightly off the lows of the day, but still trading with gains of around 3%. The stock, the sector, the group of the day has to be the stocks that are in the Gujarat gas space. Gujarat gas is up almost 10% now after the deal impact, and GSPL also at the highest point of the day, now 4% higher in today's trading session. The PSUs were supposed to be in focus all through today. The Navratna stocks that were given an upgrade, SJV and NHPC, Railtel, all off the highs of the day, but trying to hold on to some sort of gains in today's session. All of them were up at least 4 to 5% at the start of trade. Stocks that are doing well at the back of very strong volumes in today's session. Godrej Industries seeing a bit of choppy moves, but on very strong volumes, still 3% higher. Aegis Logistics is the other one, almost 7.5% higher in today's session. And Bajaj Holdings as well at the highest point of the day, another 5.5% in today's session. But stocks that are not doing well, there are a lot of them, but we'll highlight a few. As Rima just mentioned, Vodafone Idea and Indus Towers both at the lowest point of the day now. Vodafone Idea down for the second day in a row. Jindal Stainless down to the lowest point of the day now, 6% lower. And Dixon Technologies, after the management said that the FY25 growth is going to be slower, the stock is down 4.5%. Back to you guys.
Thank you so much for that, Hormal. Quite a few stocks that are seeing quite a bit of a sharp sell-off today, especially some of the telecom names. Let's now shift focus to Sharda Cropchem. Their subsidiary, Sharda USA LLC, has received an order from the US court which temporarily prohibits import and sale of insecticides. To discuss this and more, we have Mr. R.V. Bubna, the Chairman and Managing Director at Sharda Cropchem, who joins us now. Good afternoon, Mr. Bubna. Thank you so much for joining us. First, take us through this particular development. What was the percentage of sales that you were getting from this particular product? And has this particular temporary restraining order been extended to any other products that you are exporting to the US market?
Sir, what is your good name?
I am Vivek.
Vivek. Sir, we have issued a very good clarification to NSE and BSE on this matter. I don't know, I think you have not had a chance to read it.
We've had a chance to look at it. We want to understand whether there is any cascading effect or whether there is any temporary restraining order on any of the other products. We understand that this particular product on which there is a restraining order forms a very small portion of your overall US sales.
Sir, I have already informed them that this product forms 0.2% of the volume of US for Sharda. 0.2%.
Okay.
So it has a very negligible effect.
Okay, any other products in the pipeline? Is there any other products that are currently undergoing litigation with FMC?
No. No. In fact, FMC is buying sometimes from us. FMC is also a good customer.
Okay, sir. So do you continue to stick to the earlier guidance that you had given, when you joined us after your Q1 results, when you told us that you're expecting significant top-line growth as far as FY24 is concerned? And you also mentioned that there is some pricing increases that you're seeing as far as the core product portfolio is concerned.
About this matter, I want to clarify again. This matter has been going into the court, I think, for last 2-3 months. Initially, court has rejected FMC's LIA and gave the decision in our favor. Once again, when FMC is appealed to them, they have given it as a temporary stoppage, and they've also asked FMC to deposit a bond of $500,000 to compensate Sharda for loss of this business during the period of this temporary stay. So that itself shows that this has no significance and no impact on Sharda's business.
Okay. So now that we've discussed this matter, and now let's just set it aside and talk about, business as usual for you. How has the second quarter been for you? What are we seeing in terms of growth rates?
Madam, second quarter we are still going on, and
yes.
I still maintain that our business will grow by 15 to 18%, and EBITDA will be also in the range of 15 to 18%. Business is doing well.
So last time when you came, you told us top line growth of 15 to 18%, gross margin in the range of 30 to 35%. You're maintaining that. You also mentioned one thing about, you may get a certain amount of funds from FMC in case this particular matter is disposed. What was the quantum you mentioned?
No, we will not. If it takes more time, and if Sharda is going to lose business of this product in US, then FMC will be required to compensate us for the loss incurred for not doing this business. And for this purpose, FMC has been asked by the court to submit a bond to the court of USD $500,000 to take care that Sharda, there's not much of a time in settlement of our claim if we make a loss during the period of this temporary stay. Am I clear?
Yes, sir. So what is 0.2% of your US sales in absolute numbers?
0.2% of this product last year had been 0.2% of our total sale in US.
Correct.
So this product is so insignificant for us, it's not going to have any impact on our US business or our global business.
No, I understand that, 0.2% of your US sales, but what is it in absolute terms? How much did this product contribute last year in absolute numbers, sir?
About $160,000.
$160,000, okay. And how has pricing been for you in the current quarter? Because last quarter, I remember, so how is pricing getting back to business? In Q1, we saw some price increases, and you were hopeful that price increases will, continue. Has that happened in Q2? How much?
Price increasing going up. So prices are becoming more favorable, and the market and the prices are getting towards normalcy.
Could you give us a sense, or could you quantify when you say pricing is improving, what is the kind of pricing that you're seeing? And also, last couple of quarters, you were facing significant inventory pressure. Has that reduced across, the customers?
It has reduced considerably.
And the quantum of pricing increase? Yeah.
It is difficult to see. We don't have any calculation for that. This is just the impression that we get from the market and how the things are moving. The prices had collapsed by almost 75% in some products. Now the improvement is not going to be so quick also. The process will take time, but it is on the way up.
Okay. Thank you so much, Mr. Bubna, first of all, for coming and clarifying on the impact of the temporary restraining order. We understand at this point of time it doesn't form a significant part of your business, and also talking to us about how pricing as well as Q2 has panned out. Let's now slip into a short break. On the other side, we will focus on the big news of the day, that is Gujarat Gas, which will undergo a major restructuring scheme. Harshvardhan Dole from IIFL will join us to talk to us more on this particular development.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary investing.
Welcome back to Midcap Radar. Well, the top story of the day is Gujarat Gas, and the stock is buzzing today as the board has approved the merger as well as the demerger plans. Harshvardhan Dole, Senior Vice President of Institutional Equities at IIFL, joins us. Good afternoon, Mr. Dole. Thank you so much for joining us. First up, what is your take on the situation? The analyst community is quite divided. A few of them have actually gone ahead and upgraded Gujarat Gas, saying that this particular deal is EPS accretive. But I believe you have a more moderate view of this particular development.
Hi, Vivek. So I think the deal is great if you view it from shareholders of GSPL and government of Gujarat, because what it enables is it eliminates the holding company discount that otherwise GSPL shareholders were cribbing about, and it also eliminates the web of complex shareholding through various Gujarat and Gujarat state-owned entities into the underlying cash-generating value accretive business of Gujarat Gas. And to that extent, I must congratulate the architect of this deal. It's a great deal from Gujarat government and GSPL shareholders' perspective. So all full marks to them. However, if you value the deal or perceive the deal from a minority shareholder of Gujarat Gas, for them, the merger can be greatly value accretive provided there is a sustainability in terms of gas sourcing. And apart from the tax shelter, which the company might enjoy for a couple of years, if the other businesses can add great value to it. As of now, based on the initial discussions with the management over the conference call and our cursory reading, it appears that the merger synergies, or what you may call as levers for value creation, seem to be quite limited. And therefore, we prefer to take a more cautious view rather than taking a blindfold view or rather a leap of faith, we would like to evaluate the situation as it unfolds over the next few quarters. That's the sum and substance of our view. I think it's a great deal from GSPL shareholders' perspective, but not so great deal when it comes to shareholder of Gujarat Gas.
But Gujarat Gas share price, Harsh, has gone up close to about 10%. So the street is clearly, cheering this transaction. So, what is it that, the street is missing, and what would your own target price be? I know you've explained it, that why it's negative for minority shareholders, but it's at odds with the way the market is reacting today.
Sure. So, clearly, if you were to build in the tax shelter and some amount of tax, essentially leakages, which otherwise were happening on account of GSPC selling gas to Gujarat Gas, there is definitely some accretion to the EBITDA. And to that extent, it will be unfair to say that there is no gain to Gujarat Gas. And which is what we have articulated in our note, that if you assume a seamless execution, that 3-4 rupees of gas saving occur to Gujarat Gas, then fair value for the total amalgamated entity can be in excess of 700 rupees. However, for that to unfold, one has to source gas very efficiently, retain the entire benefit, not pass it on to price-sensitive customers like Morbi, and give a very liberal price to earnings or EV/EBITDA multiple. So probably some investors would like to price such benefit upfront rather than they unfolding over a period in time. It's a perspective.
Harshvardhan, one question from when you're talking about the valuation multiple, currently Gujarat Gas enjoys a valuation multiple based on the regulated CNG business. Now, however, there is now volatile trading business that comes into its fold. So would you go ahead and temper down the valuation multiple that you give to Gujarat Gas as this particular earnings comes into the picture? And number two, currently on ground, how's the situation when you compare Gujarat Gas to other sources that Morbi players can actually enjoy?
So Gujarat Gas traditionally has been trading at a significantly higher multiples for its great revenue model. For example, it is insulated from the EV risk, which otherwise IGL or MGL were susceptible to. Here is an industrial portfolio which enjoys relatively higher pricing in terms of, pricing freedom in terms of sourcing the gas and pricing it. That, however, may change over a period in time. And therefore, in my opinion, the long-term EV/EBITDA multiple may converge to that of IGL or MGL. So that something is, we'll keenly watch out for as to how the amalgamation plays out in terms of sourcing of gas and eventual pricing of the gas. As far as other businesses are concerned, Vivek, it's, let's see, what additional information emerges as to how do they restructure the LNG terminal, where currently they are a minority shareholder, and how can they unlock value for the minority shareholders. So we'll keep a watch, we'll gather more data points and take more educated call rather than reacting based on the sketchy information which is available.
Harshvardhan, so, what is the pecking order for you as far as the oil and gas space is concerned? Which are topics and which are the ones you don't prefer?
So at the moment, we find extremely high value in terms of the PSUs, which is the upstream as well as the downstream OMCs. We find the payoffs to be asymmetric. The upside to downside ratio is extremely favorable for a value investor. And to that extent, we like all the five. If I were to pick two, probably I will pick BPCL and ONGC at this price.
Okay, Harsh, we'll leave the conversation here. Thank you very much for joining in. The Nifty is now hovering around 25,260. Remember, it started trade above 25,300, but as the days progressed, we have seen the markets cool off, particularly between 12:30 and 1. There was a bit of a slide in the markets and some profit booking set in. We will slip into a very short break. We'll come back and talk about individual stocks. There's a stock called Rossell India, which is on our Midcap Spotlight segment, so stay tuned for that.
It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Welcome back. As promised, let's talk about Rossell India. That's a stock on our Midcap Spotlight. Upasna is joining in for more. Upasna.
Well, that's correct. Rossell India remains in focus on the back of demerger of its aerospace and defense business. Mind you, in April 2024, NCLT approved scheme of arrangement between Rossell India and Rossell Texas. The scheme of arrangement became operative from 30th August 2024. As a part of the scheme, Rossell Texas division has been separated from Rossell India and transferred to Rossell Texas Limited. Consequently, Rossell Texas will no longer be a wholly owned subsidiary of Rossell India. Now let us understand what is the key objective behind this. Company says it aims to create a dedicated tech vertical with a focused attention on aerospace and defense business under the name of Rossell Texas Limited. The company's core dedicated T vertical will continue under the name of Rossell India. Now let us understand what are the key benefits indicated by the company. Company says that the demerger will enable streamlining of both the operations of the company and will further enhance efficiencies and better management control going forward. Hence, Rossell India remains in focus today on the back of the demerger.
Thank you. 5% gain on that. NHPC, SJVN and RailTel are also higher in trade, and it's the Navratna status which has got the street excited. How material is it?
Well, very interesting you asked that, because, we always struggle to go ahead and find, the materiality of this particular development. Even other PSUs, especially rail PSUs, actually had received Navratna status in the past. So first up, who gives the Navratna status? It's actually the Department of Public Enterprises who grants the Navratna status to these companies. And in this particular case, it's NHPC, SJVN as well as RailTel who've received the status. What does this mean? Number one, they get the status on the back of much improved financial performance over a period of time. Along with that, there is also increased financial as well as operational independence that the companies get, especially in the case of some of the rail PSUs. They can go ahead and join announce JVs. They can get into MOUs, memorandum of understandings, both internal as well as with export or other country companies. Now remember, a lot of companies like RVNL have actually entered into JVs with companies in Israel as well as the Middle East. So this is something that we will watch out for some of these PSUs today as well. Along with that, these companies can invest up to 1,000 crores independently without central government approval. So that also acts as a positive kicker for these companies. It's largely a sentiment positive, but there is increased operational independence, which is what the street likes for all three of these names.
Okay, thank you very much for that. InfoEdge has released the jobs peak data for the month of August. Remember, July was a positive surprise, particularly on the IT front. But this time, The jobs peak index for the month gone by is down 3.5% on a year-on-year basis and down about 1.1, on a month-on-month basis too. So it's reversed the growth seen last month, and IT sector continues to still be tepid. They showed some green shoots in the prior month, but this time the overall IT sector has seen a modest growth of just 1% on a year-on-year basis. Remember, IT is the biggest contributor to Naukri's growth and revenues, at least in terms of individual verticals. That has been under pressure for the last 2 years. So the street is awaiting that when will the IT hiring recover, because that will boost the growth for Naukri business. Education and telecom saw the biggest drop. They're down about 11 to 13% on a year-on-year basis. Insurance saw a fair bit of pickup, 29% growth on a year-on-year basis.
Well, very interesting there. Naukri, on the back of that has actually seen a bit of a fall, almost 1.5% lower. But, that's all the time we have on this edition of Midcap Radar. Stay tuned.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines. 25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turk.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we're just about holding on to our gains for the Nifty. So it seems as though we're probably going to slip into the red anytime soon now. And separately, we have the Midcap index, which is underperforming, so down around 0.4% currently for the Midcap index. But there's a lot of action in specific stocks today, and we probably do have a lot of queries as well, considering that we have quite an active stock-specific market on our hands. We have with us Astha Jain, research analyst at HEM Securities, Richard Jain, who is with 5paisa.com to answer all of your fundamental and technical questions respectively. Welcome to the show. Well, Richard, I'm going to start with you and ask you about what you are seeing in terms of the trend for the markets. It's completely flattened out for the Nifty now.
with the mid-caps underperforming? Largely, you would say a quiet consolidatory kind of day?
Yes, hi, very good afternoon, Ekta. Very good afternoon, Asta. Well, Ekta, if you look at last 10-15 days, our markets have seen a slow and gradual up move, but there have not been any kind of corrections in the market during the second half of the August. So the momentum readings on the lower time frame charts are a bit overbought. So we might see some more consolidation before we move up the next leg of high up again. But this entire consolidation or small corrections, if come, they would just be some time-wise correction within an uptrend, because the data is quite positive. If you look at the rollovers recently, then FIs have about 70% positions on the long side in the index futures. Even if you look at the price volume action in many of the heavyweights, there are no signs of kind of trend reversal happening. Banking is not participating, but some of the other sectors such as IT is there, FMCG is looking good, even oil and gas to some extent is looking positive. So I think some of the other sector would keep supporting the markets higher, and any corrections would just be time-wise corrections or consolidations of some days, and again we should see a resumption of uptrend. So strong support base is now seen around at 25,000 mark, where a good amount of open interest is also placed in the put options. So downside seems to be limited. It remains a buy and dip market. Keep a stock-specific approach over here, and any dips towards the 25,100, 25,000 range comes, take it as a buying opportunity.
Okay, all right. Well, we do have a couple of queries now. We have Dheeraj, who writes to us from Hyderabad, holds 200 shares of Jio Financial Services, which he's bought at around 326. He wants to know what to do, whether he should hold or sell this particular counter. So Jio Financial Services, that stock is up around 2%. He's just about sitting on a profit at this point in time. Asta, do you think that this would probably be a longer term hold?
Yes. Hi, good afternoon to both of you. Yes, we think it is a longer term hold, and that's why we are recommending, although our price targets are very small. We have I think what we are giving as a price target is at around 355 to 360 odd levels to our clients as well. So we are positive on this counter. Now, talking about this counter, what we believe that what will be working in the favor of the company is that the launch of the new products, especially in the secured lending business. So definitely that will help the company going forward in posting strong financial numbers, along with the backing of a strong parent and the extensive customer base. Although the numbers in the Q1 of FY25 were the muted set of numbers, but we believe going forward with the launch of new products, the company will be going to post strong numbers, hence giving a hold with a price target of 355 to 360 at the current level.
Okay, all right. And what about you on the technicals? This stock has done well this year. How would you approach it, Jio Financial?
We have already seen a corrective phase since the later half of April, where the previous all-time high was around 394. From there, the stock has corrected towards 310, 320 kind of range. But here, the stock seems to be finding a good support around the 310 mark, where the June month lows are there and even August month lows are there. So price-wise downside seems to be limited from here on. So I would recommend to continue to hold on. In case if he wants to keep a stop loss, then 300 should be a good stop loss to initially keep it. And on the higher side, can expect targets towards 370, 375 very soon.
Okay, 370, 375 very soon. We have Gopika now, who writes to us from Mumbai. She holds 1350 shares of Hindustan Unilever, which is bought at around 1245. Wants to know whether to hold or sell at current levels. So she's sitting on a very good profit when it comes to HUL. Portfolio stock, it's a frontline blue chip. From that context, Ruchit, how would you approach a stock such as this on the technicals? And do you think that it's a hold at these levels?
So one good thing about the position is the buy price. The levels that she has mentioned, I think it was somewhere in 2017. Since then, we have seen a good amount of trended phase till 2021, and since 2021, it's been 3 years where the stock has been in the consolidation phase. So clearly, the time-wise corrective phase is also, I think, has been done in the stock. And the kind of breakout, the previous highs has been taken out recently in the stock. I think the broader uptrend has resumed after this consolidation phase. Technically, if I put retracements on the recent correction, then it gives me target somewhere around 3150 to 3200 range. So still at current levels, since it's a long-term holding positions, I would recommend to continue to hold on.
Okay, so you'd recommend to currently hold HUL from these levels as well. What about you, Asta, on Hindustan Unilever?
So we are also recommending hold, although our price targets are at around 29.50 to 29.65 odd levels. Talking about this counter, results were okay, but now what we are seeing that there is improvement in the rural demand led by the innovations, which we have seen especially in their soaps, which Lux and Lifebuoy are. So they have led some sort of innovations there. Improvement in the rural demand is there, and management is also confident of maintaining the EBITDA margin. In fact, management has also stated in their commentary that they will be taking the pricing actions in H2 of FY25, depending upon the input cost. So if such sort of price actions will be taken by the management, then they can definitely that will help the company in posting strong margins going ahead. So we are positive on the counter, recommending a hold, as well as buying on dip strategy can also be implied. Our initial price target is at around 29.65 to 29.70 odd levels.
Okay, all right. Well, we do have R. Madhav now, who writes for us from Chennai, holds 20 shares of Mazgon Docs, which is bought at 2,260. Wants to know what to do, whether to hold or to sell this particular counter. Sitting on a very good profit on this one. 39,000 odd is what he's made on this particular counter with only 20 shares. So that's the kind of gains that one is seeing within this space. Astha, over to you on this.
So what I recommend is to wait for making a new entry into this counter. In fact, we are recommending to book some sort of profits also if someone is into the profit. The reason being the overvaluation, because what we believe that stock is presently overvalued at this point of time. Although we have seen the robust financial performance by this company in Q1 of FY25, but what we believe that due to the overvaluation of the stock, the company or the stock might show some sort of degrowth in the stock prices. So it is a right time to book partial profit. This is what we are recommending to our clients as well. So my idea here is to wait before making any new entry into this counter, because we are believing that this counter may fall further.
Okay, you expect this counter to probably fall further. What about you? What would your recommendation be on this, Ruchit?
So the stock has done well historically, but in last 2 months, we have already seen some correction from a highs. So it made a high of over 5,800. And now it's quoting around 4,200. Now the 100-day exponential moving average support for Mazgon is around 3,970. So roughly 3,950 to 4,000 range. So I think that should act as a good support for now. And we could see some bounce back again in the stock from that support. So for now, I would recommend to continue to hold on. But yes, since it's sitting in good profits, I would recommend to keep him a strict stop losses around 3,900 levels. Because of 3,950 breaks, then I think this 100-day breaking of 100 DMA will not be much good for that. So till this is intact, I think you can continue to hold on. But strict stop loss should be placed below 3,900 levels.
Okay, a strict stop loss below 3,900 levels. That's the word coming in on Mazgon Docs Shipyards. That stock just about lower by around 0.8% today. But we have Meena now, who writes to us from Kolkata, who holds 300 shares of Hanasa Consumer, which is bought at around 432. Again, sitting on a good profit there. Wants to know what to do with this particular counter. Well, let's start with the technicals on this one. What is the data telling you in terms of all what you've gathered till now, Ruchit, on Hanasa?
So limited data on the charts, but whatever price action have recently happened, I think the volumes have been increasing whenever the stock is going up. And whenever there are in between corrections, we have not seen any kind of high volume based selling now. So that is a bit positive sign. So the stock has now formed a good short-term support base around 450, 460 kind of range. So I think till that is intact, it has potential to rally towards 560 to 570. So hold on your existing positions with a stop loss below 450.
Okay, and what about you, Astha, on Hanasa?
So we are also recommending hold, and our price target is 560 to 600 odd levels. Talking about this counter, what we believe that management has continued to hold its strategy house of brands, which will be working in favor of the company. Right now also it is working in the favor of company, and some of the brands like the Derma CEO or the Aqualogic, they are really working well for the company, and now the company has rolled out them in their premium beauty outlets also previously that were into the modern trade only. So I think now the company has a thrust on expanding its TAM, that is total addressable market, as well as increasing customer base. So I think the company will definitely going to hold its financial performance in a strong way going ahead. Recommending a hold. Initial price target can be set at around 560 to 600 odd levels.
Okay, 500 to 650 odd levels. That stock has given returns of around 18% in the past 6 months odd.
On that note, we need to take a short break with the news that we have a lot of stocks which are buzzing. So do watch out for stocks such as JM Financial. That stock is up around 1.7%. Suven Pharma was seeing good traction. Fortis Healthcare, after buying back its stake, a private equity stake in its diagnostic arm, is seeing good traction. So that stock is up around 1.6%. And Biocon too got 2 approvals from the US FDA, is seeing a gain of around 1%. We'll take a short break and more queries on the other side. Stay tuned.
Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Very interesting restructuring which was announced over the weekend within Gujarat Gas, Gujarat GSPL as well as GSPC. Now essentially this scheme of arrangement has been largely been proposed for simplifying the structure as well as value unlocking for the shareholders as well. So when I mean simplifying the structure, let's look at the structure first. What is Gujarat Gas currently? I mean, what not done approved is merger of GSPC into Gujarat Gas, GSPL into Gujarat Gas as well as demerger of GTL. Now, if you look at the existing structure of the holding, Gujarat government holds a majority stake in GSPC, which is unlisted, and you know then okay. Now first talk about the share swap ratio for Gujarat. So basically a merger between GSPC and Gujarat Gas. The ratio is 10 shares of Gujarat Gas for 305 shares of GSPC. For GSPL, which is a listed entity, you'll get 10 shares of Gujarat Gas if you're owning 13 shares of GSPL. And after the merger, there will be a demerger of the trading business, which will be called GTL, and you'll get 1 share of GTL for 3 shares of Gujarat Gas. So that's the structure. It's a 3-step structure which has been announced. Now, as I said, it's largely been done to dismantle the holding structure. What is the structure currently? Gujarat government owns 55.6% in GSPC, which is unlisted. Now, GSPC in turn owns 37.5% in GSPL, which is a listed entity, and GSPL in turn owns close to 54% in Gujarat Gas. That's the holding structure currently. After the restructuring, there will be two separate companies which will get listed. One will be Gujarat Gas. Now, that will hold the city gas distribution businesses, the gas trading, E&P and the renewable business and the related investments. So, this will be one entity where all the companies will get merged into. The second entity will be GTL. Now, that's the trading business of GSPL, which will be carved out as a separate business and list separately. Now, GTL will have the gas transmission business and the related investments, including the cash as well. So, that's what the restructuring will look like. 2 businesses, Gujarat Gas as well as GTL. Now, what our brokerage is saying as far as Gujarat Gas is concerned, couple of interesting reports. Equirus today has actually upgraded the stock to an add and take as a target price of 726. They believe that the merger is value accretive. Even Equirus had put out a note on Gujarat Gas. They actually upgraded the stock to.
Welcome back. You're still tuned into Your Stocks. We have with us Asta as well as Richard to answer all of your stock queries. Well, we have a buzzing market on our hands as well. Just watch out for stocks such as Dr. Reddy's, which is now down 2.5%. It did get a blow from the Chinese regulator for one of their particular drugs. So the stock is under pressure on the back of that particular piece of news. We do have Hindalco, Tata Motors, a couple of these stocks which are also under pressure. But as of now, Dr. Reddy's is the top loser. But we do have another query now. We have Karthik, who writes to us from Chandigarh. He holds 500 shares of Bank of Baroda, which he's bought at around 274 odd. So he's sitting on a loss on that one. He wants to know what to do, whether he should book his losses at this level or not. Asta, do you think that should be the case, book losses at these levels?
I don't think so. I believe that this stock can show strong performance going ahead because even the management has guided 12 to 14% of loan growth. So what we believe that going ahead, maybe we can see the strong financial performance or a decent financial performance. So I think wait for some more time before exiting from this counter. Right now, we are recommending hold. Initial price target which we are giving is around 265 to 270 odd levels.
Okay, 265 to 270 odd levels is what you're predicting on that particular counter. But what about you, Ruchit, in terms of the technicals, what would your levels be and what is your stop loss as well?
Yes, so I have similar view that these are not the levels to book losses in Bank of Baroda. Although PSU banks have seen a good amount of consolidation in last 3 or 4 months, but the price-wise downside seems to be very limited from here on. The stock has formed a good support base around that 240 mark. So you can keep a stop loss below 240 and wait for a pullback move. And on the high side, the initial resistance would coming around 274, 275, I think roughly around the buy price itself. So wait for a pullback move towards those levels and then take a review again over there.
Okay, all right. We now have a query on Vodafone Idea. We have Sujit who writes to us from Bhopal, holds 400 shares of Vodafone Idea, which is bought at 13.85. So he wants to know the levels that he can look for the next 3 odd years on this counter. Well, 3 years is a long horizon for a stock like this. So Asta, let's go to you on that one, on the fundamentals. If someone does come to you with a query that, you know, they'd like to hold Vodafone for 3 years, what would you recommend? Is it tough to take that call?
Yes, because in fact the management has guided strong capex plans, etc. But we really need to see how they will turn out to be. So my idea here is only for the short term. Who has a short term view, they can really partially book profit in this counter. But here, since the horizon is long term, we really need to see because the capex plan is high for the management, and definitely what they are saying is that they are looking to add growth in their 4G subscriber base also because they have really fixed some of the problems or like the decongestion of network, such sort of problems they have already fixed. So we really need to see how all these things turn out to be. So it's a really uncertain counter, but for long term it's a hold, but for the short term we would recommend to book some sort of profit.
Okay, short term you would recommend booking some profit. Ruchit, what about you?
So I think there's a broad range in the stock which is going on. Around 13 is the support and resistance is around 18 to 19 range. So possibly this consolidation would continue within this range in the near term. So not expecting any trended phase in the short term. But yes, this is the range bound stock where one can expect the consolidation to continue.
Okay, so you expect the consolidation to continue. We have Vinay who writes to us from Bangalore, holds 200 shares of Nykaa, which is bought at around 397 odd, and wants to know what to do, whether to what would be the prospects of this particular investment. So he's sitting on a loss when it comes to Nykaa at this point, quite a sharp loss on that one. So what is your recommendation, Ruchit? Let's start with the technicals.
Technical sector looks positive. The stock has went through a long consolidation and a corrective phase post listing, but off late the volumes have started increasing, from lower levels. So I think the downside seems to be very limited from here on. It has a good support in the range of 195 to 185. So I would suggest then, in case if you get any kind of dips around 195 odd levels, then it could be good levels to buy more and bring your average price down from your original buy price. So I think hold on to existing positions and look to add more positions if you get any dips towards 195.
Okay, dips towards 195. What about you, Asta, on Nykaa in terms of the fundamentals?
We are recommending hold with a price target of 245 to 250 at the current level. Talking about this counter, their core beauty business is really strengthened because the company has improved product mix. Going ahead also, we believe that company's focus is on profitability, that too by reducing the marketing spends, so that will help the company. I think in the long term, whatever strategies the management are stating in their commentary, that is creating some sort of optimism, and on that basis only we are recommending hold. The initial price target of around 245 to 50 odd levels.
Okay, all right. We now have a query coming in on Divi's Labs. Puneet writes to us from Ghaziabad, holds around 4,000, holds around 25 shares of Divi's, which he's bought at around 4,450. He's sitting on a profit there. Wants to know the target for 1 to 2 months. So technically, what would you recommend, Ruchit?
So from 1 to 2 months perspective, I think can expect levels towards 5300 to 5350. These were the previous highs in October 2021 where no all-time highs were made. So some selling pressure would come in over there when it again reaches those levels. So hold on existing positions around 5300 can take a review to book profits in case if it's a trading position.
Okay, all right. Well, you know, it's not a technical call, but in any case, what would your fundamental call be, Astha, on divis?
What we have seen is that custom synthesis business is showing strong performance, although generic business performance is still muted. But we are expecting custom synthesis business to continue to show strong growth. And that is why we are positive on this counter, recommending a hold. Initial price target which we are giving is at around 52.85 to 52.90 level. I mean, somewhere near to 5300 odd levels. So we are recommending hold on this counter.
Okay, you're recommending a hold. Now we have Mehek, who writes to us from Mumbai. Is asking if she can buy shares of Zydus Life at current levels. Well, there's negative news which is coming on Zydus Life today because they've got a warning letter for one of their injectable plants. But nonetheless, the stock is still only down around 1.3%. What is your recommendation, Astha, on this?
So Zydus Life, we are not recommending right now to make an entry into this counter. Wait for some more time and then make an entry into this counter. Meanwhile, if someone has the stock in their portfolio, they can continue hold it for the price target of around 1200, but that too in the long term. Now, talking about the fundamentals seems to be okay about this counter because what we have seen that they have gained market share in one of their key products. So that will help the company going ahead. I think Zydus Life is well poised to show strong financial performance going ahead also on the basis of some launches as well. So we are positive on this counter, but due to this negative news, I think the stock may fall further. So wait for some more time before making a fresh entry into this counter, but a hold can be recommended on this counter.
Okay, a hold can be recommended on this particular counter. That's on Zydus Life. Quickly, Richard, your call on it.
So in the last 1.5 years, in this uptrend, you've seen that on corrections, the 40 weeks exponential moving average technically has been acting as a good support. And that moving average support is right now placed around 1,990 range. So if anyone is looking for fresh entry in this stock, then wait for some dip towards that 1,990 mark. If it comes there, then the risk reward ratio would again become favorable to create counter longs over there.
Okay, all right, Ruchit, as well as Astha. On that note, we're going to wrap up on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.
$667, and they believe it's a well-thought merger. And post the merger, Gujarat Gas will become the second most, second big company in the gas trading space. So that's broadly what the analysts are saying. In fact, Jefferies was slightly negative on the stock, but post the merger, they believe that the fair value could be close to 513, but they still believe that earnings could be volatile and there could be some impact on the gas margins post this merger. So mixed view from analyst point of view, but the stocks are reacting pretty hard. I guess the two big takeaways: one, it just simplifies the holding structure between the Gujarat Gas and GSPC and GSPL, and two, a bit of value unlocking for the GSPL shareholders.
Hang Seng is the underperformer across the Asia Pacific this morning.
Wrong notion that's going on that the GDP growth is the slowest in 5 quarters.
We are a low-income, aspirational country, wanting to become a middle-income status.
Next target for the Nifty is 25,530.
Average daily value over the last 6 months has been revised from 10 to 35 crores.
25,300 plus is where the index is at.
Pace of the move is now beginning to slow down slightly.
16% year-on-year growth with a sale of about 43,000 SUVs.
The Nifty is holding above 25,300.
Big move in Gujarat Gas as well as in GSPL.
Bajaj Housing Finance is one of the rare AAA rated NBFC that's left in the streets.
Mid-cap index and the small-cap index after the record rally are seeing a bit of profit booking.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. You got the market, which is looking a little unsure, a little more unsure of itself than it was early on, the first couple of hours of trade. This is Closing Bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi here in the studios, and Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. So, folks, getting a little quiet after hitting the highs of what was, I think, 25,330 thereabouts, right? But now a little quiet.
Well, that's right, and we have a full house after a while. All 4 of us are there on the show, so let's hope this winning streak continues, guys.
And Nigel in the 13th day, right?
Yeah, 13th day. It's never happened before. So,
you know, it looked a little tricky, right? I mean, I think about an hour ago or so, because the market had sold off, and I think it went into the Nifty, it went into the red as well for a brief bit, or it was flat. So yes, so last Friday's close is 25,235. I think that is the close on Friday. And at the day's low, we went back to those levels. Yeah, 22,235 is where the day's low today was at. So, you know, all gains went and the market was flat. I think what has saved the day a little bit, maybe at the margin, is the Nifty Bank. So the Bank Nifty, the intraday will come up on your screen. That actually after 130 has seen a bit of a surge. Actually, starting 140. There you go. That's what I'm talking about. You know, it's sort of seen some move up 100 points, 0.25%, although that is also coming off as we speak. But I think that sort of recovery from the day's low for the Nifty was basically on the back of some buying that we saw in banks. Otherwise, I mean, I think overall on a broader market basis as well, it's quiet. Actually, if anything, sort of declines outnumber advances. On my screen, you got about 1,600 stocks which are down, and you got 1,100 stocks which are higher. And even if you look at what is up, usually, I mean, you know, what is up has got majority of the volumes and momentum, etc. It's not like that. I mean, you know, you got very small names, some of them large volumes, but not a very vibrant screen, even as far as the broader market is concerned. It's really micro caps and small caps here and there, and lots of names which we don't talk about at all, which are dotting the screen as far as the broader market is concerned. So quiet overall, I think, is how one should put it. Reema.
Well, the performance in the Nifty Bank would have been even better if HDFC Bank was participating today. So HDFC Bank is down 0.5%. But outside of that, pull up the Nifty PSU Banking Index. That's got a gain of about 0.8%. And that too spiked up in the last half an hour or so. Names like Canara Bank, Bank of Baroda, Union Bank, PNB. Big spikes seen in the last few minutes over there. Outside of that, outside of what's happening in the banking stocks, as a sector per se, you've got the Nifty FMCG Index, which is the top sectoral gainer, and that's up close to about 1%. ITC is a big mover. Britannia has a gain of about a 1.25%. And IT has started moving up a bit. So HCL Tech, let's get that stock up for you on your screen. Infosys, Tech Mahindra too, a gain of nearly 1%.
All those other large cap names that are moving around and doing well. Just looking at some stocks which are moving beyond the Nifty, and Adani Power definitely comes to mind. Adani Power has been in news as well. Over the weekend, they finally snapped up a bankrupt entity through the whole NCLT process. This is a company called Coastal Energen. They run power plants in Tamil Nadu, and I think the total value of claims was about 11,000. Adani managed to get it for about 3,300 crores, so a fraction of what the total outstanding debt was. And that stock's doing well. Of course, Adani has been on an expansion spree. That continues. But beyond that, some more names, NHPC, SJVN, some of these PSU folks, which have now got the Navratna status. These stocks have been up and about right from the morning. And then you have, of course, the stock of the day, which we've been discussing, which we will talk about more as we go forward, which is Gujarat Gas, and also the peer company, Gujarat State Petronet, GSPL. Both of those stocks are up and about. Gujarat Gas, the clear winner. Jio Financial Services is looking really interesting with so much of anticipation around the new F&O criteria, and if Jio gets an F&O and then whether it eventually makes its way to the Nifty or not. That's a stock that's had a pretty good session as well. But having said that, let's not lose sight of the fact that overall the mid-cap index is underperforming. There is still red on the mid-cap index. And the advanced decline ratio as well, Nigel, that's still negative. Far more many declining stocks than advancing stocks this afternoon.
Well, that's right. That's why Jio Financial is the name that we mentioned earlier today. It could be the stock to watch because of this optimism that it comes into the Nifty in early 2025, post getting into the F&O, if at all it does. And also the stock had corrected nearly around 18% from the recent peak. I think it hit a higher from 380. From there, it saw, a bit of a pullback. So that explains why that one's doing well. But, Surbhi, I just wanted to mention that it appears this cooling off, or we could be in for some kind of consolidation because of a technical factor. This morning, we had highlighted the PCR had moved to the upper end of the range. Today, at the start of trade, it was 1.45 odd. So that is normally at the upper end of the range, which calls for a bit of a cool off. So that's point number one. The second and technical point is the Nifty is up. Yes, even when we were up close to 50-60 points, the India VIX as well was up by close to around 5%. It's seen a sharp correction from the recent peak. But normally, when you have both of them moving in the same direction, that normally calls for some bit of consolidation or a pullback, and that's precisely what happened even in today's trading session. An ideal scenario is when the Nifty moves up and you have an opposite move that takes place, in the India VIX. So they normally move in different directions. Today they move in the same direction. So those are the two technical points that I want to make. But just keep an eye out on the Nifty Bank because it has to close closer to around the 51,550 mark. If it does, it will be good news because that's pattern line with the 50 DMA. The Nifty Bank has been trying numerous times all through last week to get past that 50 DMA. If it can get past that technical mark, it'll be a good, a good one for the bullish perspective because that's what could drive the Nifty even higher from here on. So keep an eye out on that mark. Well, how should you position yourself in the final hour of trade? We have Mitesh Thakkar, who's back with us. Mitesh, well, it's been a bit of a range-bound trading session. A lot of portfolios will not feel so good, though, because there's just a handful of stocks, and that too large-cap names have done well. First, give us your call on the Nifty, and then give us your stock calls.
Basically, one, we are very overbought because of the last 12-13 days of the upload. And in the morning also, I'm at this point that trail your stop loss to very tight levels, 25,190 on this spot. We didn't hit that today. And we have moved up. So we'll keep the stop at 25,190. There was this gap which happened on Friday morning, about 7-8 points, but the gap level is about 25,190. So as long as we are not filling the gap, I think we can still drift up on the index, despite the fact that we are overbought. And you were highlighting the Bank Nifty. That is something which I've turned positive since yesterday, or rather since Friday. And I think that's catching up. So Bank Nifty should head towards 51,800 odd levels to begin with, and then maybe even higher levels, 52,400 is also what I'm looking at. So that could propel the Nifty higher. So stay long. 25,190 is the level to watch on the downside. Just trail your stop losses over there and keep holding into long positions. On the stock side, I have a buy on MFSL with a stop at about 1,090 for targets of 1,150. And National Aluminum is a sell. It had a good pullback last 2-3 days back, but now appears that the pullback might be ending. So if it breaks 177, sell with a stop at about 180 half for targets of 170.
Okay, let's talk about individual stocks. Shares of Thangamile Jewelry and Gulf Oil Lubricant are surging in trade on the back of fresh brokerage initiations. Upasna is here with the details. Upasna.
First up, let me start with Gulf Oil. Systematics has initiated a coverage with a buy rating and a target price of 1700 per share. It says that the lubricant volumes have seen a CAGR of 8.2% over last 10 years as compared to 3.2% seen by the industry. Company enjoys a market share of 7 to 8% in lubricant and 25% market share in the AdBlue segment. The brokerage estimates company's overall volume would continue to outpace the industry CAGR by 11% from FY24 to FY27. It says a series of strategic acquisition and company's entry into EV charging and data center fluid space should improve company's growth avenues going forward. It is forecasting a revenue CAGR of 9.7%, EBITDA CAGR of 12.6%, and a PAT CAGR of 14.6% from FY24 to FY27. Now, next up is Thangamai Jewellers on our radar. HDFC has initiated a coverage with a buy rating and a target price of 2,500 per share. It says that company is a leading player in Tamil Nadu and is entering a golden era. The company is set to achieve a revenue CAGR of 26%, EBITDA CAGR of 33%, and a PAT CAGR of 41% from FY24 and FY27. And this growth will be driven by various factors such as accelerated store expansion, value for money offerings, and easy availability of capital at competitive interest rates. It is also estimating company's ROE to improve from 18% in FY23 to 32% in FY27, which is surpassing that of Titan.
Okay, all right. Thank you very much for that, Upasana. Indeed, Thangamel Jewelry is shining bright with that 9% gain. 1 year gain of about 78% on Thangamel. That's the one. Of course, Senco is also having a good afternoon. 6% up on Senco. And the 1 year tally is again around 65 to 70%. So the jewelry stocks, they have definitely been shining very bright. Deepan Mehta is with us. Deepan, good afternoon. Great to have you on the show. So let's start with the jewelers first. What's your sense? Can this sparkle, this glitter continue? Because the thing is that, I mean, if one buys now, obviously it's at elevated prices.
Yeah, that's right, Surbi. Thank you for having me on your show. That's right. I think these stocks are no longer cheap. I think they were trading at what 20-25 times trading 12 months when Titan was trading at 100 plus P multiple. Now these have played a lot of catch up, trading at around 50-60 times or so. So a lot of the positives have got captured in it. But if you look at the consistency of the earnings of these tier 2 jewelers, it's not as impressive as Titan was. So I would say that if you're an investor in these companies, remain invested because, you know, Ps can get re-rated even higher. But from a fresh investment perspective, I'd give it a pass. I think existing shareholders in Titan are better off in terms of long-term growth prospects and the way the company is diversifying into several other products.
Deepan, hi, afternoon. Indus Stars, Vodafone Idea, both down 4-5%. Any news here, or is it just routine profit booking, especially in a name like Indus Stars?
Rima, I don't know. I haven't heard anything in Indus Towers per se, but it's been performing exceptionally well over the last several months or so. And with greater and greater visibility as far as the collection from Vodafone goes, the sentiment in the stock has certainly improved. It could just be some profit booking in both these companies, nothing that I have heard of. But one date one needs to track closely is that curative plea, which is there with the Supreme Court. If anything positive comes out of that, then it'll be good news for Vodafone and Bharti.
Okay, all right, got that. We'll have more questions for you, Deepan, in just a bit. To stay on with us, let's move on and look at a story that our colleague Parikshit is addressing. Is it time for India to have its own global sovereign wealth fund? Well, sources say the government has initiated preliminary discussions with the Reserve Bank of India and SEBI for amending rules to allow India's own sovereign fund to take off. Let's straight away go across to Parikshit for more details. This sounds like a brilliant idea, and why not, Parikshit, for an economy that's growing so fast when wealth is increasing at this pace. Sounds great, but you tell us, what stage are we at and what are you picking up right now?
Well, the Indian government, ever since the Narendra Modi cabinet was sworn in for a third term, has been thinking about how to become a $30 trillion economy by 2047. And the views and the feedback coming in is that you need to also have a sovereign wealth fund as part of your larger 2047 goal. So what we're hearing is that preliminary discussions, proposals have been shared with the Reserve Bank of India, with SEBI, with the IFSC, Gift City, to see whether such a fund will help India's interests and also improve India's stature financially on the global map. There is also a feeling that while currently India does give grants and aid to neighbors, friendly countries, also extends line of credit, a sovereign wealth fund will strongly increase India's capability to invest in infrastructure projects abroad, such as in India's immediate neighborhood, also in countries like Africa, which are a major priority for the Indian government. So as of now, these discussions are at an early stage, but officials privy to the plan say that even a $5 billion sovereign wealth fund can generate investment opportunities of $10 billion every year. And this would make India a big global player, and there will be a lot of financial interest also from global players into this fund. They're thinking of using such a fund to invest in other nations via PPP mode. Some feedback has been sought from PSUs as well. In fact, we learned that recently there was a meeting with over 30 to 35 PSUs, and they were asked about the possibility of having such a fund, about their interest and about the success of the fund as well. So things do seem to be moving over the last 1 month. Let's see what happens in the next few weeks.
Okay, all right, Pariksha, thank you very much. Very, very interesting concept. I'm just thinking, you know, out of context, perhaps, that imagine if the government decides to divest even a little bit of its holdings in listed Indian entities over here that it owns and puts that money in that sovereign wealth fund. I'm sure there'll be plenty of wealth in this particular fund. That's on a lighter note, but Pariksha, thank you so much for getting us this very interesting story. Deepan, comment on this. I mean, obviously, it's a newfangled idea. It's far from sort of seeing absolute clear contours. But what would your thoughts be? And if you were, let's say, to be an advisor to the government for a fund like this, what would your advice be?
So, I think you yourself have given a suggestion to the government, a recommendation. Liquidate PSUs over here, which are trading at high P multiples, and buy other businesses globally which are available at attractive valuation. I think what a superb arbitrage that would be. But look, I think it's high time. We have $675 billion in Forex reserve, and a lot of it is in treasury bills, US treasury bills earning hardly any interest. If some portion of that combination of existing government funds can be used to acquire assets overseas, it will be great. Certainly, there are a lot of issues in terms of raw material security as far as India is concerned, and we want to industrialize faster and faster. So having strategic holdings in key raw material suppliers would be a big benefit. I think it's an idea whose time certainly has come, and I do hope the government takes it forward.
Hi Deepan, good afternoon, good to see you in. What do you make of Jio Financial Services? You know, the stock went all the way to 380, then it pulled back to around 320. Now you have a technical trigger that could play out, because if it comes into the FNO list, then it could possibly make its way into the Nifty. That was the only pending criteria out there. Your view on the stock at around 330, volumes much higher than normal and currently at the high point of the day.
See, Nigel, I'd be surprised, for a company which has yet to get operational business off the ground in a material manner to include as part of Nifty is something which, we need to think. End of the day, you look at the numbers which have come through, it's a business which takes time to scale. NBFC business, lending, wealth management take years and years, and building a team and going through at least one cycle of NPA are key to determine whether your systems, your collection efficiency and your risk management is in order or not. I've always avoided Jio Financial. Maybe we missed out on the rally per se, but I think there are so many choices in the NBFC space. Stocks like Bajaj Finance, Cholamandalam. I think their exceptionally good performance has come through and available at reasonable valuations. Well-established companies with good trajectory for growth. I would prefer those companies rather than a Jio Financial.
Ola Electric has now fallen for the 4th day in a row, and I think the high on Ola Electric was about 157, and the stock has now fallen to 114. Deepan, there were some news articles about how it's ceded market share, the top spot to some of its competitors in the month gone by. Now, pull up a 1-week chart or a 2-week chart of Ola Electric, and you would see the kind of decline that it's seen after the euphoric levels that it had, Where do you stand on Ola Electric?
Rima, wait and watch. I think this is playing out exactly the way these new generation listings came through. Zomato, Nykaa, PB Fintech, Paytm. I think they all started with great deal of euphoria, heightened speculative activity. And then once the reality started to sink in, once the quarterly numbers came in this case, Ola Electric, the monthly numbers came in, I think there's been disappointment, and I think it may continue for a few more quarters. These are businesses which are still will take time to mature and get into solid profitability. As we have seen in the case of Zomato, a lot of volatility also is there in such businesses. So I would avoid Ola Electric completely. Even 30-40% correction, let's look at it. Let's see what the first 2-3 quarter numbers are. What are the trajectory to profitability? Because it's not a platform company where, top line grows, so a lot of it flows to the bottom line. It doesn't work like that. It has a high variable cost as well. And on the whole, electric vehicle business has still to pull profitability in India and globally as well. So I'd be a bit cautious in Ola Electric.
Okay, all right, Dipan, noted your view. Thanks a lot for joining in, Dipan. Wishing you a good remainder of the day, but we appreciate you giving us your take on a whole host of stocks. Well, time to slip into a snappy break. On the other side, we have a special conversation lined up with market veteran Vijay Kedia. You don't want to miss this.
Investing.
Okay, welcome back. I think the market is very quiet actually. 32 points up, 25,268. That kind of a day. Broader markets are also not rallying. They're taking it quiet and more down than up. So I think it's an ideal time to talk about slightly bigger picture. Markets, of course. We have Vijay Kedia, needs no introduction, with us here in our studios. As promised, of course, private investor. Vijayji, great to have you with us here, as always. And I want to tell our viewers that, on Friday, you must have seen the Hurun India Rich List, which came through. There are promoters and industrialists and, all kinds of people there. But there was also Kedia ji on the list. So congratulations, I must say.
Thank you.
You know, अच्छी बात ये है कि you're not a speculator. You don't do leverage. You're not sort of trading in and out. I mean, I looked at your June closing shareholding. It's pretty similar to what the holding was 2 quarters, 3 quarters, 4 quarters back. Some small changes as such. So you're a long-term holder of stocks, and you're on that rich list. So I just wanted to start with that, and we'll get into markets, etc.
No, that is all right. If you, since you are talking about that list, it is 100 to 1276. So if you calculate reverse accounting, that is 15%. The marks is 15% out of 100. You know, okay. So that tells me that miles to go. So that is all right. But one thing it says that market में पैसा बनता है. It is like this, that long-term investing is the only way to grow in this market. This is what it proves. Yeah.
But you started by saying that long way to go. So
still long way to go. No,
absolutely.
Because the rank is 1 to 76. So it's still a lot to cover up.
Next year, where should it be?
We don't know.
It depends on the market wealth.
Exactly.
वो तो ऊपर ही जाएगा.
And now that also we don't know. Surbhi and I, we always say that your demat statement belongs to the market. Your bank statement belongs to you. You know, so we never know what is going to happen tomorrow, next year. We don't know about it.
But you've been cautioning on the market as well a little bit, right? You've been saying that last time I remember you said it's a stampede out there.
Yeah.
So is it still a stampede?
It is there in the market because some sectors have certainly cooled down, like what we spoke last time. Then after that, defense and all these PSUs had come down a little bit. But money hasn't gone out of the market. So that is one good thing also, because it will keep the market going. And that people are still, being adventurous. Look at the kind of like IPOs, YPOs, all these things happening in this market. So people are still, risk taking. That mentality is still there.
Correct.
So where is the opportunity right now? Because money is still flowing in. People want to invest in it. We believe in the India long-term equity growth story, but valuations are prohibitive. So where is it that you find opportunities?
Yeah, so again, it depends. I would not say this entire market is expensive, but I wouldn't say that the entire market is also cheap. I think 90%, if you will find that 9 out of 10 places, you will find froth in this market. So what I am doing for myself is just stay tight. Whatever investments I have made, I am just holding them. Maybe one stock here and there, I will switch or I will do whatever. Otherwise, basic thing is this: don't be adventurous in this market and just watch.
Hi, Vijayji. Hi, good afternoon. Nigel over here. Good to see you on that list, 1,276 odd. The way you said it, I could make out you're like that batsman who's batting somewhere lower down the order right now, but you have your eyes set, on coming in and playing a longer innings at the top of the order. So wish you all the best with regard to that. Since you were talking about market froth, Vijayji, I wanted to ask you about the SME sector in particular. You have taken some large bets in some of these names out there. And it seems for now the street is just painting it with the same brush. That a lot of them, there is fraud, they're being hyped up, etc. But some of them have themes as well. Just to highlight, there's this affordable robotics company that was SME, now it's going to be listed on the main board. So the management as well has done some work besides having a theme out there. What is your view on the SME space and some of these smaller cap companies?
No, I feel that there is froth in SME also. But the thing is this: a new investor, it would be very difficult for a new investor to discriminate where is the froth and where there is no froth. So that is why it becomes little tricky. Now coming to the stock which you have just named, that affordable, I'm an investor in this company for last many years. So that is a disclosure. But let me tell you one thing, Nigel. It is like an upgradation from SME. You are switching to say main board. So it is like from economy class to business class. So ultimately it is not going to change anything. That amount of time you are going to travel is the same. So maybe you will have little bit comfort here and there if you want to raise money and all. So that will give little comfort to your investors and all. Otherwise, fundamentally, it doesn't matter.
So you'll feel that maybe the steward or the stewardess comes and gives you like a juice couple of times more because you're in business class on the main board.
Yes.
In terms of getting more
comfort.
Funding. Fair point. But just to expand on this point, there is the SME IPO buzz, and we've seen the regulator also warn on it. There's also the entire sort of FOMO about unlisted in general. Now, whether that's unlisted, Swiggy, the need to be in the pre-IPO stage of the next big IPO, whether it was Ola or Swiggy next. What do you say about that? And in terms of the IPO pipeline, I'm not talking about SME now, main board, interesting bigger companies that are coming out. What are the concepts or what are the kind of companies that look exciting to you?
No, nothing. If I don't invest in IPOs. I don't invest in pre-IPOs also.
Okay.
And certainly in this kind of market, so far as while I'm talking to you, I will not invest. So I am just sticking to my old investments and all, and I'm comfortable. So I would not like to be adventurous. When there is a typhoon, no. That is the best thing is to stay calm.
And your portfolio, we'll have the portfolio up. We think we were showing the portfolio and it's largely stable. This is as of the end of June 30th. Stocks where, companies where Mr. Kedia has over 1% holding. There'll be others as well under 1%. That's not, of course, public. Mr. Kedia, on Surabhi's point, pre-IPO, I think it is also a little bit of supply chain management, right? I mean, you are going back and back because by the time it comes to the market, it is expensive. So you're trying to, isn't that what is happening? I mean, for people who are doing it, they're trying to buy it, before as a private company, then, anchor mein to, as a small investor, you have no chance. So a lot of the interest in the pre-IPO at an early stage is because at every round, at every stage, by the time it comes to the market, and it is true for large investors as well, that you're going right to the source to try and get it as cheap as possible because, as you've been saying, by the time it gets to the market, it is not cheap anymore. It's kind of fairly valued or expensive.
Prashant, somehow I feel this 9 out of 10 stocks are manipulated. Let me tell you, if I can use this word, either manipulated by merchant bankers or manipulated by the owners, promoters or investors, or even the person who is applying into all these companies. I think there is a manipulation going on. There's a scam going on in this sector. I'm not saying that...
Which sector? In
SMEs, IPOs.
SME IPOs.
SMEs, IPOs and all.
Okay.
Yeah.
But only the SME board, or you think that even in the main board, in the pre-IPO segment, there is some sort of undesirable element of trading?
Look at Ola. What happened to Ola? I think it got listed at 76 rupees. I think the moment it listed, it was not in circuit and all. I think
it had a very calm 1 or 2 days.
And then what happened after a few days or maybe after a few hours it started and stock went up to 155. And one big FIIs or one big investor, I don't know, they dumped the stock, they sold the stock, and stock is down 30%, 114. What is this? It may not be manipulation, but it's a euphoria, and it's a clear-cut euphoria. So I would like to stay away from all these kind of happenings in things in the market.
But you said specifically with regards to SME, do you think last few weeks it's kind of quietened down a little bit after all the, SEBI has put out an advisory, and what one I hear at least is that because these are not approved by the regulator. These are approved by, these SME IPOs are approved by exchanges, BSE and NSE. But rate of approval has come off. Earlier it used to be 3, 4, 5 IPOs every week. But it's kind of, they're slowing it down a little bit.
And that is why that Yamaha dealer got listed. Oh, baap ne nahi kiya to bete ne chori kar liya. Bete ne nahi kiya to pote ne kar liya. How does it matter, yaar? You know, that this is what the news is, no? Two
dealerships.
8 employees and all. So I don't know, they must be using some AI and every dealership will manufacture some vehicles.
And we were having this chat with Deepak Shenoy as well on that particular issue. Now, they did not ask for 2,700, 2,800 crores. They asked for, 12 crores, right?
12 crores.
12 crores. They got a subscription for people said
400 something, whatever.
Now, what is the promoter going to do? You're right, it's euphoria and people are really chasing things up. But would you call it, how would you characterize it?
Bull market.
I think these kind of things are structured, Prashant. It did not happen just on its own. It is pre-decided. I think all this, I don't know who is the merchant banker for this company. I'm not talking about this particular company. But I feel that this is what I had told SEBI also in one of committee. They had taken me, I said the same thing there also. It is all these things look like pre-structured. They sit on the table, okay, he will apply this much. They have a set of investors who had made money in the past on their IPOs offerings and all. So it's a structured issues, a structured game. I'm not talking about this particular company, but usually I think these are structured issues.
So this subscription of 100 times, 200 times, to some extent is a bit engineered, according to you.
Engineered, yes, 100%. It does not happen like this. Yes.
Now, of course, SEBI is saying on day one there's a cap, right? 90%. on SME.
Yeah, now they
on
have
SME
changed
listing. But it's 90.
So you liken the market environment currently to that of a typhoon.
Yeah.
So, that causes a lot of damage and destruction. But at the broad index level, so far, we've gone unscathed. So are you anticipating a big correction in the market?
Correction is coming in this market. Earlier, I was expecting that maybe this entire market will collapse. But it appears that this liquidity will not allow this market to collapse on the whole. So maybe it will keep on happening. Market will keep on rising on a rotation. So maybe some sectors will react, and then money will go in another sectors. So this rotation will continue in the market as long as US market is holding the fort.
But global is still important? Global is still important? Or
of course, it is important. Sentiment-wise, it is important, I think. Yes, I think it is.
Because August, we got a bit of a jhatka, but it was quickly corrected, right? Early August.
तो झटका ठीक है झटका because ultimately वो झटका के बाद में वहाँ का भी market जरूर देखते होंगे कि भाई Dow Jones is also at all-time high, Nasdaq is also coming at all-time high.
Correct.
So that sentiment-wise, it does matter, I think.
Vijayji, the thing is that what we are trying to understand is the new normal of getting a huge amount of domestic liquidity month after month, thanks to the mutual fund money that's coming in. And that is one trend that is not reversed, right? So one wonders that, and that's why maybe all issues are getting bought. I mean, when you had capital gains tax that got bought, you had election volatility that got bought into, you have US hard landing, soft landing, Goldilocks is there, not there. It's all getting bought into. Does this worry you, just that we are in maybe an irreversible kind of a situation where money just keeps coming every month?
No, it is not going to last forever. Of course, it does worry me because I think that it is not going to last forever. Now, coming to your point, like long-term capital gain tax and STT, STC, because there is so much volume in this market, so much satta is going on in this market, so much gambling and jua is happening in this market. So they don't worry when you go to the casino. And suppose if you are charged 5 rupees ka cheese ko, if you are charged 25 rupees or 50 rupees, you don't mind.
Yeah.
So, and as I think I had said on the channel also that how many people pay long-term capital gain tax. The way the day LTCG was raised, I said it is not going to have any impact in this market because hardly few people pay long-term capital gain tax.
You just liken the market to a casino. You think we've really gotten to that state?
What is happening in this market, this is very similar to the things happening in a casino.
Okay,
it's a modern casino.
Nigel?
All right, Vijayji, final question. Since you spoke about the EV theme, Ola, and you gave your take on that, I wanted to ask you about the other ways of playing this theme. You have something like precision camshaft out there. Plenty of promise, but delivery has yet to come. You want to run us through your thesis out there?
Yeah, Nigel, I am an investor in this company.
Yes.
So that's a disclosure. I have vested interest. And I think the kind of things what they are doing since last 3 years, that retrofit or whatever that people know very well. So, and they are, of course, dealing with some of the large LCV manufacturers. So, and if we have belief in this EV theme and all, so of course, then retrofit will also work sooner or later. So maybe they should be benefited.
So Vijayji, let's now talk about the investor who wants to go beyond, whether it is casino, whatever is happening in the market. But we're talking about people who want to build long-term wealth. The problem that they are grappling with is that for most cases, the stocks that people want to buy, the prices are not coming down. And the ones where you have maybe valuation comfort, the likes of your large blue chip banks, for instance, or your FMCG companies, where you have quality and maybe good pricing as well. Those stocks have really not taken off in a meaningful manner. So investors are left with this confusion in terms of what to buy. So what would your advice be?
No, I will say that what I can't advise because I'm not an advisor. I will say that what I am doing, suppose if I like the shares today only, and maybe there must be some froth also in that particular stock because of the whatever happening in the market. So there are two ways, Surbi. One thing is that I buy now and maybe stock price will fall 10-15% and I will regret. And the second option is like, suppose if I buy today, and if I don't buy today and stock goes up 15-20% or maybe 20-30%, then again I will have a regret. So you have to choose one regret, which is closer to you. So to me, that regret is better that I buy and stock price goes down. That is, I'm comfortable in that regret rather than missing out the train. So it depends on your individual choice that where you are find your own comfort zone.
Okay, and I know you can't name stocks, but maybe themes or ideas that really inspire you right now. I mean, people are talking about quick commerce, then whether it's electric mobility, data centers. I mean, there are a lot of newer sort of topics that people are discussing where companies are also coming up. Where do you think long-term money can be made?
Maybe money can be made in all these sectors which you have just named, but these names have become very fashionable. So I usually don't invest in the sectors which has become so trendy or so fashionable. I like to invest in the sectors which is which is not that much in the public domain, or people are skeptical about those sectors. I usually invest there.
And that phase is long gone, right? We are in a phase where most things are glamorous.
Fashionable and glamorous,
so, those opportunities have thinned out. Vijayji, great to have you with us here. Thank you very much.
Thank you very much.
Thank you.
And really appreciate it, as always, here on CNBC. Well, I think we'll take a quick commercial break now. We're up about, 45 points. So just holding pattern through the course of the day, 25,278. Take that break. We're back in just a bit. Stay with us.
Welcome back. Jio Financial Services. That's the stock of the last 30 minutes or so. The street believes that could be making its way into the Nifty, at least as of now. If it can make it to the F&O list, I think just pull up the intraday chart, or if you can get a candle as well, it'll tell you the picture. It's moved very, very swiftly to the high point of the day. So that's the one that we're talking about. But let's get an insight into what's going on in D Street Chatter. Nimesh joins us to help us out with that. Well, Nimesh, tonight, no shocker coming on from the US market, so that's cool.
Yeah.
But how are you reading today's flows?
Extremely lackluster day of trade. That's the way I'll put it. Hardly any information, hardly any flows as well. Even from a flow perspective, I understand there's a very small MOC sell basket. But again, it's going to be very, very selective stock. So I think must read into that as well. From a sector point of view, I guess NBFCs have done well. But again, today's move in NBFCs is backed by some FI buying as well. That's the overall flow from an FI perspective. But on the flip side, we've seen some bit of profit booking in metal names. So clearly, there is no direction as to speak, Nigel. And as I said, extremely lackluster. There is no cues coming in from the US market as well tonight. So not much to read into. And even the flows are quite muted.
Let's get to some exciting stuff then, some little masala.
Well, honestly,
what do you have for us today? At least 2-3 stocks you'll have for us. So tell us.
Nigel, honestly, I've struggled to get some chatter for today. But anyway, I've got few, managed to get few. The first one is Sudarshan Chemical. Well, that stock has been buzzing off late. In fact, some good strong flows as well from larger HNIs is what I understand off late. But again, the street is anticipating a corporate development. Largely a potential overseas acquisition is what the street is buzzing for. So expect something on those lines in Sudarshan Chemicals going forward. The second stock is ITC. After a long time, some bit of buying traction seems to be back in that name as well. So strong buy flows from larger FIs. So expect high delivery volumes in ITC today. On the other side, Power Grid has seen some bit of selling pressure today. So for second day running, there is delivery-based buying happening in Power Grid from large institutions, and so expect high delivery volumes there as well. And the last is Safari Industries. This is interesting, you know. I was reading a note as well from Centrum. They've met the management. The management is quite buoyant about growth going forward. And interestingly, I understand the selling pressure from a large fund seems to be largely over. So it's a thinly traded stock. So the volumes get impacted if there is a large seller, a large buy. But the large selling seems to be largely over in Safari at these levels.
Okay, all right.
Mitesh is back with us for a few BTST calls that you can reverse tomorrow. Mitesh, hi. What do you have? You're on mute.
No, yeah. Britannia is closing near the highs, so I think that could be a good stock to look at. And that apart, I think, you know, I also believe that Geo Financial, and disclaimer that I have the stock in my portfolio, Geo has given some kind of a very strong reversal signal. So it's not a BTSC, it's a trading buy. I would suggest a stop at about levels of 335, 334, and look at a target of around 365 to begin with, though eventually I suspect the stock could test higher levels.
Okay, let's get to the other big story. Bajaj Housing Finance released their RHP over the weekend. The IPO is going to open on the 9th of September. Tomorrow, we will know the pricing details. This is going to be the first IPO from the Bajaj Group in more than 3 decades. Much anticipated. Abhishek joins in with some more details on this. Abhishek.
Well, Bajaj Housing Finance, it's one of the few NBFCs or HFCs that are still a AAA rated entities, especially in the housing finance segment. So the IPO opens on 9th of September, closes on 11th of September. They are looking to raise about 6,560 crores, of which 3,560 crore will be fresh issue of shares to investors, while you know there is an OFS of about 3,000 crores. So promoters, that is Bajaj Finance, is looking to garner about rupees 3,000 crore from this IPO. As I mentioned earlier, the credit rating, one of the few HFCs with AAA rating, BHF, that is Bajaj Housing Finance, LIC Housing Finance and Canfin Homes, only these 3 HFCs are now AAA rated, while PNB Housing Finance, Aadhar Housing, Aptus Value, all of them are AA rated. It is having the best in class asset quality. Take a look at its gross NP ratio at just 0.28% is second best is about Canfin Homes, about 0.9% that they recorded in Q1 FY25. And they also have the lowest net NPA ratio at just 0.11%. And when you compare that to, you know, the next best from Canfin Homes, it's at 0.49%. The AUM is at 97,071 crores. So this will be the second largest housing finance company to get listed next to, you know, LIC Housing Finance, which has an AUM of about rupees 2.9 lakh crore approx. So if you take a look at the AUM mix, about home loans is 57.5%, LAP or loan against property is close to 10%, lease rental discounting is about 19.5%, developer finance, that's about 11.2%, and you have others which are at 1.8%. Back to you.
Okay, all right, got that. Thanks very much, Abhishek, for the details there. So all eyes on this big issue as it opens out next Monday, which is the 9th of September. Let's welcome in our next guest on the show. We have Anand Tandon joining in for some perspective. Anand, thank you so much. So let's actually start there. We'll have another listing from the Bajaj stable after a long time, this time on the housing finance side. And I think, I mean, while half the money is going to go to the promoter, a little over 3,000 crores comes into the company. Have you looked at the business here and, you know, maybe overall housing finance and then how Bajaj may be placed given its pedigree?
Well, yes, I think, you know, I have mentioned on this channel before as well that among the financials, housing is something that I think is doing quite well and is still relatively attractively priced given the new listings that have come in over the last year and a half. Bajaj, I think, would fall in the same category, probably obviously more pricey, but nonetheless, as you said, one of the key issues in housing is the ability to raise money cheap. And given its background, Bajaj would be able to do that compared to many of the other more recent competitors who are not as well positioned. So from that perspective, it is a portfolio which is likely to be doing quite well. Growth is not an issue at all in that segment. The issue is really in terms of being able to price it such that you get the best credit. And I think Bajaj has that to offer. The fact that the promoters are taking money off the table is a common thread that is happening through almost all the IPOs. In fact, almost 60% of the money that is being raised currently is not coming into the company. And that tells you just the sign of the times.
Okay, so that's a view on Bajaj Finance. The market, by the way, is still holding on to a gain of about 48, 49 odd points. Trends haven't changed. The Midcap index is still underperforming. By the way, there's been a fair amount of buying on some of the Adani Group stocks today, Adani Green, Adani Power. These are up and about as well. Let me just check this with you, Anand, if you have any views. I mean, over the weekend, the fresh news on Adani Power is they've snapped up another asset from the NCLT, a bankrupt power producer in Tamil Nadu. And obviously, they've got it at a great bargain price, fraction of what the total dues were. And any thoughts on either Adani Power or the group overall? Would you be taking any exposure here to any of the entities?
So I think, power as a sector overall, I think has become fairly overpriced, largely on account of the fact that there is now visible demand. Just about half a dozen years back, you were looking at power capacity being available, and when these companies went into NCLT, at around 2 crores per megawatt. Now you can't buy anything at 6-7 crores or more. And you can't certainly set it up at that price anymore. So, you are having a situation where, because of the fact that near-term demand has become fairly strong, the assets are being priced again, fairly aggressively. At the time when it was at 2 crores per megawatt, nobody was, was willing to buy it. So it's like, it's a cycle. Currently, I think most of the asset owners are overpriced. Adani Nandal is very much in the same category. If you are looking to look at power in related areas, I would still prefer, companies manufacturing transportation components, etc., because that's one sector that will have ongoing demand, as well as the fact that, they are perhaps a little more or less regulated, therefore are able to control their margins a little bit better. I think, companies which are actually in the generation and the consumer-facing space will have pushback from both the consumers as well as regulators fairly soon.
All right, Anand, stay with us. There is still about 11 minutes to go for market closing. We're going to take a break here. We're going to leave you with some sound bites from Jairam Sridharan, Managing Director at Piramal Capital and Housing Finance. It's an NBFC with about 70,000 crores in assets under management. This is him talking about margins for the sector. He thinks they will bottom in the second quarter. And a little bit about leverage in the system as well, especially on the unsecured lending side. Listen and take that break. We're back.
I do feel like Q2 is going to be the bottom from a margin perspective. Things should start looking up. A lot depends on what happens in the policy environment and if some easing starts happening and how long it takes for that easing to start showing up in lending rates. But see, the liquidity was way tighter 2 months ago than it is now. And hopefully it stays that way. Hopefully, I mean, it's not an excess liquidity environment, but it's not a very deficit liquidity environment either out there. So hopefully things stay that way for a little bit longer for pricing pressures to ease. Point about leverage. I think leverage is a real issue in the market. Here are two statistics that kind of stun me, honestly. Of all the applicants for credit, unsecured credit in the market, 10% have more than 10 live unsecured loans right now. Of all applicants, 10% of them have more than 10 live unsecured loans. How crazy is that? Who would have thought that anybody would be running 10 unsecured loans? 10% of the applicant population is running that today. Here's another statistic. Everybody who's applying for digital loans, right? You should ask this the FinTech panel next. Everybody who's applying for digital loans, 50% of those applicants have more than 5 unsecured loans open. 50%. This is not normal. This is not the way lending works. This has not always been the case. It is new. Something new is happening in front of us right now.
Transforming Reliance into a deep tech company with advanced manufacturing capabilities in 3 seminal ways. First, we are embedding innovative technologies in every single business to generate ever greater value for our customers. Second, our talented engineers and scientists are incubating several critical technological innovations in-house to enhance our product and service offerings. Third, we have built an AI-native digital infrastructure for all Reliance businesses and have built our software stack, integrating end-to-end workflows and real-time dashboards. With the success of our Atmanirbhar efforts, we are accelerating India's transformation into a deep tech nation. Reliance spent over 3,643 crores in the financial year 24 towards R&D, taking our spend on research to over 11,000 crores in the last 4 years alone. We have more than 1,000 scientists and researchers working on critical research projects across all our businesses. Today, to support our AI everywhere for everyone vision using connected intelligence, I am thrilled to announce the Jio AI Cloud Welcome Offer. Today, I am announcing that Jio users will get up to 100 GB of free cloud storage to securely store and access all their photos, videos, documents, and all other digital content and data. And we will also have the most affordable prices in the market for those needing even higher storage.
Investing.
Welcome back. Well, a couple of these retail-related names are doing well. V-Mart Retail has moved to the high point of the day, so V-Mart's intraday chart should come up for you. And ABFRL has been a relative underperformer, but it's picked up pace from the time the management has indicated a more shareholder-friendly move. So that one as well has spiked up. Anand Tandem is still with us. Anand, I wanted your view on the jewelry space. We were talking earlier in the show as well that stocks like Thangamile have done quite well. You have Kalyan now that's moved to the high point of the day. And, the blue-eyed boy, so to call it, that's Titan, has actually underperformed in the last 1 year or so. What's your preference in this space?
Well, obviously, it depends on how big a fund you're putting into it. Thangamile is probably the least liquid. Some of the other companies will be a little more easier to trade. Titan, obviously, is not only a jewelry player anymore. They have other areas from which they are growing. And also, they are probably the most expensive by far. So it's not surprising that you are looking at some of the smaller companies.
Okay, I think we lost the line there with Anand. We'll just sort of try and go back to him as soon as possible once we fix that. But, we've been trading absolutely flat for the bulk of it. Let me just highlight a few of the names before we go back to Anand. Let me sort of look at some of the gainers. Market breadth is negative. But look at the Adani Group stocks, right? Look at Adani Power, Adani Green. Both are up sharply on decent-sized volumes right now. They'll come up on your screen. Bajaj Holdings is another one which has been sort of buzzing. Adani Power and Green, and then Bajaj Holdings. Of course, the jewelers we've been talking about, Senco, Thangamile, etc. AG's Logistics is another one which actually has been looking up from the word go. It's a big performer through the course of this year so far. Idea is, in terms of losers, Idea is the biggest volume-led cut right now, followed by Dixon. It's Indus Tower is perhaps another one. So telecom is not having that great a day, Idea and Indus in particular. Talking about Dixon, we actually had the management with us. Mr. Atul Lal was with us to talk about the business momentum and growth outlook, etc. And, today the focus, we usually talk to them about the sort of mobile segment and IT hardware in terms of laptops, etc. We spend a little bit more time about, what their plans are in the AI hardware server segment, which is part of course, what they plan to do as far as IT hardware is concerned. Listen.
You see, 24-25, the largest contributor to our revenue is going to be mobile. Almost 70%, 70 to 75% of the revenues are going to be coming from mobile. And also in 25-26, that's expected to be the biggest contributor. And not only the contributor to revenue, also to the revenue growth. In 25-26, as I shared with you, the number is still going to be relatively small. We're targeting around 3,500 crores. Because it takes almost a year and a half to ramp up. The relationships acquire the larger share of customers' wallet, acquire more customers, stabilize production, deepen the value addition. So the bigger contributor of IT products and revenue is going to be in 26-27.
We also today saw reactions to the auto sales numbers. So Bajaj Auto and Hero MotoCorp, where the two-wheeler sales numbers look very strong, ended up Bajaj Auto up 2% today for this. In the last 1 month, it's up nearly 15%. But on the flip side, Tata Motors, M&M took a backseat. Disappointing numbers there. What would you like, Anand, in the entire auto space in the frontline pack?
Well, I don't particularly like the space in the first place. I think if you have to be in autos, it's better to be in auto ancillaries.
Okay. All right. Well, Anand, I think we'll now start winding down what has been a bit of an okay day, a day of consolidation for the bulls, because they managed a much bigger move above 25,330. But from there, we've cooled off to look at about a 25-point kind of up move on the Nifty. So let's find out the gainers. Of course, the Bajaj twins on the financial services side, Bajaj FinServ and Finance, excited ahead of the listing of Bajaj Home Finance. Then there was HCL Tech, which was probably the best performing IT stock. Infosys was also not bad, 1% higher. Tech Mahindra put on about 0.6% as well. Select buying in IT continuing. ITC was the other large cap name that did well, supported the market 1.5% up. And then you have, of course, Hero Moto and Bajaj Auto, the two-wheeler names like Rima was mentioning. They have done relatively better than some of the four-wheeler names. Speaking of four-wheelers, look at Tata Motors, 1.5% weaker over here. Let's pull up Maruti as well. Maruti was very quiet throughout the session, is ending absolutely flat. Mahindra & Mahindra has seen some profit taking, down about 1% as well. Dr. Reddy's, because of some of the regulatory issues in China, that stock was under pressure throughout the day, down about 2.5%.
The Midcap index ends in the red, down more than 100 points. The advanced decline ratio at 2 stocks gaining for 3 stocks declining. Jio Financial Services was the big winner on potential inclusion in the F&O segment, 8% gain on that. Then you had the gas stocks. So Gujarat Gas up 11%, some upgrades coming through on the back of the merger announced by the Gujarat government. So Gujarat Gas and GSPL. GSPL up nearly 4%. You also had a couple of losers, Industars, Vodafone Idea, Paytm, Ola Electric. Catch your attention on the way down.
Well, I mean, actually, even more down than up, and generally speaking, a quieter kind of a day with not that much activity all through in terms of the price action. Sectorally, metals were down and pharmaceuticals. I mean, there were 2 indices which were down over 1%, and these are the 2. And on the upside, you basically had sort of gains come through in FMCG, and you had published set of banks and IT, which were also up. Actually, FMCG is the only meaningful gainer, nearly about 0.9% up. Nifty ends about 40 points higher, just under the 25,300 level. So that's essentially the sort of wrap out for today. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thank you very much for watching. But Markets Forward is coming up next, and Rima and I'll take all the action forward for you in just a bit. Stay with us.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon
Markets end off the day's lows with key indices consolidating in a narrow range. Midcaps underperform. Financials, IT and FMCG are key gainers. Pharma and metal stocks slip.
Gujarat State Corporation and Gujarat State Petronet will merge into subsidiary Gujarat Gas, while the transmission vertical will be spun off into a separate entity. Analysts see significant gains from synergies, cost and tax saving following the scheme of arrangement.
RBI Deputy Governor refutes the label of being trigger happy. Clarifies that regulatory actions against entities are rare and deliberate. Speaking at the CNBC TV18 Banking Transformation Summit, he also rejected claims that recent actions on some P2P lending platforms are overly harsh, emphasizing their necessity for maintaining industry integrity. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know to figure out what you need for the next trading session. We've had 13 days of a market up move. Nifty up for 13 unprecedented days in a row. I'm Prashant. With me, my colleague Reema. Reema, hi.
Hi, Prashant. Quiet day. The Nifty moved in just about a 100-point band, but still making those records, right? A record high today and plus extending its rally for the 13th day. But we'll talk more about it. We're going to be with you for the next 20 minutes with all the big news, key developments in Dalal Street, the top corporate voices and the events to track. But how would you characterize today's trading session? Quiet?
A bit blah, right? I mean, it didn't look like it was going to sort of at any point break the ranges at all. So on the upside, we crossed 25, 300 levels, 25, 320, 330. We got to that. I mean, on the downside, never really came to closing in, sort of breaking any supports, although there was a bit of a sell-off which happened. And you can see that there, the market actually went absolutely flat at the day's low. So, we went to Friday's close, which means that all the gains would disappear. But at about 140-ish or so, the Nifty Bank started to rally. And I think that is essentially what propelled the markets back up higher once again. Although the Nifty Bank itself gave up gains and didn't even have 100 points on the board to show for it by the time we actually left off. Broader markets were quiet as well. I mean, 0.25% lower on the mid and small cap indices. And, even again, I mean, if you look at the broader market, usually there is enough action and excitement and activity. It was not a vibrant screen in that sense, although there were movers, as we will find out with Vivek in just a bit from now. Sectors which did well, FMCG. I mean, actually, that was the only index which was up about 0.9% or so. PSU, banks and IT. And on the downside, you had metals and pharma, which were some of the top losers really coming through. As I said, I mean, we've been sort of gaining small. I mean, nothing large, but 13 days now, markets actually rallied on with, of course, sometimes with the help of global markets, but mostly on our own steam. Rima.
And the fifth day when the markets went on to hit a new high, a record high. So the Nifty opened strong. We opened straight away above 25,300. We went on to hit levels of 25,333. That is the new all-time high on the Nifty. But ultimately, we ended 55 points off that and closing below the 25,300 mark. The Sensex ends with a gain of about 180 points. But lots of interesting large cap action. So the top gainers were Bajaj Finance and Bajaj Finserv, on the back of that anticipated IPO from Bajaj Housing Finance, their subsidiary. You had auto stocks reacting to the sales numbers, so whether it's Tata Motors, M&M on the way down, or Hero MotoCorp and Bajaj Auto. So lots of news flow, action seen in individual stocks. But here is a lineup on what we have for you in store today. Top movers and shakers of the day with Vivek. Stocks buzzing today are Gujarat Gas and GSPL on the back of the proposed amalgamation. Thangamayil and Gulf Oil also in focus on the back of positive brokerage outlook. And then CNBC-TV18's popular segment, D-Street Chatter on the show. Nimesh will join in to tell us why Sudarshan Chemical is buzzing. And finally, the big events to watch out for tomorrow. But on top of the show, let's go across to Vivek. He's standing at the big wall with the top stock movers of the day.
Well, thank you so much for that, especially when you're talking about the markets. Once again, a day where you actually saw more advances than declines, especially in the broader end of the market. So quite a few stocks on the radar. We'll start off with the top gainers as far as the Nifty was concerned. It was the Bajaj FinTwins, Bajaj Finance, Bajaj Finserv, both these stocks gaining significantly. Remember, they've been gaining for quite some time now. This is ahead of the value unlock that will be seen ahead of the proposed IPO as far as Bajaj Housing Finance is concerned. Some of the details are out. Now, when you're talking about Bajaj Auto, that was the next stock on the radar, given the fact that this stock actually saw quite a bit of an outperformance today. The auto sales numbers actually exceeded the street estimates on the back of that, one of the top gainers. The other pocket of the market that did quite well after a while was actually the PSU banking index, especially in the second half of the trading session. You saw some up move in names like SBI, Bank of Baroda, Canara Bank. All of these names actually saw quite a bit of an up move in the second half of the trading session. The fourth stock, of course, has to be Gujarat Gas. Corporate simplification, EPS accretive from year one itself, and streets gave a thumbs up, 12% higher. And in the broader end of the market, Sona Comstar today on good volumes, amongst the top gainers as far as the NSE 500 index was concerned. On the other hand, in terms of laggards, nothing very news specific, but the entire pharma pack today saw quite a bit of a sell-off. Granules down almost 5% at one point. Mankind, Glenmark, Dr. Reddy's, Laurus Labs, all of them down in the session today. And similarly, metal stocks too saw quite a bit of a sell-off for profit booking. Look at names like JSL Industries, Hind Copper, Hindalco, Nalco, all of them cooled off a little bit. And lastly, the telecom pack today saw quite a bit of profit booking. Indus Towers amongst them falling almost 4%, one of the top laggards as far as the F&O space too was concerned.
All right, Vivek, thank you very much for that. So that's a summary of what went up and down through the course of the day. Anand Tandon and Shilpa Raut are with us to take us through the fundamental aspect of it and the price action as well. Thank you very much, both of you. Shilpa, if I can ask you to look at the price action and tell us what looks likely next, at least in the Nifty and the Nifty Bank from here on.
Prashant, Nifty is well in sync with the view that we have been focusing on for targets of 25,300 to 25,500. So it is there. 25,300 was done and dusted also today. So from here, the next move will be towards 25,500. The weekly placement in option chain also signifies that 26,000 is also the target that one can definitely look upon to. But of course, 3-4 days such move can't be anticipated. But a move for more 200 or 300 points definitely is very much likely for Nifty. Bank Nifty, on the other hand, has given a reasonably good closing. Of course, 51,500 would have been a much better choice, but 51,400 is also okay. And if this sustains here, the move again towards 52,500 can happen very quickly.
50% retracement of the fall for Nifty Bank is 51,508, I think, which is what you're referring to, but we're not quite there. On Friday, also, we almost got to it. Anand, a little tired today, right? I mean, obviously, we've been going up every day, and momentum is missing. And that's fine. I mean, you have those kind of days as well. But any thoughts near term?
Well, obviously, as you said, you have 13 days of a one-way rally. You have to assume that the market has to need some breathing time for it to catch up and let investors come in, because everyday rally can't continue. Also, we are now almost 24 times 1 year forward earnings, or maybe if you are looking at 26 as well, FY26 as well, maybe a little less, assuming what you're looking at, what kind of growth you anticipate. But by and large, the growth this year is likely to be in single digits or thereabouts, give or take. With that kind of thing, you are looking at a P to growth of more than 2 times already. Market is not cheap, even in the front line, while people have been arguing that mid cap and small cap are expensive, large cap is not. But 2 times growth, similar ROE to many of the other regional players. You look at any of the other countries in the region, emerging markets in general are trading at 12 times, 13 times 1 year forward earnings. We are trading at 22 times. Somewhere it has to start to reflect in the price momentum.
Let's get to the big corporate story of the day. Gujarat Gas and GSPL were in focus, and both stocks saw a handsome gain following a restructuring scheme which proposes the merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. The company's gas transmission business will then be carved out and listed later as GSPL Transmission. Nimesh is standing by with more details. Nimesh.
Hi, Rimana. So rightly pointed out, big moves on both Gujarat Gas as well as in GSPL as well. Now, as you explained, right, the whole exercise has been done to simplify the holding structure as well as value unlock in GSPL. Now, the scheme is very clearly mentioned. It's going to be in 3 stages. In the first stage, GSPC, which is unlisted, will be merged into Gujarat Gas. The swap ratio is announced. The second step would be GSPL will be merged into Gujarat Gas. And in third step, Gujarat Gas transmission business will be carved out and listed separately, demerged and listed separately, which will be called as GTL. Now, most of the brokerages seems to be quite bullish on Gujarat Gas after the merger announcement. Antique has actually raised the target price to 726. They believe that it's value accretive for Gujarat Gas from day one itself. Equirus also has upgraded Stockton ad for Gujarat Gas. They've raised the target price to 667. They feel it's a well-thought merger, and this will make Gujarat Gas the second largest company in gas trading after GAIL India. So that's the benefit for Gujarat Gas. However, there were some skeptics as well, like Jefferies, who maintain an underperform rating on Gujarat Gas. But largely, I think the merger has gone done well with the investors, with a big reaction of over 10% rally in Gujarat Gas and nearly 4% rally in GSPL.
Okay, thank you very much for that, and congratulations, Nimesh. You were the first one to break this story, and you've been flagging it for more than a week. Anand, after the kind of up move that we've seen in Gujarat Gas, do you still see value in the stock? Even though all the positives that Nimesh highlighted, is there value now, given where the stock is?
Well, you have to look for relative value, and from that perspective, I think you could argue that we've had a strong move in the underlying gas prices, and if that were to ease off, which is quite possible, you would be able to get some kind of an incremental demand coming through, because it will still remain a reasonably decent fuel for people to move to. So with that kind of demand growth that is likely, and the fact that you are going to save money because of this merger, there is potential for some upside. Of course, today some of that at least has been taken care of by the market. But yes, on a relative basis, it still looks a little more attractive than many other sectors and stock.
Shilpa, technically Gujarat Gas and GSPL?
If you look at Gujarat Gas, yes, Gujarat Gas is looking very well placed. A move just above 670 will see the stock moving towards 720 on immediate basis, and from the 760 can happen as well. Whereas GSPL, it has to sustain above 480 to look for other targets of 520 to 540.
Okay, all right. So that's the view coming in, the sort of story which, of course, came through over the last 48 hours or so. Now, Bajaj Finance and Bajaj Finserv were rallying in trade on the back of the IPO of Bajaj Housing Finance. It's set to open on the 9th of this month, 9th of September. Abhishek is here with details about Bajaj Housing itself, the IPO and the company. Abhishek, take it away.
Well, to begin with, it's one of the few HFCs which is still a AAA rated entity. So the IPO opens on 9th of September, closes on 11th of September. The total issue size is about 6,560 crores, of which fresh issue is about 3,560 crore, and offer for sale from promoter, that is Bajaj Finance, will be about 3,000 crore. If you take a look at the credit rating, only Bajaj Housing Finance, LIC Housing Finance and Canfin Homes, these three entities, that is HFCs, are AAA rated in India right now. PNB Housing Finance, Aadhar, as well as Aptus Value, all of them are AA rated entity. If you take a look at the asset quality, that's the key highlight of the entity, given the fact that gross NPA ratio is at just 0.28%, one of the lowest that you are seeing in financial services space. And if you take a look with peer comparison, the other lowest is of Canfin Homes at 0.9%. Even the net NPA ratio of 0.11% is perhaps the lowest that you are seeing in financial services industry as well. And if you take a look at the peer comparison, the lowest is of Canfin Homes at 0.49%. The AUM is about 97,100 crores. So it is the second largest HFC which will be listed on bourses, the largest being LIC Housing Finance with an AUM nearly about 2.9 lakh crore. So if you take a look at the breakup of the AUM, largely forming by home portfolio, which is about 57.5%, LAP forms about 10%, which is loan against property. Lease rental discounting is about 19.5% of the book, and developer finance is about 11.2% of the book, with the rest 1.8% being in others. Back to you.
All right. So the only thing left is, of course, how will they value it, right? Then, of course, we'll be able to compare it with some of the others. But that's a good primer on the business itself. Abhishek, thank you very much for that. Anand, the Bajaj Finance, I mean, 3 years now, it's essentially been, it's not done very much at all. I mean, actually, it's not done anything since September of 2021. Do you think this is the trigger?
I mean, do you need a trigger these days? Stocks go up and then you try and find triggers for why they should go up. So yeah, I mean, because it is not moved, that is good enough reason for it to move up. But jokes aside, I think the reality is that Bajaj Housing is probably one of the better positioned companies. And as your commentary just mentioned, it's perhaps one of the few AAA rated companies, therefore the cost of capital will be reasonable. By and large, housing is not an area where you're fighting for customers. You're only fighting to make sure your margins are protected, provided you don't want to go down too far on the credit curve in terms of the quality of credit. You must have a lower cost of capital. And from that point of view, Bajaj will be able to raise capital fairly cheaply and protect their margin. The rest of the growth the market will take care of. So I think it would be an interesting new addition in the overall financial space.
Their credit cost was 0% in the June quarter, and I think 0.1% in the year gone by. But let's move on to the auto sales because two-wheeler makers like Bajaj Auto and Hero MotoCorp reported very strong numbers. So stocks rallied, but on the other hand, in the four-wheeler pack, you saw passenger vehicle sales do well, but commercial vehicles lagged a bit. Sudarshan joins in with more color. Sudarshan.
In the month of August, two-wheeler companies have reported a strong set of sales, and sales were much ahead of estimates. For four-wheelers, passenger vehicle segment has done better than commercial vehicle segment. Talking first about two-wheelers, TVS Motor, Hero MotoCorp and Bajaj Auto have reported sales which were much better than estimates, and total sales were up in the range of 5 to 16%, with motorcycle segment continues to lead the growth for all the three companies. Starting with TVS Motor, total sales were up 13% year-on-year and 11% month-on-month, and two-wheeler segment, both motorcycle and scooter have seen a growth in double digits. Coming to Hero MotoCorp, Total sales were up 5% year-on-year and 38% month-on-month. For Hero Moto as well, motorcycle segment growth was 6% year-on-year and 41% month-on-month. Even outlook looks positive for Hero Motocorp. Company says it expects strong growth in upcoming festive season. For Bajaj Auto, all the segments have seen a healthy growth, and growth was in the range of 5 to 24%. Two-wheeler segment for Bajaj Auto also continues to lead the growth. It was up 18% year-on-year and 13% month-on-month. For Bajaj Auto, even three-wheeler segment has seen a healthy growth, and it was in double digits in the month of August. Coming to four-wheelers, for Tata Motors, sales have missed estimates, and it was majorly dragged by commercial vehicle segment. So talking specifically about commercial vehicle segments, overall sales were down in the range of 21 to 23%, and except passenger carrier, all the segments have seen a drop. For Maruti Suzuki, sales were almost in line with estimates, and talking positives about Maruti Suzuki utility vehicles, that is the SUV segment, has seen a healthy growth both year-on-year and month-on-month, and sales to other OEM remain above 10,000 units for second straight month. If we can talk negatives about Maruti Suzuki, that is the compact car segment, which remains under pressure. Last is M&M. It has reported sales which were much better than estimates, and here SUV continues to lead the growth. Even tractor sales were almost in line with estimates. So total sales were up 9% year-on-year and 16% month-on-month, and SUV sales were up 16% year-on-year. So for the month of August, passenger segment, both two-wheelers and four-wheelers have done better than commercial vehicle segment.
Well analyzed, Darshan. Thank you for that. And we'll also thank Anand and Shilpa for joining us on the show today. Get into a break. We'll come back and talk about D Street Chatter and the big events to watch out for tomorrow.
Years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers.
Okay, welcome back. You're with us here on Markets Forward. Let's talk about what's the chatter, right? I mean, what are the stocks which Nimesh has got his eyes on? Nimesh, tell us. Good afternoon.
Hi, Prashant. So now, a lackluster day of trade. The volumes were on the lower side. In fact, we're not going to have any cues from the US market as well tonight. So, thin day, so to speak, as far as overall markets are concerned. But in terms of individual names, the first stock is Sudarshan Chemical. That's been buzzing off late on back of very strong buy flows from larger HNIs. I understand the city is anticipating a corporate development. Essentially, a potential overseas acquisition is on the card. So that's something to track in Sudarshan Chemicals. The second stock is ITC. Been buzzing after a long time on back of buying flows from larger FIs. So expect high delivery volumes there. The third stock is Power Grid. On the sell side, though, there is selling pressure in Power Grid for second day running, and looks like some long-only funds seems to be active sellers in Power Grid. And the last is Safari Industries. That stock saw some bit of traction today. Looks like large selling from a domestic fund seems to be largely over, and even the management seems to be quite buoyant as far as growth is concerned. So Safari looks like the large part of the selling is largely over from the domestic fund.
Thank you very much for that. Let's get to the top corporate voices of the day then. First up, Mahindra & Mahindra reported strong sales for the month of August. The management says that inquiries have gone up ahead of the festive season. The company has gained 2% market share in the retail passenger vehicle segment. Added that they're on track for EV launches starting Q1 of next calendar year.
All right, we had also the manager of Dixon, managing director of the company, Atul Lal, told CNBC-TV18 that they are aiming to get into data center business in terms of servers. This is part of their plans for the IT hardware business that they are planning to launch. And talks are underway with some of the global majors in this area. They say that they're targeting revenues of 3,500 crores in FY25 from the IT hardware segment. This is in FY26, and this of course includes everything, the server business and of course laptops as well.
Next up, Aarti Drugs. The company cut its FY25 revenue guidance to 1 to 5%. Margins are anticipated to improve to 13% in Q3 and Q4. The company is sticking to its longer-term guidance of 4 to 4,500 crore of top line by FY27.
Well, Metropolis Healthcare management is also with us. The company is not considering any price hike as of now, and they're aiming to get the market share in Mumbai market to between 20 to 25%.
And let's now get you the key market events to watch out for tomorrow. Ekta's joining in. Ekta.
Well, yes, I'll start with bazaar-style retail IPO, which will be closing for subscription tomorrow. Separately, we have a couple of companies which will be at the Elara Equity Conference, such as M&M, Hero Moto, Adani Ports, Satin Credit Care, amongst others. In terms of AGM, smaller companies such as Alok Industries, DB Corp, JK Paper, dividend ex-date for the likes of Vinati Organics, Goa Carbon, as well as Deepak Fertilizers. On the US front, we have data coming in terms of the Red Book data, S&P Global Manufacturing PMI, ISM Manufacturing PMI, construction spending, vehicle sales. And the Bank of England Deputy Governor will be talking tomorrow, so maybe some comments from there.
Absolutely. Ekta, thank you very much for that. Well, that gets us to a close on this edition of Markets Forward. We, of course, are back with news and updates on the other side. Stay tuned.
Have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com.
Hello and welcome to Business 360. I am Ashmit Kumar and here are the headlines that we're tracking this evening. It's the 13th day of gain on the Lal Street as Sensex and Nifty mark their longest winning streak on record, but the gains are limited as bulls consolidate at record levels. The board of Gujarat Gas approves a scheme that will allow 3 group entities to merge with itself. Company says the restructuring will simplify the holding structure, enhance synergy and unlock value for shareholders. Gujarat Gas and Gujarat State Petronet rally in trade. Two-wheelers accelerate further in August. TVS, Hero Moto and Bajaj Auto report better than estimated sales growth. Passenger vehicle sales outperformed commercial vehicles. The union government has initiated preliminary discussion with the RBI and SEBI for amending rules to allow the creation of a sovereign wealth fund. Sources say a $5 billion fund can create $10 billion worth of investment opportunities every year. That's an exclusive. The Union Cabinet clears 7 schemes to bolster the agriculture sector with an outlay of nearly 14,000 crore rupees. Also clears a proposal from Keynes Semicon to set up a plant in Gujarat with an investment of 3,300 crore rupees. Congress party levels fresh conflict of interest allegations against SEBI chief Madhabi Puri Book, accuses her of drawing a remuneration worth nearly 17 crore rupees from ICICI Bank while she was still employed with the market regulator. This comes after Hindenburg accused SEBI chief of conflict of interest in the Adani probe. Heavy rains batter Telangana and Andhra Pradesh. At least 27 people have been killed. Over 17,000 people have been evacuated as incessant rains lead to widespread flooding. Train services impacted across the 2 states. Schools and colleges remain shut in Hyderabad. Supreme Court decides to intervene against the state government's deploying bulldozers to demolish properties of accused persons. Asks how can a house be demolished even if the person is convicted. Calls for pan-India guidelines to streamline bulldozer demolitions. Schools, offices and Israel's largest airport are shut after a one-day strike by unions. Nationwide anger simmers over the death of 6 hostages and failed ceasefire talks. Israeli army continues to bomb Gaza, killing 11 people who were sheltering at a school. Government summons the content head of Netflix over the web series IC-814 on the hijacking of the Indian Airlines flight to Kandahar by a terrorist group. Center likely to seek an explanation over the representation of terrorist figures in the series. Well, let's begin with a quick look at the day's market action. The gains were limited, but records continued to tumble. Sensex and Nifty ended at a record high for the 5th straight session. This was also the 13th straight session of gains for the indices. This is the longest winning streak on record, but the bulls did consolidate at record levels. As I mentioned, the gains were limited. Midcaps underperformed in trade. Prashant Nair is now joining us with a quick wrap of the day's market action. Prashant.
Well, an absolutely quiet day today with the Nifty, the Sensex, the Nifty Bank really not taking out any of the ranges on the upside or on the downside. So did not violate supports, did not get to sort of resistances as well. Actually, the Nifty did get past the 25,300 level, and that is the first sort of target. But then there was a bit of a sell-off which happened. Market went flat, but there was help from Nifty Bank. So the Nifty Bank saw a rally mid-session, and that led the Nifty back up once again. Broader markets were sideways, lackluster, about a 0.25% cut in the mid-cap index and the small-cap indices. Remember, today is the 13th day when the markets have been up, and that is sort of unprecedented. You've got to go back a long time in history to find that kind of unbroken streak. Now, what was up today? FMCG, if you look at sectors, FMCG was a winner. PSU banks and IT services were winners as well. On the downside, metals did poorly and so did pharmaceuticals. I'll start with gainers on the Nifty first, stocks. But the Bajaj twins, Bajaj Finserv and Bajaj Finance, the housing subsidiary IPO is, of course, what people are watching. HCL Tech was higher. Hero, Bajaj Auto from the automobile pack and SBI Life participated as well. On the downside, cuts coming through in names like Hindalco, Dr. Reddy's and Tata Motors coming through. Broader markets, there were losers in the form of Idea. There was Dixon, which was down. Remember, more down than up today in terms of the breadth of the market. Indus Tower, Granules, Genus Power, Moil, Symphony and Kirloskar Brothers were some of the other names. On the upside, Gujarat Gas, news-based, that three-way merger coming through. Jio Finance was a mover. The Adani Group stocks, Power and Green, both were higher. Bajaj Holdings was another one. Godrej Industries, these jewelers, Tangamail Jewelers and Senco were sharp movers higher, and something like Aegis Logistics was another one which did well. Day on day markets continued to sort of stretch this up move, and ultimately, as we've been saying, it looks like the Nifty perhaps is headed to about 25,500 or so. The question is, will we pause before that? Or will this, the market has legs for this to continue a bit longer. Remember, global markets will be absolutely quiet. So when you come back in the morning, it'll be Asia for company and, of course, the markets trading off of their own steam. Back to you.
All right, Prashant, thanks so much for that. And speaking of the markets, the regulator SEBI has tightened new eligibility norms for stocks in the futures and options segment. The new rules will triple the minimum median quarter sigma, order size and market-wide position limit. Brokerage firm Nuvama has said that the updated criteria could lead to the exclusion of as many as 18 stocks. Stocks like ABOT India, Granules India and Metropolis are likely to be excluded, while Jio Financial and Zomato might be included in the F&O segment. Well, on to the commodities space, where oil prices extended losses owing to expectations of higher production amid sluggish demand. This after reports that OPEC countries and its allies are set to proceed with a planned oil output hike from the month of October. This, along with sluggish demand in China and the US, outweighed a sharp drop in output coming in from Libya. Gold prices dipped as the dollar closed in on a two-week high. Expectations of a rate cut from the US Fed in September also pushed prices lower. And India's manufacturing activity slowed to a three-month low in the month of August, but expanded for the 38th consecutive month since July of 2021. The HSBC Purchasing Managers Index for the month stood at 57.5 versus 58.1 in July. This drop was largely led by softening demand, slow growth in new factory orders and weak exports. A reading below 50 denotes contraction, and that above 50 signifies expansion. And coming in from action in the auto space, the auto sector, the two-wheelers accelerated further in August, reporting a double-digit growth across the segment. TVS, Hero Moto and Bajaj Auto reported better than estimated sales, while passenger vehicle sales outperformed commercial vehicles in the four-wheeler segment. Sudarshan Kumar is joining us now with more details. Sudarshan, take us through the key numbers.
In the month of August, two-wheeler companies have reported a strong set of sales, and sales were much ahead of estimates. For four-wheelers, passenger vehicle segment has done better than commercial vehicle segment. Talking first about two-wheelers, TVS Motor, Hero MotoCorp and Bajaj Auto have reported sales which were much better than estimates, and total sales were up in the range of 5 to 16%, with motorcycle segment continues to lead the growth for all the three companies. Starting with TVS Motor, total sales were up 13% year-on-year and 11% month-on-month, and two-wheeler segment, both motorcycle and scooter have seen a growth in double digits. Coming to Hero MotoCorp, total sales were up 5% year-on-year and 38% month-on-month. For Hero Moto as well, motorcycle segment growth was 6% year-on-year and 41% month-on-month. Even outlook looks positive for Hero MotoCorp. Company says it expects strong growth in upcoming festive season. For Bajaj Auto, all the segments have seen a healthy growth, and growth was in the range of 5 to 24%. Two-wheeler segment for Bajaj Auto also continues to lead the growth. It was up 18% year-on-year and 13% month-on-month. For Bajaj Auto, even three-wheeler segment has seen a healthy growth, and it was in double digits in the month of August. Coming to four-wheelers, for Tata Motors, sales have missed estimates, and it was majorly dragged by commercial vehicle segment. So talking specifically about commercial vehicle segments, overall sales were down in the range of 21 to 23%, and except passenger carrier, all the segments have seen a drop. For Maruti Suzuki, sales were almost in line with estimates, and talking positives about Maruti Suzuki utility vehicles, that is the SUV segment, has seen a healthy growth both year-on-year and month-on-month, and sales to other OEM remain about 10,000 units for second straight month. If we can talk negatives about Maruti Suzuki, that is the compact car segment, which remains remains under pressure. Last is M&M. It has reported sales which were much better than estimates, and here SUV continues to lead the growth. Even tractor sales were almost in line with estimates. So total sales were up 9% year-on-year and 16% month-on-month, and SUV sales were up 16% year-on-year. So for the month of August, passenger segment, both two-wheelers and four-wheelers have done better than commercial vehicle segment.
Right, Sudarshan, thanks a lot for crunching those numbers for us. And speaking of numbers, India's goods and services tax collections grew by 10% year-on-year to 1,75,000 crore rupees in the month of August. However, collections have fallen compared to last month. Meanwhile, lower domestic collections, along with a 38% rise in GST refunds, resulted in a single-digit growth in the net tax collection. And the government has slashed the price of aviation turbine fuel by 4.6% ahead of the festive season. ATF price was cut by 4.58% to 4,495 rupees per kilolitre in Delhi. The price of commercial LPG was increased by 39 rupees to nearly 1,700 rupees per 19 kg cylinder. This is the second consecutive month of an increase after 4 months of reductions. Meanwhile, price of cooking gas and petrol remain unchanged. Now, the union government has initiated preliminary discussions with the RBI as well as the market regulator SEBI for amending rules to allow the creation of a sovereign wealth fund. Dozens of nations, including the likes of China, Japan, Norway and the UK, have federal sovereign wealth funds that invest in assets across the world. The United States does not have a federal fund, but several states in the US have similar funds. Parikshit Luthra is joining us now with more details. Parikshit, interesting proposal this. How far have the talks progressed? What can we expect?
Well, the central government is considering the idea of a sovereign wealth fund for India. CNBC-TV18 has learned from sources that preliminary discussions have been held with the RBI, the SEBI, the GIFT City about the possibility of setting up such a fund. The government recently sought views of over 30 PSUs about the possibility of success of such an initiative. Officials privy to the discussion say that government is considering a fund which can invest abroad via PPP mode, and sources aware of the government's thinking feel that a sovereign wealth fund would boost India's stature and capability to invest in infrastructure projects abroad in countries of importance such as Africa. The government is considering whether a sovereign wealth fund would give India more leverage to support friendly countries than lines of credit and grants in aid. As per initial discussions, a $5 billion fund could create at least $10 billion worth of investment opportunities annually. At the moment, such discussions are at an early stage and a formal view is yet to be taken.
Right, Parikshit, thanks a lot so much for that. Now, Bajaj Housing Finance's proposed 6,560 crore rupee initial public offering will open on the 9th of September. The IPO will comprise a fresh issue of equity shares of up to 3,560 crore rupees and an offer for sale to the tune of 3,000 crore rupees by parent company Bajaj Finance. The price band of the offer will be disclosed soon. Shares of Bajaj Finance and Bajaj Finserv rose in early trade on the back of this development. Now, Gujarat Gas zoomed in trade today on the back of its board green-lighting a restructuring scheme last Friday. The scheme proposed a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. The company's gas transmission business will also be carved out and be listed as GSPL Transmission. Nimesh Shah is joining us now with more details. Nimesh, break down for our viewers the contours of this scheme, what this means and why the stocks were celebrating today.
Over the weekend, Gujarat-based gas companies GSPC, Gujarat Gas as well as GSPL approved the restructuring scheme which proposes to merge the three entities to simplify the holding structure and to unlock value for investors. The entire scheme of arrangement will be done in three steps. One, GSPC will be merged into Gujarat Gas. Second step, GSPL will be merged into Gujarat Gas. And third, GTL will be removed separately and list after the merger of these businesses. Now, as far as GSPC merger into Gujarat Gas is concerned, the ratio is going to be 10 shares of Gujarat Gas for 305 shares of GSPC. The second step would be merger of GSPL into Gujarat Gas, wherein Gujarat Gas, the 10 shares of Gujarat Gas for every 13 shares of GSPL. And the third is going to be GTL, which will be demerged and listed separately. There will be 1 share of GTL for 3 shares of Gujarat Gas. This is the scheme of arrangement. Now, essentially, this has been done to simplify the holding structure. What is the existing structure? Gujarat government owns close to 55.5% in GSPC, which is unlisted. Now, GSPC in turn owns close to 37% in GSPL, and GSPL in turn owns close to 54% in Gujarat Gas. This is the existing structure. It will change after the demerger process. How it will look like? First company will be Gujarat Gas. Now, in Gujarat Gas, there will be city gas distribution business, gas trading, E&P in the renewables business, and the related investments. This will be one entity. The second entity will be GTL. Now, GTL will have the gas transmission business, which will be demerged from GSPL, and the related investments will also be into GTL. So that's the structure, how it will look like. Brokerage seems to be quite bullish on the merger announcement. So Antique has actually raised the target price in Gujarat Gas to 726. They believe that the merger is value accretive from day one itself. Even Equirus today has upgraded Gujarat Gas to an add. They have a target price of 667. They believe that it's a well thought merger and will benefit Gujarat Gas to become the second largest gas trading company in India after GAIL India. However, there are some skeptics as well. So Jefferies actually has an underperformed rating with a target price of 450. They believe that while the integration of GSPC's gas business, trading business, will improve the Gujarat Gas margins profile, however, earnings volatility will rise, implying a lower valuation multiple as far as Gujarat Gas is concerned. So essentially, as I said, the whole entire restructuring has been done to simplify the holding structure as well as value unlock in GSPL.
Right, Himesh, thanks so much for that. Now, the Congress party has leveled fresh allegations against SEBI chairperson Madhabi Puri Buch. Congress spokesperson Pawan Khera accused her of conflict of interest by drawing a remuneration worth nearly 17 crore rupees from ICICI Bank while she was employed with the market regulator SEBI. Khera said that several probes on ICICI Bank were being adjudicated while Madhabi Puri Buch was receiving this income from the group. The Congress is calling this a serious breach of ethics and accountability in public service. Pawan Khera also questioned the integrity of SEBI, stating that the market regulator should maintain impartiality and independence.
सेबी की चेयरपर्सन जब वो मेंबर थी, होल टाइम मेंबर थी, 2017 से 2024 के बीच में रेगुलर इनकम आईसीआईसीआई बैंक से ले रही थी 16 करोड़ 80 लाख। ये सीधे सीधे सेक्शन 54, सेक्शन 54 ऑफ सेबी, जो एम्प्लॉइज सर्विस रेगुलेशन 2001, मैं इसका एनेक्शर आपको दिखाऊंगा, उसका वायलेशन है। सीधे सीधे ऑफिस ऑफ प्रॉफिट का मामला है, सीधा। इसमें अगर किसी में थोड़ी सी भी अगर लिहाज, शर्म, लज्जा कुछ हो, वो इस्तीफा देगा, 1 मिनट नहीं रुकेगा इस एक्सपोजर के बाद।
Well, the SEBI chief addressed an event by industry body CII in Mumbai today. She stopped short of talking about real estate investment trust or REITs, saying that if she utters the word, she will be accused of conflict of interest. Last week, while speaking at the Global FinTech Fest, the SEBI chief had touted small and medium REITs, saying that they received positive feedback from the industry. Last month, US-based short seller Hindenburg had accused the SEBI chief of conflict of interest in approving a REIT backed by Blackstone, where her husband was employed as an advisor. Buch and her husband have denied all these charges made by Hindenburg. Here is SEBI chief speaking this morning.
This is all simple stuff that technology will enable. Of course, there was a mention of REITs, but Ajkal, if I utter the word REITs, I am accused of conflict of interest. So perhaps it would be better for me to abstain. But indeed, these are the emerging asset classes in our country. Globally, they are large, strong. They monetize a lot of the build out of the infrastructure of the country. They have a huge multiplier effect in terms of the growth of the country. So all of this is very much on our agenda, and it will be done in a manner of co-creation, because that's the only sensible way to do it.
Well, with that, it's time now for slipping into a very short break. But coming up, the Union Cabinet clears 7 schemes to bolster the agriculture sector with an outlay of nearly 14,000 crore rupees. Details when we come back.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Very interesting restructuring which was announced over the weekend within Gujarat Gas, Gujarat GSPL as well as GSPC. Now essentially this scheme of arrangement has been largely been proposed for simplifying the structure as well as value unlocking for the shareholders as well. So when I mean simplifying the structure, let's look at the structure first. What is Gujarat Gas currently? I mean what not done approved is merger of GSPC into Gujarat Gas, GSPL into Gujarat Gas as well as demerger of GTL. Now if you look at the existing structure of the holding, Gujarat government holds a majority stake in GSPC which is unlisted and you know then okay now first talk about the share swap ratio. For Gujarat, so basically a merger between GSPC and Gujarat Gas, the ratio is 10 shares of Gujarat Gas for 305 shares of GSPC. For GSPL, which is a listed entity, you'll get 10 shares of Gujarat Gas if you're owning 13 shares of GSPL. And after the merger, there will be a demerger of the trading business which will be called GTL and you'll get 1 share of GTL for 3 shares of Gujarat Gas. So that's the structure. It's a 3-step structure which has been announced. Now, as I said, you know, it's largely been done to dismantle the holding structure. What is the structure currently? Gujarat government owns 55.6% in GSPC, which is unlisted. Now, GSPC in turn owns 37.5% in GSPL, which is a listed entity, and GSPL in turn owns close to 54% in Gujarat Gas. That's the holding structure currently. After the restructuring, there will be two separate companies which will get listed. One will be Gujarat Gas. Now, that will hold the city gas distribution businesses, the gas trading, E&P and the renewable business and the related investments. So, this will be one entity where all the companies will get merged into. The second entity will be GTL. Now, that's the trading business of GSPL, which will be carved out as a separate business and list separately. Now, GTL will have the gas transmission business and the related investments, including the cash as well. So, that's what the restructuring will look like. Two businesses, Gujarat Gas as well as GTL. Now, what our brokerage is saying as far as Gujarat Gas is concerned, couple of interesting reports. Equirus today has actually upgraded the stock to an add and take as a target price of 726. They believe that the merger is value accretive. Even Equirus had put out a note on Gujarat Gas. They actually upgraded the stock to an add with a target price of 667. And they believe it's a well thought merger. And post the merger, Gujarat Gas will become the second most, second big company.
Welcome back. You're watching Business 360 with me, Ashmit Kumar. Now, the Cabinet has approved 7 schemes worth about 14,000 crore rupees for the agriculture sector. Union Minister Ashwini Vaishnav made these announcements after the meeting of the Union Cabinet, chaired by the Prime Minister Narendra Modi. Shivani Bajaj joining us now with more details on the respective schemes and their allocations. Shivani.
Well, Ashmit, absolutely major announcements today from the Cabinet and mostly around agriculture and infrastructure. 7 key initiatives that were announced today with an outlay of around 14,000 crore rupees. So big outlay over there. Agriculture has seen a lot of programs. So let me just go through the key projects that were announced by the Cabinet, approved by the Cabinet today. It has a 2,817 crore digital agri mission, a 3,979 crore plan for food and nutritional safety, and rupees 71,000 crore initiative for livestock health and production. Beyond agriculture, there were also programs approved about key infrastructure projects across the country. This includes a 309-kilometer railway line between Mumbai and Indore, which are the 2 major commercial hubs in the country. This will be the shortest railway line between these 2 commercial hubs. Now, the project will cost around 18,000 crore rupees and it's likely to be completed by 2028-2029. Additionally, under the India Semiconductor Mission, the Cabinet has also approved the to set up a new semiconductor unit by Kane Semicon Private Limited in Sanand in Gujarat with a total investment of around 3,300 crore rupees. So these were the big initiatives, the big programs being approved by the cabinet today. Back to you.
Right, Shivani, thanks so much for that. Now, Andhra Pradesh and Telangana are grappling with heavy rains and floods for the second consecutive day. At least 27 people across both the states have been killed in rain-related incidents. 26 National Disaster Response Force teams have been deployed for flood relief and rescue operations in the states. The Telangana government has stepped up relief measures after at least 15 people were killed. Affected people have been moved to relief camps in the state. Vijayawada has been the worst affected district in Andhra Pradesh after a rivulet on the outskirts overflowed at several points yesterday. Some courtroom action now. Supreme Court has decided to intervene against state governments deploying bulldozers to demolish properties of accused persons. The Apex Court has asked, how can a house be demolished even if the person is convicted? The court has also called for a pan-India set of guidelines to streamline bulldozer demolitions. Also, the Supreme Court has formed a high-level committee to resolve the grievances of protesting farmers at the Shambhu border. The Apex Court has said that the committee will convene its first meeting this week and has been asked to identify the key issues that need to be addressed. The government has summoned the content head of Netflix over the web series IC-814, which is based on the hijacking of an Indian Airlines flight by the terrorist group in 1999. The centre is likely to seek an explanation over the representation of terrorist figures in the series. The series has been adapted from the book Flight into Fear, the Captain story, which has been authored by Captain Devi Sharan, the pilot of the flight. And with that, it's a wrap on this edition of Business 360. More news and updates will continue right here on CNBC-TV18.
Cash trading space. So that's broadly what the analysts are saying. In fact, Jefferies was slightly negative on the stock, but post the merger, they believe that the fair value could be close to 513. But they still believe that earnings could be volatile and there could be some impact on the gas margins post this merger. So mixed view from analyst point of view, but the stocks are reacting pretty hard. I guess the two big takeaways: one, it just simplifies the holding structure between the Gujarat Gas and GSPC and GSPL, and two, a bit of value unlocking for the GSPL shareholders.
Welcome to Indianomics on the all-important first quarter GDP numbers. The first quarter GDP at 6.7 has been mistakenly described as the lowest in 5 quarters. If one looked at the gross value added or GVA number at 6.8, it is actually stronger than the previous quarter's 6.3%, that is Jan-Feb-March quarter. And yet, whether it is GVA or GDP, it is not touching the aspirational 7% mark or the Reserve Bank's forecast of 7.1%. To understand the Q1 growth numbers and the likely trend for the full year, I have with me an elite panel of economists. Joining me are Samiran Chakraborty of Citi, Sonal Verma, the Managing Director, Chief Economist at Nomura Financial Advisory, Abhishek Upadhyay, Senior Economist at ICICI Securities Primary Dealership, and Madhavi Arora, Lead Economist at MK Global. Ladies and gentlemen, thank you very much indeed for your time. Samiran, let me start with you. Should we call this a good number? Whether it's 6.7 or 6.8, it's falling short of the aspirational 7%.
Good morning, Lata. I think the way we have looked at this number is that it's the internals of the numbers are slightly better than what we had probably anticipated. There were two distortionary effects in this quarter, one from the elections, the other from the heat waves. The election impact primarily would have been felt on the government consumption expenditure and the heat wave impact on agriculture. Now, if you look at these two components only, the government consumption expenditure grew at minus 0.2%, so contributed basically 0 basis points to GDP growth. And agriculture contributed about 30 basis points to GDP growth. Now, for both of them, the historical average contribution is about 30 basis points and 60 basis points respectively. So if you think of some sort of a normalization of these two factors over the next couple of quarters, then that gap between the 7% aspirational number that you were talking of and the reported number, that gap could easily be bridged.
Okay.
So our sense is that we should be going back to the 7% print very soon once these two effects normalize.
Okay, I'll come to you on when you see that normalizing. But Sonal Verma, we have your report, and you are actually forecasting a lower GDP. You've brought down your forecast.
That's right, Lata. We've cut FY25 from 6.9 to 6.7. I'd agree with what Samiran has said in terms of internals being better than the headline, and that some of the effects, particularly government spending, is going to normalize in the coming quarters. But I think that needs to be seen in the context of what's happening more broadly. And there are 2-3 things to keep in mind here. One is, in our view, the urban consumer side is actually slowing. In fact, I'd point out most of the high-frequency data we've got for July and now for August have been weak. Passenger vehicle sales negative. We are seeing inventory build up. Medium and heavy commercial vehicle sales contraction again in the month of August. Cement demand weak. So we are seeing signs of softness in high-frequency data. We think one, credit growth is going to moderate, and some of the excess consumer demand on the urban side is going to moderate. Second, the big boost to GDP from corporate profitability because of lower input costs, that's clearly behind us. And therefore, GDP growth is likely to be lower and probably closer to GVA growth going forward. And third, I think global demand actually is soft, whether it's China, Europe, or even US on the labor market side. Things are slowing at the margin, and that we think is also going to be a headwind. So while the government consumption, government spending, and agriculture-related activity will rebound, it's going to happen in this backdrop. And therefore, we think it's quite likely that GDP growth and GVA growth remain in the 6.5% to 7% range in the next 3 quarters. So we see it extremely unlikely that GDP is going to be at 7 or higher in FY25.
Okay. Abhishek, on that note, let me come to you. I was pretty elated by the private final consumption number coming in at 7.5% almost. It was just 4% if you take the average of the last 4 quarters. Shouldn't one be therefore banking on better rural recovery leading to a better multiplier effect?
Rata, we think, the 4% private consumption growth in second half last year as well as for full year was understated. Typically, there are measurement issues when you come to estimating the GDP internals. And if you look at the contribution of discrepancies, which was as high as 52% to overall GDP growth last year, that makes it very difficult to really interpret these private consumption growth numbers with any sense of confidence. So we think true consumption growth would have been higher, and you would get that sense if you look at two-wheeler sales, which are up 14% last year, passenger vehicle sales up 22% last year. So with indicators of discretionary consumption doing reasonably well, 4% growth looked somewhat basically an anomaly.
Okay.
So while growth has picked up there, we think this acceleration is also exaggerated.
Okay.
That said, we do see signs that consumption recovery is broadening out. If you look at the social services growth component on the GVA side, you don't get that breakup separately. But if you overlap the government consumption expenditure on the GDP side and view the public administration, defense, other services on the GVA side, you see signs clearly that overall consumption recovery is broadening out. Yes, high frequency data this quarter, last quarter was mixed. Urban consumption seems to have slowed down a bit. But overall, theme-wise, with inflation slowing down, with rainfall also recovering from July onwards, we see reasons for cautious optimism on the consumption front.
Okay, that's what I would think, because the PMI data actually has been reasonably strong. I mean, you can squabble about it month on month being here and there. And what about the August two-wheeler? It's really strong, the TVS and other numbers that we have got. It is only CV and which is not showing growth. So can you weigh in on that, Madhvi? Would you agree that consumption actually has recovered and maybe a stimulus for the coming quarters?
Hi, Lata. Perhaps the most encouraging news from the GDP data was how private consumption actually has jumped up. In fact, it converged with the GFCF. And last year, it almost averaged close to around 4%. And the sprint was pretty encouraging when you saw 7.4% in the first quarter. While this is very encouraging, one needs to see this trend sort of sustained, because one thing is there that the quarterly expenditure data is extremely volatile. And as I know other panelists were also mentioning, even as the rural consumption is firming, when you're looking at these two-wheeler sales and FMCG sales, which are now moved by the rural sector, there are clear signs that the urban consumption is slowing. So I think that would be the next lever to watch out for, because while there's a convergence that we're seeing between consumption and even capital formation, we'll have to see whether that continues. For that matter, we'll have to actually reckon the fact that much of the GFCF has been essentially moved by the government capex and real estate. For the corporate capex to fire, especially in the world which is flooded by excess capacity of Chinese economy and low demand visibility, it has to be really seen whether we see continuation in GFCF which goes beyond the government sector. And for that, I think private consumption and exports will have to fare comfortably well for the coming quarters for the GFCF in the private sector to actually fire off.
Okay, got that. GFCF, by the way, economists say that they mean capital formation. Actually, Samiran, can you weigh in on that? You pointed out that government government expenditure contracted by 0.2% in the quarter under review. But, public administration, that number was high, 9.5% it grew. And as Madhvi points out, capital formation is 7.5%. Even though government spend, we know from the fiscal data, it was 35% lower for April, May, June. So are you encouraged that private capex has picked up?
Absolutely. I mean, the 0.2 number, by the way, is government consumption expenditure, so that does not take care of the capex part. But the capex was down even more, as you pointed out, in the monthly fiscal data that we get. So despite that, if we are seeing this much of investment growth, then either it could be the private corporate side, or it could be the real estate side, the household capex. Now, our hunch is looking at the construction sector data that there is a significant increase in the real estate side as well, because otherwise you wouldn't have seen a construction growth of 10.5%, despite some of the internals of the construction sector, some of the proxy indicators not being that good, like cement demand has been weak for the quarter. Despite that, we have seen a very high construction growth. And I will connect that with the household capex. But still, I would say that private capex was holding up. Otherwise, we wouldn't have got a 7.5 kind of overall investment growth.
Okay. God, that seemed encouraging to me as well. Sonal, would you be at least convinced that consumption is at least on a recovery mode, as is private capex?
Lata, I think, yes, consumption should, on aggregate do better. And lower inflation itself is actually a big positive on the rural side. So I think what we're basically seeing is a rebalancing under the surface. And particularly this rural recovery theme does have more legs, for various reasons, including lower inflation and better production, for farmers. Urban side, though, I think is likely to soften. It is more discretionary, more sensitive to credit availability, and that aspect we think will soften. But on aggregate, I think inflation coming down itself is a positive for consumption. Private capex side, Lata, I think we need to split it into government, private corporate, and the real estate side. So the government side is where we should see a pickup and a catch-up post-elections, and we did see that in the July capex data from the central government, which was up over 100% on a year-over-year basis. So that component should pick up. The housing side as well, there are still a lot of tailwinds, and we do think housing-related investment will pick up. The private corporate side, though, is where, we would describe it as still quite mixed. I think, yes, capacity utilization is picking up. But if you break that down by different sectors, it's fairly concentrated in a few sectors. And the global backdrop to us does not look conducive for a broad basing of private corporate capex recovery. So a lot of changes beneath the surface, Lata, both in terms of consumption as well as on the investment side.
Okay, a point taken, Sonal, but I have to take a mandatory break. There are some very important questions left. Will we make it to the 7% mark? What factors can help us, private capex and consumption? And how will the Reserve Bank interpret this number in terms of rate action? All those questions to my guests after a very short break. Stay with us. Welcome back on Indianomics. We have been parsing the first quarter GDP numbers, and the key question that I have in my head is, from the 6.8% GVA, can we make it to the magical 7% mark? I've been speaking with Abhishek Upadhyay of ISEC, Madhvi Arora of MK, Sonal Verma of Nomura, and Samiran Chakraborty of Citi. Well, let me ask you that, Abhishek. What are the chances that we will be able to, because of the improved consumption and the clear fact that the government will spend more on capex, what was lost in the April, May, June months will be, overdone, made up for. What are the chances we get to 7?
So, we have retained 6.8% forecast for GVA, but I do agree that looking at the internals, with capex growth staying resilient despite a near collapse in government capex, and for context, government capex is roughly about 25% of overall capex, and we saw a sharp contraction there. With resilient capex, with consumption demand, there is scope for it to pick up. Also on the global side, what we are seeing is the worst case scenarios are not playing out. So you have increased talk of soft landing in US. Also commodity prices, which had risen earlier in the year, are now at levels which are below the current calendar year starting levels. So the headwind from adverse terms of trade shock also seems less severe than what we were thinking earlier. So given all these drivers, there should be some case for optimism, and more likely that we are going to revise our number higher rather than lower. So GVA growth likely stays here slightly higher, and GDP growth, which we are currently penciling at 6.5%, could be closer to GVA growth as well. So these internal support case for upgrade rather than downgrade in our view.
Okay, so 6.8% and the chance of an upgrade. Madhvi, what would you say? Are you finding the private capex and the likely government capex positive enough to engender 7%?
So, Lata, we are maintaining our forecast 6.5%, which is what it was, I think, 6 months ago. Also, I was of the view that we will be seeing a slower manufacturing story in FY25, and that is what I maintain. And for that matter, consumption also looks to be a very patchy story as of now. Of course, rural is picking up. You are looking at signs of rural pickup, which is as reflected in in two-wheeler sales, and lower Manrega demand as well. But at the same time, even as the rural consumption lifting, you are seeing that the urban consumption appears to be slowing. If you look at the data for four-wheeler sales or even hotel occupancy rates or even consumer-related lending in general, you are looking at a much slower urban story, or maybe a K-shaped urban story for all you know, wherein the mid segment of urban actually would see a much sharper slowdown. So I think it's still too early to assume that we will be seeing a 7% growth. As of now, I'm still sticking at 6.5%. Of course, there are some tailwinds which are basically emerging in the form of strong monsoons and a recently a decent pickup in the rural consumption. But at the same time, you would have headwinds in the form of urban consumption, in the form of manufacturing growth, which will be slowing on account of the higher input costs.
Yeah.
At the same time, the deflator-led push that you got last year would also sort of fade. So I think to a large extent, I'm still more biased towards 6.5% than towards 7%.
Got that. But no, I take your point about the K-shaped. I mean, after all, look at trade, hotels and transport. It has just not got back the mojo that it had pre-COVID at 5.7%. And it's a fairly employment-heavy, informal-heavy sector. That's a worry. And so is agriculture. But, Samiran, agriculture could be the positive, isn't it? We have a La Nina year. The rains, August rains have been excellent. There is a very good chance that the Rabi will be very good. So, what are the chances that the only thing that is keeping the Reserve Bank from cutting is food inflation, which could be, the peak is completely over. And we saw, I think the nowcast is showing cereal and pulses prices, even veggies, other than potatoes and onions, crashing. A rate cut possibility and your growth improvement chances.
So clearly, agriculture, all the indicators from the monsoon has been quite good. It's not just the quantity of rainfall, but also the quality of rainfall. the temporal and spatial has been good. Also, the sowing pattern has been exactly in line with estimates. So, barring any random shocks from unseasonal rains or heat waves, this should be, the rest of the quarters should contribute very positively agricultural growth towards GDP growth, which is why I was mentioning that we could get, compared to the first quarter, another 30 basis points extra on GDP growth coming from agriculture itself. Now, whether this contributes to cooling down of inflation beyond what we have already budgeted, that remains to be seen.
No, but the second quarter is, let me interrupt. Second quarter is definitely not 4.4. The Reserve Bank's forecast seems to be clearly higher, especially when you see the nowcast numbers for food. So you don't think that there is a chance of an undershoot of 4.5, no?
So the point is that the central bank has been very clearly articulating that they want a 4% headline CPI on a durable basis. Now, yes, it could be that this quarter would be slightly lower than the RBI estimates. But if the base effect will catch up on the other side, in the next quarter, we're going to see numbers which are probably in the 4.5 to 5 range. So would that be comfortable for the central bank to cut rates? At this moment, the communication seems to suggest that that's not the case, which is why we haven't brought forward our rate cut expectation. What could change things is that if for some reason growth numbers disappoint, maybe because of the global shocks, then the balance of risks could change. Right now, the balance of risks is entirely towards inflation. That could be more normalized and could bring forward rate cut expectations.
Okay. Well, yeah, there is, of course, the global risk. There is the November election. So we really do not know whether these imponderables will come. But Sonal, you're the only person I know from the many reports I've read who has lowered, and I think Goldman has also lowered earlier, their growth forecast. What will be the falsification thesis? I mean, what can falsify or make you give an upper thrust to the GDP?
Yeah, Lata, I mean, I think some of the, high frequency numbers that are moderating, if they don't moderate, and you see alongside that, some of the transitory factors that will go down in terms of